So let's start today's session, the basic concepts of direct taxation and the tax rate. So we'll be dealing with two things in this particular session. Number one, basic concepts. Number two, tax rates. So what is the score which we can expect from this particular chapter in both CMA Intermediate and CMA Final? What can be the probable marks which we can expect from this particular chapter? Guys, this particular chapter will hold almost 5 to 10 marks in your CMA Intermediate as well as CMA Final syllabus. So for CMA Final, what kind of question can we expect from this particular chapter? Guys, there's a topic which we are going to deal today, tax evasion, tax planning, tax avoidance, right? From that particular topic, CMA Final Group 3, a question can be asked. It has been asked in past and can be asked in future as well. MCQs definitely from this particular chapter can be prepared because this chapter would not have lengthy solutions or lengthy questions. So MCQs is one thing which you can definitely expect from this particular chapter. So first thing that we are going to start is, what do you mean by tax? What do you mean by tax? So guys, tax means compulsory or enforced contribution to Government of India. Whenever we contribute something to Government of India, that is known as tax. But sir, why should we contribute to Government of India? Guys, because primary source of revenue of Government of India is nothing but tax. So because of this primary source being tax, therefore we need to mandatorily contribute something to Government of India. So primary source of revenue of Government of India is met by taxes that we pay. To incur public welfare expenditure, yes, there is a need. Government of India has a need. Government of India has to incur public expenditure. So for meeting those public expenditure, taxation forms the basics. Taxation forms the core. So tax is definitely required to incur public welfare expenditure, and public welfare expenditure like healthcare, education, social security, all these are known as the public welfare expenditure. And guys, these public welfare expenditure are recovered or are earned by Government of India through taxes. So tax is an essential element of revenue. The primary source of revenue income of Government of India is taxes. Now guys, please do remember that the word primary is written. The word primary is written. Primary means the main source, the one and only main source. Okay, there might be certain secondary sources of Government of India, but we are not talking about those secondary sources. We are talking about this main source. This main source is the primary source. So primary source of revenue of Government of India is nothing but taxes. Now, taxes are levied in two ways. There are two ways in which taxes are levied. One, direct taxes, which means direct taxes like income tax, wealth tax, or tax on business profits. These are direct taxes. Second are indirect taxes. Indirect taxes like GST, goods and services tax, custom duty. All these are examples of indirect taxes. So there are two ways in which direct taxes and indirect taxes, two ways in which taxes are collected. First is the direct tax. Second is the indirect tax. So these are the two components of taxes in the country through which revenue is earned from Government of India. Now, sir, what is the difference between these two? What do you mean by direct tax and what do you mean by indirect tax? So what is the difference between these two sources of income, direct tax and indirect tax? So guys, now let us study what is the difference between direct tax and indirect tax. That is one of the most important things that we need to study now. Okay, so guys, you can see these houses which are created, right? These houses are nothing but this is the government treasury. This is the Government of India. Government of India or government treasury. They have to receive money. They have to receive taxes from the taxpayers. Government of India has to receive tax from the taxpayers. Now, there are two ways in which Government of India can receive taxes from the taxpayers. What are those two ways? Number one, directly they can have taxes from the taxpayers, or they can have an intermediary to remit taxes. So, you know, first taxpayer will pay tax to the intermediary, and then intermediary will deposit the tax to the Government of India. There are two ways in which taxes are collected from the taxpayer. First way is directly from the taxpayer. Second way is that the taxpayer will pay the taxes to someone else, and someone else will pay to Government of India. So this is primarily the difference between direct taxes and indirect taxes. Direct taxes will entail the taxpayer paying taxes directly to Government of India. This will entail taxpayer paying taxes to Government of India in an indirect manner, which means there'll be an intermediary in between. Sir, Who will be the intermediary? Who will be that one person who will be there between the taxpayer and government of India, who will collect taxes from the taxpayer and pay to government of India? Who will be that intermediary? Guys, the intermediary will be the shopkeeper who are selling goods to you. The shopkeeper who are selling goods to you. So whenever you go buy something, buy some grocery, buy some food item, buy some thing from market, then guys, the shopkeeper will charge something extra from you over and above the price of the good. So why would he charge something extra from us? He will charge something extra from us because that will be your share of taxes which you pay to the shopkeeper. Shopkeeper will pay to government of India, and that is how indirect taxes work. So guys, whenever we purchase something from market, from organized sector, okay, not from unorganized sector, from organized sector like a mall, like a shopping arcade, whenever we purchase something, then we mandatorily have to pay GST on that particular purchase. So that GST which we are paying on the purchases is the indirect tax that we are recovering from taxpayer and paying to government of India. That is the example of intermediary who will be recovering taxes from the taxpayer and paying it to government authority. So guys, simple as it is, the burden of taxes is on the taxpayer, but the responsibility of payment of taxes is on the intermediary. Let me repeat. The burden of taxes is on the taxpayer, but the liability of paying the taxes is on the intermediary in case of indirect taxation. However, in case of direct taxation, the burden is also on the taxpayer, and the responsibility to pay is also on the taxpayer. Taxpayer shares dual responsibility. One, burden is also on the taxpayer. Secondly, the responsibility to pay is also on the taxpayer in case of direct taxes. Guys, example of direct taxes are income taxes, wealth tax, any kind of direct tax that you are paying to government of India, that is known as direct tax. So when that taxes are recovered directly from you, they are known as direct taxes. When they are recovered not directly from you, you pay to certain intermediary, and that intermediary is paying to government of India. That is known as indirect tax. The example is GST. Now, certain distinguishing features of both of these taxes are listed on the board for you. Let's read those features. So what is the difference between direct and indirect tax? Direct tax incidence and impact, both of them are on the taxpayers. Both incidence means the liability to pay is on the taxpayer, and the impact of taxes, impact means the burden of paying those taxes, is also on the taxpayer. So both incidence and impact is on the taxpayer. However, in case of indirect taxes, incidence is on the intermediary, the responsibility to pay is on the intermediary, and the impact is on the taxpayer. So in case of indirect taxes, the responsibility to pay is not of the taxpayer, it is of the intermediary. Intermediary should collect in a forceful manner, should collect indirect taxes from the taxpayer, and it is intermediary's responsibility to pay to government of India. But the burden of indirect taxes is on which person? The burden is on the taxpayer. So impact is on the taxpayer, but the incidence is on the intermediary. Incidence means the liability to pay is on the intermediary. That is the difference between direct taxation and indirect taxation. Number two, direct tax is levied on income. Direct tax is levied mostly on income of the assessee, right? Like income tax. So direct tax is levied on income of the assessee, like income tax. So guys, if you face any problem, if you are willing to ask me any question, I'm constantly looking at the chat box. You can write your questions in the chat box and I will be able to answer them. So don't hesitate in flooding my chat box. Just flood my chat box with your questions and I'll be able to answer your questions. So now indirect tax is levied on goods and services. So what is indirect taxes levied on? It is levied on goods and services you are selling. Indirect taxes are levied on those two things, goods and services, like GST, like custom duty, etc. On goods and services, the indirect tax is levied. Third and very important guys, direct tax is progressive. I'll explain this particular word, okay? I'll explain this particular word. The direct tax is progressive in nature. Direct tax is progressive in nature. Indirect tax is regressive in nature. Direct tax is progressive in nature. Indirect tax is regressive in nature, which means what? Which means in case of direct taxes, lower the income, lower will be your tax, and higher the income, higher will be your tax. So it is progressive in nature. Progress means it keeps on progressing as your income level is increased by way of time. You know, soon as the time lapses, your income increases, your taxes also increases accordingly. However, in case of indirect taxes, guys, indirect taxes, since they are levied on goods, so an indirect tax which is paid on toothpaste by a super rich person will also be 18%, and which is paid on toothpaste by a poor person will also be 18%. So indirect taxes are not paid according to the income levels of a particular person. Indirect taxes are not paid according to the income level of a person, ability to pay of a person. The indirect taxes are not levied on that. Indirect taxes are always levied on the basis of the goods and services which are purchased, and there is no distinction that, you know, from rich we will gain higher GST and from poor we will gain lower GST. There's no distinction as such like this. However, in case of income taxes, in case of direct taxes, there is a distinction. We will charge higher tax from the people who are rich, and we will charge lower tax from the people who are not so rich. This is the progressive nature of direct taxes. And regressive nature of indirect taxes is that we will not discriminate between poor and rich. We will recover the tax equally from all, whether he's a poor person or whether he's a rich person. So yes, this is one of the most important distinguishing factors of direct tax and indirect tax. Progressive, direct tax is progressive, and indirect tax is regressive. Regressive means it will not increase by the income of a particular person. So that is known as regression. Okay, sir, got it. All right, so guys, answer a question on the chat box. Your fingers should be on the chat box. Just key your answers in the chat box. I'll be asking you a question. Question is, if I ask you, I am CACS CMA Nikkhil Gupta, and I am a teacher of direct taxation for all of you for intermediate. For final, I'm a teacher of direct taxation. For final, I also teach cost audit BVM SPM for CMA final students. I request all of you to pay taxes on the income which you earn or which you earn in future, your future income, to me. I order you that in future, whatever income you will earn, when you will become a CMA, when you will get a job worth 6 lakhs or 8 lakhs or 10 lakh rupees, whenever you get that job, pay your taxes to me. Will you pay taxes to me or not? Answer in the chat box, yes or no. Will you pay the taxes to me? I want to recover taxes from your salary, from your income, the income which you will have. I want to recover salary from your income. Will you pay the taxes to me? Yes or no in the chat box. Oh my God. Oh my God. Everyone is so harsh on me. You are so harsh, people. You are very rude people, huh? Dhruv Jain is also live. Dhruv Jain Shatterer, you are so harsh. Payal is also live. Pooja, Yash, Vidhi Podar is also saying no. Vidhi Podar, I didn't expect this from you, right? Vidhi Podar, I thought you were a very decent person and you respected me a lot. Junaid says no. Junaid also says no. Tanupriya says बिल्कुल नहीं. देखो कितना गुस्सा निकाल रही है ना तनुप्रिया मेरे ऊपर कितना ज्यादा. KR Mishra says never. Sauradas says no. Ankur Tiwari says no. Payal says pay to government. Abhishek Kumar says no. यार जिमी तुम तो मेरे दोस्त थे, मैं तो तुम्हें अपना दोस्त मानता था. आज तुमने दोस्ती का ये सिला दिया ना, अच्छा सिला दिया. ठीक है. ओ ध्रुव जैन कह रहे हैं सर आप मेरे भी टैक्सेस पे कर दो. अच्छा ध्रुव जैन, मैं अभी बताता हूं तुम्हें, तुम मिलो मेरे से नेक्स्ट टाइम. Okay, everyone is saying no. Absolutely, guys. The answer is no. You cannot pay your taxes to me. In fact, I cannot ask you to pay the taxes to me. I cannot ask you to pay taxes to me. That is illegal on my part. If I ask you to pay your taxes to me, it is illegal. You cannot pay your taxes to me. So sir, who gives authority to recover taxes? Constitution of India gives authority to recover taxes. Sir, can Constitution of India give authority to you to pay taxes? Guys, maybe, I don't know, maybe it can give, but currently it has not given me the power to recover taxes from you. So sir, Constitution has given the power to whom? Guys, Article 265, authority to collect taxes, says that Article 246, there are certain lists which mentions what kind of taxes are to be recovered by which person. So the authority to collect taxes is given in Article 265, and 246 tells you that which person should collect taxes on what kind of income. And Article 246 says that there are three kind of lists which are there. So first of all, guys, this is very, very important. Please underline it. Article 265. Article 265 of the Constitution gives authority to collect taxes. Only if a person gets authority to collect taxes under this article, only then that person is eligible to collect taxes from anyone. So Article 265 gives you authority to collect taxes. First of all, please underline this article, very, very important article, which is relevant for you. It gives authority to you to collect taxes. Authority to anyone who wants to collect tax, authority is to be derived from this particular article. Now we move on to Article 246. Guys, 246 article, after getting authority from 265 article, Article 246 tells you that what kind of taxes can be recovered by which person. There are three lists which are there: union list, state list, concurrent list. Union list means the things which are taxable, or the taxes which can be levied by the Union Government of India, which is the central government. And yes, income tax is there in the union list. Only central government is allowed to recover taxes from people of India under Article 246. Only central government can ask you to pay taxes. Sir, can Delhi government ask you to pay income taxes? Answer is no. Delhi government cannot levy taxes from you. So, sir, can Mumbai government levy taxes, income taxes on us? No, Mumbai government cannot levy income taxes on you. It's only and only central government which can levy taxes. And of course, it levies taxes based on legislature. They have an act, they have a law which will ask you to pay taxes on the basis of legislature. They will ask to pay you taxes. So union list means those items which are governing payment of taxes which are levied by the central government. That is the union list. Second is the state list. State list means the state government is authorized to charge taxes on these particular things. That is known as state list. So state list contains items on which taxes can be levied, or the kind of taxes which can be levied by the state government. Guys, income tax can be levied only and only by Union Government of India. It's only there in the union list. Third is the concurrent list. Concurrent list means a list in which items on which, or the kind of taxes which both of them have authority to levy taxes. Union government also has authority to levy taxes. State government also has authority to levy taxes. But sir, won't it lead to double taxation? क्या हमें एक चीज पे दो बार टैक्स देना पड़ेगा? इंसाफ मांगता है देश, इंसाफ मांगता है, इंसाफ दो, इंसाफ इंसाफ क्या हमें एक चीज पे दो बार टैक्स देना पड़ेगा? नहीं भाई नहीं. You don't have to pay taxes twice on one thing. The concurrent list will have given the rights to both the parties, union as well as state government. But guys, both of them will not levy taxes on the union list, which is a concurrent list, which is given. Both of them will not levy taxes on the union list. Either of them will levy taxes on union list based on their mutual consent. If there is no mutual consent and if there is a dispute between union and state government with respect to certain item which is mentioned in the concurrent list, if there's any dispute, then that dispute will be won by the union government. Union government will union law will prevail over the state law to levy taxes on that particular item. So in case there is any dispute, union list will prevail. In case of any dispute, union law will prevail. State law will not prevail at that point in time. So central government has got the last laugh. The last laugh is of central government. That is the rule which is there. Okay, sir. Now, let us move on to sources of income tax law. In a nutshell, I am now moving on to telling you what kind of laws would you study in the Income Tax Act in this particular subject called the direct taxation. What kind of laws would you study in the subject of direct taxation? What all acts, what all rules, what all things you need to study in the subject of direct taxation. That is what we are going to study now. Sources of income tax law. What are the sources of income tax law? From where the income tax law is derived? That is the objective of the next topic which we are dealing with. Number one, Income Tax Act 1961. That is the first and foremost source of your income tax law. Sir, Before 1961. So you are saying that income tax law came in 1961? Yes, it came in 1961. So sir, before 1961, are you saying that income tax was not there? No, guys, I'm not saying that. Because before 1961, 1922 Act was in prevalence. Income Tax Act 1922 was in prevalence. But again, 1922 was the era of Britishers. So maybe that law was more influenced by British laws. Therefore, it was modulated to suit the Indian conditions, to suit the Indian government, and it was redrafted in 1961. And the earlier law was repealed, and the new law was made into force. The new law came into force in 1961. And yes, guys, every year this law undergoes amendments. Every year this law undergoes amendments. So all those students who are of previous batch, who have taken my classes for December 21 or June 21, guys, amendment video is also already there in my YouTube channel. You can watch that amendment video, and you can take into account all the amendments which have been carried on by the budget 2021, and that is applicable on June 22 and December 22 attempt. All those students who have already taken classes for June 22, their classes are absolutely amended, so no amendments are required to be done by them. All right, sir. So yes, first source of law is income tax law, the Act 1961, including the annual amendments which come. Yes, Nirmala Sitharaman is our current finance minister, guys, who presents the budget in the month of February, and she proposed a lot of amendments in the Act, and those are amendments which we are required to study. Second source is income tax rules. Okay, there are rules which are accompanying the Income Tax Act. Those rules are also to be studied to understand the law well. Sir, why rules are required? So why can't we have rules incorporated in the act itself? So what are rules? What is the significance of rules when we already have an act which tells us which income to be taxed, what rate income to be taxed? When we already have that, sir, then why these rules are required, sir? Why these rules are required, sir? What is the relevance of these rules, sir? The relevance of these rules is that the rules will tell you procedural guidelines. The rules will tell you procedural guidelines on how to implement the law. The rules will tell you what procedures to be followed while implementing the law. For example, if you are, say, trying to file a return of income, which form is to be filled? What are the accompanying documents which you need to attach along with that particular form? All those nitty-gritties of procedures, how the administration will happen of taxation, will be governed by the rules. Plus, if Income Tax Act is saying, okay, this particular item should be valued at fair market value, then how will that fair market value be computed? What is the formula of computing fair market value? What is the formula of computing balance sheet value? All these details will be given to you in the Income Tax Rules 1962. So all the procedural matters, how the procedure should be carried on, okay, that will be there in Income Tax Rules. And all the law related matter, like what is to be done, okay, what is to be done is answered by the Income Tax Act. What is answered by the Income Tax Act, and how is answered by the Income Tax Rules. तो क्या करना है ये कौन जवाब देगा? इनकम टैक्स एक्ट जवाब देगा. और जो करना है वो कैसे करना है ये कौन जवाब देगा? इनकम टैक्स रूल्स जवाब देंगे. सो इनकम टैक्स एक्ट जवाब देगा क्या करना है, इनकम टैक्स रूल्स जवाब देगा कैसे करना है. राइट, दैट इज हाउ these two things are governed. And yes, आपका एक सवाल उठ सकता है, सर why don't we incorporate income tax rules in the Income Tax Act itself? अरे भाई, इनकम टैक्स एक्ट जो है ना, रुको मैं तुम्हें दिखाता हूं. इनकम टैक्स एक्ट ऑलरेडी इतना हैवी है कि अगर वो इनकम टैक्स एक्ट में हमने रूल्स भी ऐड कर दिए तो पता नहीं क्या ही होगा. ठीक है, मैं तुम्हें दिखाता हूं इनकम टैक्स एक्ट कितना हैवी है, फिर तुम्हें पता लगेगा कि इनकम टैक्स रूल्स को इनकम टैक्स एक्ट में क्यों नहीं ऐड कर दिया जाता. ठीक है, ये देखो भाई, ये है इनकम टैक्स एक्ट. ठीक है, ये इनकम टैक्स एक्ट का एक वर्जन होता है, जैसे बोलते हैं डायरेक्ट टैक्स मैनुअल. ठीक है, बट इसके अंदर एक्ट ही है, ये पूरा का पूरा एक्ट है. हमारा जो इनकम टैक्स एक्ट है ये पूरा का पूरा एक्ट है. ठीक है, इसकी विर्थ देखना जरा, विर्थ ये देखो. आरडी शर्मा होती थी ना, आरडी शर्मा जो हम पढ़ते थे एग्जाम्स में, ऐसा हमें लगता है कि हम फिजिक्स या साइंस के स्टूडेंट हैं जो इतनी मोटी बुक पढ़ते हैं. देखो इतनी मोटी डायरेक्ट टैक्स एक्ट है. ठीक है, ये एक्ट है आपका इतना मोटा. ठीक है, अब रूल्स देखना, रूल्स कितने हैं, ये रूल्स हैं, ये रूल्स हैं, ठीक है। तुम कह रहे हो दोनों को इनकॉर्पोरेट कर दो, अगर दोनों को मैं इकट्ठा कर दूं तो इतनी मोटी बुक बन जाती है, ये तो मेरे से उठाई नहीं जाएगी। हो सकता है इसका वजन और मेरे वजन में थोड़ा ही बहुत 2-4 ग्राम का फर्क हो, इतनी हैवी बन जाएगी ये, फिर तो इसे उठा के ले जाना ही मुश्किल हो जाएगा। ना भाई ना, नहीं हो सकता। देखो मेरी सांस फूल गई सिर्फ इन उठाने से, अलमीरा से सिर्फ यहां लाने में, तो तुम सोच सकते हो ये कितनी हैवी होंगी। तो इन दोनों को आपस में इनकॉर्पोरेट करना इम्पॉसिबल। दोनों को साथ में नहीं लिख सकते भाई, दोनों को हमने अलग अलग लिखा है। सो बोथ इनकम टैक्स एक्ट एंड इनकम टैक्स रूल्स, बोथ आर separate and both are separately to be studied and both are separate document in itself, and therefore these two are not to be incorporated with each other. They are two different documents, they are two different books, but they cumulatively have to be read to understand the income tax law. So accumulation of both of these will form the income tax law. Okay, बात समझ में आ गई। चलें आगे। हाँ जी सर। Next is circulars and clarifications. So guys, annually Nirmala Sitharaman would ensure that would release the amendments every year. Every year Nirmala Sitharaman will release the amendments. Okay, only once a year can the amendments be released. Okay, once a year, which is in the month of February. Amendments are released. But guys, during the year there are a lot of changes which happen, there are a lot of dynamics which happen, okay, which might change the way things are to be administered, which might change the way in which procedurally the things are to be carried on. So during the year amendments cannot happen. So if any changes are required, then during the year circulars and clarifications are issued by CBDT to effect those changes. So for example, there is a form which is there for filing of return. During the year there is a demonetization which happened, and then that form has to be revised. Guys, we can't wait for next amendments to be carried on, right? We can't wait for 1 year for the next amendments to be carried on, because demonetization was a sudden activity which happened. We need to change our return forms suddenly. What will happen? By way of circular or clarification, CBDT will release the new income tax forms. So certain things which cannot wait until the next amendments happen in law, those things are to be carried on during the year. But the best part about circulars and clarifications are, circulars and clarifications cannot go against the assessee. They cannot make law that law can be prejudicial to interest of the assessee, that can be levying extra taxes on the assessee. That aspect cannot be done with circulars and clarification. That can only be done by way of amendments. And therefore it is said that circulars and clarifications are binding only on income tax authorities. So circulars and clarifications are not binding on the assessee, because assessee is bound by the amendments which happen during the year, annual amendments which happen. Assessee is bound by them. Circulars and clarifications are not bound on the assessee or the taxpayer. They are only bound on the income tax authorities, because income tax authorities cannot do so that they will levy extra taxes by way of circulars or clarifications. No, if the circular is not favorable for the assessee might choose to ignore that circular. But yes, the circulars are binding on the income tax authorities. Income tax authorities have to follow. Income tax authorities have to be followed by the authorities, the tax authorities, like Commissioner of Income Tax, Additional Commissioner of Income Tax, Joint Commissioner of Income Tax. All the income tax authorities have to follow circulars and clarifications. But the assessee or the taxpayer is not bound by circulars of clarification. Assessee might choose to follow these circulars. He might also choose to not follow these circulars. That is the nature of circulars and clarifications. Then CBIC is for indirect taxes. What is CBIC? CBIC is Central Board for Indirect Tax and Customs. This is CBIC, the contrary part or the counterpart of CBDT in indirect taxation. So CBDT is Central Board of Direct Taxes. CBIC is Central Board of Indirect Taxes and Customs. CBIC. CBDT is Central Board for Direct Taxes. That is the difference between these two organizations. These are parallel body, guys, which govern the regulation of revenue in the country. Okay, sir. So circulars and clarifications are the third thing which we need to study in our income tax syllabus to understand what is the income tax law. And the last is judicial precedents. Yes, guys, How many of you have seen Sunny Deol's movie? Please write a yes. Okay. How many of you have seen Sunny Deol movie? Please write a yes in the chat box. How many of you have seen the Sunny Deol movie? I'm going to act Sunny Deol at this point in time. So please write a yes in the chat box if you have seen Sunny Deol movies. And if you have, if you know who is Sunny Deol, okay, I'll ask you, who is father of Sunny Deol? Okay, this is a quick question. Kaun banega crorepati? Who is father of Sunny Deol? I want answer in the chat box. Who is the father of Sunny Deol? Who is the name of father of Sunny Deol? Let me check your Bollywood knowledge along with your taxation knowledge. I want to check both of your knowledges, okay? Oh yes, Dhruv Jain ने पकड़ लिया, जबरदस्त, खतरनाक. Father of Sunny Deol. Jia कह रही है नहीं पता. Jia poor knowledge. Jia poor knowledge. Yes, Dharampaji, Dharmendra, Nirav, Khushi, Garima, Megha, Prashant. Yes, saying Dharmendra. Yes, Dharmendra is a father of Sunny Deol. So guys, in India what happens is litigation is fierce, and you must have seen Sunny Deol movie, I think Damini, where he says, my lord, तारीख पे तारीख, तारीख पे तारीख, तारीख पे तारीख मिलॉर्ड, बस मिलती आई है तो तारीख, नहीं मिला है तो इंसाफ. And guys, all that courtroom drama which you have seen in your Bollywood movies, I always, when I was a kid, I used to wonder that, you know, that courtroom drama, whether it actually happens in the main ground. And when I joined this profession, when I was working with the big fours in their direct taxation department, and when I used to go to the High Court or the Supreme Court for the hearings of my direct taxation case, I always used to wonder whether that courtroom drama of Sunny Deol is there in real life also, whether that is applicable to direct taxes also. The answer which I got is yes, it is applicable for direct taxes also. Yes, the same courtroom drama which is there in a criminal proceeding is there in direct tax proceeding as well. Yes, our heartbeats, run faster than the normal when you are in a courtroom, when your case is being argued, because the amount at stake, the money at stake is not 1 crore, 2 crore, 5 crore. It is thousands and thousands of crores. The world famous Vodafone case, the tax liability and penalty was 21,000 crores. So one argument, one wrong argument can finish off the case and can deprive the assessee of 21,000 crores. That is the fierceness of the direct taxation cases. And touch wood, if any point in time, if you become tax professionals and you get to work into direct taxations, I would definitely recommend you to go into litigation field. It is one of the most exciting, one of the most super amazing fields of direct taxation, which is litigation. And from litigation is derived the judicial precedents. Whatever courts have decided on various matters, because guys, sometimes, income tax law is dicey. It is giving us two meanings of the same thing. Sometimes it is dicey. It gives us two meaning of the same word. Same word can be interpreted into two meanings. Same word can have two different connotations. So to relieve the assessee of the doubt of the misery of having two connotations, courts have decided many cases which are there in judicial precedents. So these judicial precedents also we have to study while we are studying the income tax law. Yes, for intermediate students, judicial precedents are not very important from an exam standpoint, but for final students, judicial interpretation or judicial case laws precedents are important. These case laws are important for final students. Group 3, direct taxation and international tax law, for those students, judicial precedents are important. For intermediate students, they are not that important. Okay, sir, got it. So yes, these were the four cases. These were the four cases where the income tax law is derived, from where the income tax law is studied. These are the four cases. Now we move on to the next topic, and this is by far one of the most important topics of your first chapter, guys. What is the difference between assessment year and previous year? So guys, many of you might be celebrating your birthday, right? You must be celebrating your birthday. So in the chat box, I want to know what is date of birth of each one of you. What is date of birth of each one of you? I want to know in the chat box. Please write your date of birth. Okay, girls will say, sir, we will not write the year of birth. Sir, we won't tell you our age. Okay, girls, you don't write year of birth. That is okay. But for everyone, please write your date of birth in the chat box. I want to know your date of birth. So will you be sending us gifts? No, I will not be sending you gifts, okay? But I will be sending you my wishes. My heartiest wishes will be with all of you, and I will that's it what I'm going to write. Okay, 2nd March, 13th June, 22nd March, 11th September, 17th March. Mayur Shah is writing 13. Mayur Shah, 13th of what now? 3rd November. Khushi is 27th February, 27th July, 17th July. Yash, Kirti, 16th February. Katta Krishna, 17th September. Yashika Jotwani, 18th November. Junaid says 13th June. Okay. Pranav says 2020. Pranav, you are 2 years old. Pranav is saying 2020. So Pranav is born on 2020. So Pranav is 2 years old right now. Okay, Pranav, you are at a very young age. Pranav has started watching YouTube lives. Very, very good. Yeah, Pranav is very, very good child. Pankaj, 2004, 17th March, 11th of September. Okay, guys. Yes, each one of us has a year starting date. Your year starts from your date of birth. Your new year starts from your date of birth. And from that particular date till the next year is counted as 1 year. Now, income tax also has a birthday. The birthday of Income Tax Act, the day on which Income Tax Act celebrates its birthday, is 1st of April. Just like all of you have your date of birth, all of you have your date when you were born, right? Income tax also follows a date of birth, which is from 1st of April to the next 31st of March. So this is the year in which Income Tax Act will, we are said, so especially in the new year, we said that new year is starting. Please have some resolutions for the new year. You should have some resolutions for the new year, or it is always said, right? Because new year is starting, you see your past year and you see what mistakes have you done, and you rectify those in the new year. Guys, similarly, new year, which is celebrated for the Income Tax Act, is on 1st of April of every year. So Income Tax Act will tell you, okay, from 1st of April till 31st of March, you earn as much income as you want to earn. You earn as much income as you want to earn during this period. I will come to you on the next date, immediately next date, and will charge taxes on you. So I will give you an example. Okay, please see the example which I'm going to write on the board. Okay, so I have earned income from 1st of April 22 to 31st of March 2023. So this is the year in which I have earned income. This is the year in which I have earned income. Now, Income Tax Authority is coming to me, suppose in the month of October 22. And Income Tax Act is saying, okay, now it is October 22. You please pay taxes to me. You please pay taxes to me because it is October 22. You please pay taxes to me for the year 22-23. I will tell Income Tax Act, oh, listen, Income Tax Act, still the year is left. Still the year is left. How can I estimate what is my income? And how can I pay taxes to you? I cannot. So you please come on or after 1st April 2023. Dear Income Tax Act, you please come on or after 1st April 2023, and or if you come post 1st April 2023, then I will be able to pay you taxes for the year 22 to 23. Please understand this concept well, guys. If I'm earning income from the period 1st April 22 to 31st March 23, I cannot pay taxes in this particular year itself because I don't know how much is my income. I don't know how much is my tax. So I cannot pay taxes in this particular year for the income which is earned from 1st April 22 to 31st March 23. I mandatorily have to wait. I have to wait till what time? I have to wait till 31st March 2023 to pay my taxes. So effectively, I will pay my taxes on or after 1st April 2023, which means for the previous year 22-23, I will pay my taxes in the year 23-24. So please understand, for previous year 22-23, the assessment year is 23-24, immediately next year. Why, sir? Why immediately next year? Why can't we have previous year and assessment year as the same years? Because, guys, If you are earning income in year 1, you cannot assess your taxes in year 1. You have to mandatorily wait for year 2 to pay your taxes. Therefore, if in year 1 you are earning taxes, you have to pay your taxes in the immediately next year. Next year is known as assessment year. The year in which you earn the income, that is known as previous year. That is the distinguishing factor between previous year and assessment year. That is the distinguishing factor. Okay, sir, got it? So now I'll move on to the definition of previous year and assessment year. What is the definition? We are going to see that now. Okay, guys, you can see this chart, a chart which explains you the difference between previous year and assessment year. Okay, sir. So when the income is earned, that is known as previous year. When the income is earned, that is known as previous year. And what is assessment year? When the income is taxed, that is known as assessment year. Assessment year means the year in which income is taxed. Previous year means the year in which income is earned. So when income is earned, that is known as previous year. When the income is taxed, it is known as assessment year. That is the difference between income earned and income when it is taxed. So obviously, when you earn income in previous year, you cannot pay taxes in the same year because you do not know how much is your income. Till the end date, that is 31st of March, you would not know what is your income. Till 31st March, you will not know what is your income. So the income is earned in previous year and the taxes are assessed. Assessed means to compute. Taxes are assessed in which year? Assessment year. And taxes are paid in which year? Assessment year. So now my question to you, can the previous year be of a lesser tenure than 12 months? Please write in the chat box yes or no. Can previous year be a tenure of less than 12 months? Because we celebrate our birthday on 1st April and the year ends on 31st March. Can the previous year be less than 12 months? Can the previous year be less than 12 months? Pankaj says no, no. Pankaj, why no, no? Himani says yes. Any other answers, guys? Any other answers? Whether previous year can be for less than 12 months? That is my question. Whether the year in which income is earned, that particular year, whether that particular year can be less than 12 months. So Himani says yes, Disha says yes, Kirti says yes, Umang also says yes, Alfia says yes, Gerald says no, Deepika says yes, Pooja says yes, Arpita says no, Yashika says yes, Yash says yes, Rani, Jia, Tanupriya, Deepika, Himani, Divya, Pooja, Disha, Deepika, Mitali, Megha, Ranjit, everyone says a yes. Yes, guys, under two situations, the previous year can be less than 2 months. What are those two situations? When you have a new business, then you can have previous year as less than 12 months. Guys, when your year only starts, when you were born, when your organization is born on 15th of May, then guys, obviously, the first previous year will be of a shorter tenure. The subsequent previous years will be of full tenure 12 months, but the first previous year, the year in which your organization is incorporated, that year will be of a shorter tenure. That year will be of less than 12 months. That year will be of, say, 10 months, 11 months, 9 months, but not of 12 months. So the first year can be a shorter period. The first year can be a shorter period in case of new businesses or if any new source of income is there. So, you had two businesses. Business number 1 is existent since ever. Business number 2 came into effect in the current year itself. So, guys, for business number 1, your year is since the previous year, since 1st April, your year is full year, 12 months. But for business number 2, your year is not full 12 months. For business number 2, your year is a shorter period. Your year is the period when your business starts. Okay. So yes, previous year can be for a period of less than 12 months. Now let me hide the answer so that you don't see the answer. And I ask a question from you. Okay. Please listen to my question and answer. Can assessment year be a period of less than 12 months? Yes or no? बट सरकार बड़ी लालची है, एडवांस टैक्स कर लेती है. हाँ, उमंग, बिल्कुल सही बात. सरकार एडवांस टैक्स तो कैलकुलेट करवाती है हमसे, वो तो लेती है. ठीक है, मेरा अगला क्वेश्चन सुनना. नेक्स्ट क्वेश्चन इज वेदर कैन असेसमेंट ईयर बी ऑफ अ पीरियड ऑफ लेस देन 12 मंथ्स? कैन असेसमेंट ईयर बी अ पीरियड ऑफ लेस देन 12 मंथ्स? दैट इज माय क्वेश्चन टू यू. कैन असेसमेंट ईयर बी अ पीरियड ऑफ लेस देन 12 मंथ्स? देखो, प्रीवियस ईयर का तो ना क्यों अपना, ठीक है, प्रीवियस ईयर का हम दोनों ने फैसला किया. प्रीवियस ईयर यस हो सकता है 12 महीने से कम. अब सवाल ये उठता है, कैन असेसमेंट ईयर बी ऑफ लेस देन 12 मंथ्स? प्रीवियस ईयर तो हो सकता है, तो हो सकता है भाई कि करंट ईयर असेसमेंट ईयर भी हो जाए। ओके, सबका आंसर है नो। सांक, खतरनाक खतरनाक, सबका आंसर है नो। हाँ, ज्ञानेंद्र ने सही बात कही, सर्टन एजम्पशंस आर। वाह ज्ञानेंद्र, ज्ञानेंद्र के ज्ञान चक्षु खुल गए हैं, बिल्कुल जबरदस्त। ज्ञानेंद्र सिंह, सर्टन एजम्पशंस आर देयर। ज्ञानेंद्र ने पढ़ाई करनी स्टार्ट कर दी, प्रूव है इस बात का। वाह जबरदस्त ज्ञानेंद्र। ओके, सो गाइज द क्वेश्चन इज वेदर can the assessment year be of a period of less than 12 months? Answer is no. Answer is no. Assessment year cannot be of a period of less than 12 months. So why? The reason is because assessment year, whatever is your previous year, right? So I'll give you an example. Okay, I'll give you an example. My business starts from 15th May 2022. My business starts from 15th May 2022. Please tell me what is my previous year in the chat box. Okay, please write the complete with dates year. Okay, with dates I want the year. In the chat box I want to know, if I start my business, a new company has been started from 15th May 2022. What will be the previous year in which income is earned? What will be the previous year? I want in the chat box. Let's see who all get this right. इंतजार, इंतजार, सही आंसर का इंतजार। ध्रुव रस्तोगी, जबरदस्त जबरदस्त जवाब ध्रुव रस्तोगी का। और कोई, और कोई, और कोई, और कोई, एनीवन एल्स? लो भाई, ध्रुव रस्तोगी का जवाब मैंने हाईलाइट कर दिया है। ज्योतिष एकदम नालायक, विशाखा नालायक। मैंने कहा था डेट्स के साथ बताओ, डेट्स के साथ, ठीक है, डेट्स के साथ बताओ। दिशा महाजन, लो मैंने हाईलाइट कर दिया दिशा महाजन का जवाब, जबरदस्त दिशा, जबरदस्त दिशा। अंकुर तिवारी, जबरदस्त, मैंने हाईलाइट कर दिया। दीपिका, जबरदस्त। कीर्ति बत्रा, जबरदस्त जबरदस्त जबरदस्त, सुपर्ब। सही जवाब, बिल्कुल सही जवाब, आप सबका सही जवाब। जो प्रीवियस ईयर होगा इस केस में वो होगा 15 मई 2022 से लेकर 31 मार्च 2023 तक, ये होगा प्रीवियस ईयर। अब मेरा सवाल सुनना, इस प्रीवियस ईयर का असेसमेंट ईयर कब से स्टार्ट होगा और कब एंड होगा? डेट्स के सहित बताना, डेट्स के सहित। व्हाट इज द प्रीवियस ईयर and what is the assessment year in this particular case? I want to know the assessment year now. What is the assessment year in this particular case? जुनैद का आंसर परफेक्ट, दिनेश का आंसर परफेक्ट, केआर मिश्रा, पंकज का आंसर गलत, पंकज का आंसर गलत। अब मुझे अगला क्वेश्चन का जवाब दे दो, असेसमेंट ईयर कब से स्टार्ट होगा और कब खत्म होगा? डेट्स के साथ बताना, ईयर नहीं, डेट्स के साथ। विधि पोद्दार का सबसे पहला आंसर, और विधि पोद्दार का आंसर बिल्कुल सही। ध्रुव रस्तोगी का आंसर बिल्कुल सही, सुपर्ब ध्रुव रस्तोगी। दिशा महाजन, यश, ऋषभ उपाध्याय, जबरदस्त आंसर, बिल्कुल सही आंसर। जिया चौधरी, ईयर नहीं पूछा था मैंने, डेट्स पूछी थी, मुझे डेट्स चाहिए, डेट्स। ध्रुव जैन का आंसर, ध्रुव जैन कह रहा है 1 अप्रैल 2023 असेसमेंट ईयर। ध्रुव जैन आंसर, ये तो बताओ खत्म कब होगा, खत्म। यशिका, वाह, यशिका जोतवानी ने तो कमाल कर दिया, यशिका जोतवानी ने भाई साहब कमाल कर दिया। उसका देखो मैं हाईलाइट कर रहा हूं। और ज्योतिष ने भी खूब कमाल किया, ज्योतिष राज भी हमारे कहां कम है, बोलते हैं असेसमेंट ईयर होगा भाई 1 अप्रैल 2023 से 31 मार्च 2023। वाह, ये कौन सा असेसमेंट ईयर हुआ भाई? 1 अप्रैल 2023 से 31 मार्च 2023। वाह, ये कौन सा असेसमेंट ईयर हुआ भाई? बहुत जबरदस्त, बहुत ही बढ़िया, बहुत ही अच्छे। सो यस, आप सबका जवाब बिल्कुल सही। जो असेसमेंट ईयर होगा वो होगा 1 अप्रैल 2022 से लेकर 31 मार्च 2023 तक, ठीक है। असेसमेंट ईयर होगा 1 अप्रैल 2023 से लेकर 31 मार्च 2024, ये होगा असेसमेंट ईयर। अब देखो मैं अपना क्वेश्चन कर रहा हूं का चेंज। अब मैं आपको कहता हूं मेरा बिजनेस जो शुरू हो गया था वो शुरू हो गया था 1 अप्रैल 2022 को। मेरा बिजनेस जो शुरू हो गया था वो हो गया था 1 अप्रैल 2022 को। अगर मेरा बिजनेस 1 अप्रैल 2022 को शुरू हो गया तो जरा बता देना मेरा प्रीवियस ईयर क्या होगा। What is my previous year if my business was started on 1st April 2023? What is my previous year in this case? I have changed my question. मुझे previous year जानना है, मेरा previous year क्या होगा अगर मेरा business start हुआ 1st April 2023 3 को, अगर 1 अप्रैल 2023 को स्टार्ट हुआ, प्रीवियस ईयर क्या होगा? पूजा जगनम, बिल्कुल सही आंसर। यशिका जोतवानी ने दोबारा कमाल कर दिया भाई। 1 अप्रैल 2022 से 31 मार्च 2024 इसने 2 साल को एक्यूमुलेट करके एक ईयर बना दिया। वाह यशिका, वाह वाह, बहुत जबरदस्त, बहुत ही जबरदस्त। अरे भाई देखो, यहां पर हम सब ठीक है क्लासरूम में एंजॉय कर रहे हैं, हम लोग एक दूसरे का मजाक उड़ा रहे हैं, तो कुछ सीरियसली मत लेना मेरी बातों को। सिखाने का एक तरीका है मेरा कि मैं थोड़ा सा हंसी मजाक के साथ आपके साथ सिखा रहे हैं, तो बिल्कुल भी माइंड मत करना मेरी बातों को। ओके, यस राइट, योर प्रीवियस ईयर विल बी 1 अप्रैल 2022। योर प्रीवियस ईयर, जब आपका बिजनेस स्टार्ट हुआ 1 अप्रैल 2022 से, तो आपका प्रीवियस ईयर होगा 1 अप्रैल 2022 से लेकर 31 मार्च 2023, ये होगा आपका प्रीवियस ईयर। अब मैं पूछना चाहता हूं, बताओ इसमें आपका असेसमेंट ईयर क्या होगा? दूसरे केस में आपका असेसमेंट ईयर क्या होगा? अरे भाई आप सेम जवाब दोगे मुझे। दूसरे ईयर में आपका जो असेसमेंट ईयर होगा वो होगा 1 अप्रैल 2023 से लेकर 31 मार्च 2024, ये होगा आपका असेसमेंट ईयर। सो प्रीवियस ईयर कैन बी ऑफ अ शॉर्टर ड्यूरेशन, but assessment year cannot be of shorter duration. Even if previous year is short, previous year is truncated. Truncated means it is cut. If the previous year is short, even then your assessment year is of the full year, it is not of a shorter duration. So your previous year can be of a shorter duration, but your assessment year cannot be of a shorter duration. So let's read assessment year. Assessment year can only be of 12 months. Can only be of 12 months. Immediately next year of the previous year is the assessment year. So assessment year can only be of 12 months. That's it. There cannot be an assessment year which is of a lower tenure. Assessment year can only be of 12 months. It cannot be of a shorter duration. Assessment year we're talking about. It is the immediately next year of the previous year. But government says that if we have a hint, if we have an indication that if we wait till the assessment year, our revenue will be lost, our taxes will be lost, because the assessee is not a bona fide, is not a good assessee. If we wait until the assessment year, our entire revenue will be lost, our taxes will be lost. If government is of a view of that, then government has the right to collect taxes in the previous year itself. Yes, in that case, previous year and assessment year will be one and the same years. If government of India is saying, if government of India is feeling that if I wait till assessment year to collect my taxes, if I wait till that time, then I run a risk of revenue loss, I run a risk of tax loss. If that is the situation, then guys, in certain cases, previous year and assessment year are one and the same things, which means as soon as you earn the income during the previous year, you have to pay the taxes in the same previous year. In these cases, there are certain cases. What are those cases? Those cases are, number one, a non-resident person having a shipping business. A non-resident person having a shipping business. So if you are a non-resident person and you have a shipping business, which means you are plying shipping to and from India, then guys, government of India is fearing that, you know, your ship might unload the goods at the coast, go away and not pay taxes. So if you are an NR, non-resident, and you are into a shipping business, then guys, you have to pay taxes in the year in which your ship comes to the coastal areas of India, and the time at which you deliver your goods. At that point in time only, there are income tax authorities which are sitting at the port. You have to pay taxes to the income tax authorities in the same previous year. Income tax authorities will not wait till assessment year to collect your taxes. No. Case number two, when you are permanently leaving India. So if you are planning to permanently leave India, forever you are leaving India, then government will not wait till the assessment year to collect your taxes, because once you leave the territorial nexus of the country, the territorial region of the country, it will be impossible to recover taxes from you. So if you are permanently living India, then that is a problem. Your previous year will be treated as your assessment year. You have to pay taxes in the previous year itself. Government will not wait till 1 year for collecting the revenue. तो ज्ञानेंद्र कुछ ज्ञान बांट रहे हैं, वेरी गुड. और था कि प्रीवियस आर सेम, वेरी गुड ज्ञानेंद्र, जबरदस्त. ओके, नंबर 3, व्हेन यू आर ट्रांसफरिंग योर प्रॉपर्टी, when you are transferring your property to avoid taxes, when you are selling off your property, then guys, income tax authorities can intervene in the same previous year. Before you sell off your properties, government of India will say that you give me your taxes first. First, give me your taxes from the sales proceed, and then you use the sales proceed in whatever manner you want to. So if you are selling your property to avoid taxes, then also your previous year will be your assessment year. Third is bodies formed for short duration. So guys, sometimes certain organizations are formed for a very short duration. For example, Delhi Metro had some joint venture with a Japanese company to at the initial stages to assist them in developing the metro, trams, rails, their maps, everything was arranged. Guys, at that point in time, the permanent year is previous year is to be treated as the assessment year, because the bodies will go off very, very soon. Similarly, guys, any kind of short-term celebrations which are there, bodies which are made just for some purpose and then they are dissolved. So for example, some event which has happened, a rare event which has happened, like if F1 race, Formula 1 race is conducted in India, and for that a body is created and that will be dissolved within the next 6 months, then that body will have to pay taxes in the previous year itself. So a body which is created in a short run and they'll be diluted soon, those bodies also have to pay taxes in the previous year itself. As soon as they earn money, they have to pay the taxes. How to know, sir? Permanently leave. Okay, Karthik is saying, how do you know that a person is permanently leaving India? The indication is that he will get a visa. He will get a visa cleared from the foreign country, which will have a residency clause, which means he'll not go on a tourist visa. He'll not go on a work permit, but he will have a permanent residency of that particular country in which he is going. So this is an indication. This is an indication that that particular person is permanently leaving India. Plus, if a person is selling off all its property and sending the money to a foreign bank, then also there are several indications that that particular person is permanently leaving India. So that is how income tax authorities will know that a person is permanently leaving India. Next is discontinued business. If your business is discontinued, then guys, in that situation also, your previous year will be treated as assessment year. We will not wait till the assessment year for recovering your taxes. We will recover your tax in the previous year itself. All right, sir. Got the point. Okay, now we move on to the next topic, and a very, very important topic, guys. A definition of a person. What is the definition of a person? So the definition of person is required because a person has to pay taxes. Okay, person has to pay taxes. So definition of person is required to be undertaken by us. Who is a person who is required to pay taxes? That is what we need to discuss in this particular part now. Okay, guys, I'm asking you certain questions. Yes, Vishakha, this list is exhaustive. Vishakha, there's no other case in which exception is there. Yes, this list is exhaustive. Yes, transfer of property to avoid tax. Yes, Rani, this is there in the list. I have written it on the board. Yes. Okay. Now, guys, you need to answer certain questions. Okay. I am CMA Nikkhil Gupta. Am I liable to pay tax? Yes or no? You have to write in the chat box. Am I liable to pay tax on my taxable income? Yes or no? You have to write in the chat box. Yes or no? I'm waiting for your answers. Everyone says yes. Jyotish says depends. Wah, wah, Jyotish, wah. Depends. Yes, yes. Everyone saying yes, yes. Tanya Bhatt, Rahul Gupta saying yes. Alfia saying yes. Tanish saying yes. Nagnath Junaid saying yes. Everyone saying yes. Okay. My question number two. The academy which I'm running is a company. Its name is Bright Vision Academy. It's a company. So would Bright Vision Academy be required to pay taxes on its taxable income? Yes or no? Bright Vision Academy would be required to pay taxes. Rani Singh is saying आपको तो 3 times देना चाहिए. नालायक रानी, क्यों भाई क्यों? मुझे क्यों 3 times देना चाहिए tax? नालायक. Dhruv Jain is saying yes sir. If no, please say first too. Oh Dhruv, okay, I will tell you the ways to reduce taxes. Okay, sure, I will tell you. So yes, Bright Vision Academy also has to pay taxes. So any person who's earning income has to pay taxes. Okay, that is the rule which is there. Now my question to you is, please understand the question well. Okay, this is a digital board which you can see behind me. This is a digital board. This is made of fiber. It is embedded in metallical body, And this digital board I'm using it for teaching all of you. This is a digital board. My next question is, can this digital board be subject to taxation? Can Income Tax Act say, hey, digital board, please give us tax? Is it possible or not? Can digital board, or for that matter, fan, tube light is there above me. Okay, these lights are there all around me. I have a studio, I have a AC, air conditioner fitted on the right side. I have my laptop, I have my equipments over there. Can all these equipments which are there in my studio, can these equipments be subject to income taxation? Yes or no? Yes or no? So yes, Abhishek Kumar is saying no, Vishal no, Sarneka no, Dhruv no, Deepika no, Vinod Tripathi no, Disha no. Pankaj, only person can pay tax. Pankaj is saying only person can tax. Junaid is saying no. Vishaka is saying no. Khushi is saying no. Disha is saying no. Yashika is saying no. Junaid is saying no. Everyone is saying no. But my answer is a big yes. My answer is a big yes. Guys, Income Tax Authority doesn't distinguish between a natural person or an unnatural person. It doesn't distinguish between a living object or a not living object. It doesn't distinguish between a person or a non-person. No. Anything and everything capable of earning money is subject to income taxation. Anything and everything. But sir, please tell us, how can this board earn money? How can this board earn money? So it is a non-living thing. How can the non-living thing earn money? So guys, I'll give you a live example which happened in my case. I stay in Daryaganj, which is situated in Delhi. And guys, in Daryaganj, when we were kids, at one house, there was a mango. So that guy purchased a mango, and that mango had a figurine of Lord Ganesha over it. Some resemblance of Lord Ganesha over it. 2 ears were there. Then there was a trunk which was there. So it resembled Lord Ganesha. So those of my neighbors told everyone that we have Ganesha in form of mango in our home. Please come and worship it. So they put that mango on a chair, and everyone in the community, in the periphery, in Daryaganj, went to their home to worship the mango, and they also donated some money to mango. Similarly, obviously, guys, feelings set aside. Obviously, we have feelings on our gods. Definitely, we have feelings on our god. Feelings set aside. But when you go to a temple, you are actually offering money to the deities, to the idols. When you're going to Gurudwara, Seesganj Sahib, or any kind of Gurudwara, then you're offering your money to a holy book. All these things are non-living. Obviously, I'm not hurting sentiments. Please note that I'm not hurting religious sentiments. I'm talking about law as of now. I'm trying to explain you law as of now. Income Tax Act says, whether you are a person or not, whether you are a living being or not, whether you're a natural person or unnatural person, doesn't matter. You have to pay taxes if you are earning income. But sir, how would such non-living things pay taxes? How would such non-living things pay taxes? Such non-living things will pay taxes through their representatives. So their rep assessees, through their representatives. So someone else will pay taxes on their behalf, like deities, like idols, the pujaris which are there in temple, they will pay taxes on behalf of the idols. Or any other non-living person, any other artificial person who earns income, they will have to pay taxes through their representatives. That is the significance of this word person. Section 231. So there are 7 categories of persons in this particular section who are eligible to pay taxes. And the category which I was discussing just now was artificial juridical person. Artificial juridical person is the person who is artificial person, not a human being, not a person, not a living person. Still that particular person is earning revenue. That particular person is paying taxes. That is the artificial juridical person. So let's read. First is individual. Individual is a natural person. Individual is a human being. So individual definitely has to pay taxes. I am an individual. You are an individual. These are known as individuals. They definitely have to pay taxes. So individual is the first category of person who has to pay taxes. Individuals, is natural person or human being, they have to pay taxes. It includes minor or a person of unsound mind. Minors are also included in this definition of person, and person of unsound mind is also included in this definition of person. I agree, an unsound mind person is not capable of entering into a contract. I agree with that. But guys, he is liable to pay taxes. A person who's a minor is definitely not eligible to enter into contract, but he is liable to pay taxes, that is for sure. So an unsound person or a minor is liable to pay taxes. Then Hindu undivided family, a family which is there, which is an unpartitioned family who's not got partitioned. That family is existing since ever, since independence. So when this act was created, at that point in time, Hindu undivided families were a lot in number. So there was a person which was incorporated, Hindu undivided family. It was introduced in the definition of persons at that point in time. So Hindu undivided family on which Hindu law applies is known as HUF. Any undivided family on which Hindu law applies is an HUF. It includes Jains and Sikhs. Jains and Sikhs, both are included in Hindu undivided family. Includes wives of members and unmarried daughters. Include wives of members. So wives of members are also included in this particular HUF. And unmarried daughters are also included in the HUF. If the daughter of a family is unmarried, till the time she is unmarried, it is included in HUF. Now my question to you is, please listen to the question carefully. Once the daughter gets married, then in whose HUF will she be a part of? Once the daughter gets married, in whose HUF will she be a part of? Once daughter gets married, because she will not be a part of her father's HUF. She will not be a part of her father's HUF. So after marriage, in whose HUF will she be a part of? Let's see who tells the correct answer. Father-in-law. Perfect answer. Husband's family or father-in-law's family. Subramani is saying 1st April 23 to 31st March 24. Subramani, I think there is a lag in your internet connection, because this question I had asked 15 minutes back. So you are answering this question now. This question I had asked 15 minutes back. AG saying both families. No, AG, you are wrong. AG, not both the families. Married daughter will not form a part of the father's HUF. Married daughter will not form a part of father's HUF. Only unmarried daughter will form a part of father's HUF. Yes, everyone is right. Father-in-law. Oh, Harshit Singh Rajput is also with us. Welcome, Harshit. Good to see you in the live session early morning. Good to see that you have woken up early today. Brilliant. Harshit Singh Rajput is there with us. Shivda saying perfect in-laws family. Perfect answer is there. Very good, guys. Next is an Indian company. So naturally, guys, an Indian company will definitely be a person. For whatever income Indian company is earning, taxes will be paid by the Indian company. Definitely that will be included in the definition of person. Indian company will include two things: Companies Act, the company which is incorporated in Companies Act, and the company which is made through declaration of CBDT. Sometimes CBDT can declare a particular organization like a company, okay, if it is behaving like a company. So CBDT can declare certain non-companies to be companies, okay. So if CBDT has declared certain non-companies to be a company, then that will be also be treated as company, and it will be categorized as person under the Income Tax Act. Then partnership firm will be treated as a person. Partnership firm will have taxation liabilities. The income which is earned by partnership firm, that will be subject to the taxation. It includes LLP, limited liability partnership, is included in the definition of firm, okay. Then AOP BOI, very important two categories, guys. AOP BOI, association of persons and body of individuals. Association of person, body of individual means where individuals join together to form a particular commercial transaction or to form a particular organization, that is known as BOI. In BOI, only and only individuals join. Body of individual means where individuals join together to form a business organization or to form a profitable organization, that is known as BOI. Only when individuals join together, only when individuals join hand, then they cumulatively become BOI. What is AOP? AOP means when not only individual, Apart from individual, HUAF, Indian company might also join hands. Individual might join hand with Indian company, or individual, HUF and Indian company joins hand. Whenever any other person joins hand apart from the individual, then that is known as association of persons. So, you cannot evade law by not having any organization structure. So why would people not create any organization structure? Why would they work as a AOP? Why not they make a company to avoid taxes? Even if you do that, we will categorize you as AOP and we will charge tax from you. AOP, BOI, association of persons and body of individual, will be subject to taxation. Then local authorities like municipal corporation, municipal committee, panchayat, cantonment board, port commissioners, the board of port commissioners, all these are local authorities, and they will be also be subject to tax on the income which they earn. So this is the category. And the last category, and the most hilarious category which we had discussed just now, artificial juridical person, a person who doesn't have any form, a person who's not living, a person who's not who doesn't have any legal entity, who doesn't have any physical entity. It is more driven by certain regulations or certain religious beliefs. So those people are also subject to tax if and only if they are earning income. So these are unnatural, may not be directly sued by court of law. Court of law cannot be applied on these people sometimes, like deities, idols, university, bar council, etc. All these people are known as artificial juridical person, and they are not subject, they are subject to taxation. These are known as artificial juridical person. Okay guys, now please tell me, what can you see on the board? This beautiful thing, what can you see on the board? On the board you can see a crown. A crown, you can see a crown. What is represented by crown? What is represented by this particular crown? Please tell me in the comment box, what is represented by crown? What is represented by crown? Who's that one person who comes to your mind when you see this crown? Okay, who's that one person who comes into your mind when you see this crown? Who is that one person? I want to know that. Yes, sir. Who's that one person who comes to your mind when you see this crown? The king. Oh, Modi ji. Pankaj says Modi ji. Brilliant. The king. The central government. The king or the queen. Modi ji. King or queen. PM Modi. Hello, sir. Hello, Param Sehra. Hope you're doing well. King, king, king. Yes, everyone is saying king. Brilliant, guys. Brilliant. Your answer is absolutely correct. The crown represents the king. In India, the king is the central government. Central government is the king who governs the country. And there's a golden principle. There's a golden principle that the crown cannot be subject to tax. The crown cannot be subject to tax. That is the golden principle, which means union government cannot be taxed on the earnings, because guys, union government's earnings is the tax itself. The tax itself is the earnings of union government. So union government cannot be taxed. Union government cannot be subject to taxation. Crown cannot be subject to taxation. Now, please listen to my next question very, very carefully. Please listen. Oh, Dhruv Jain says Virat Kohli. Wah, Dhruv Jain. Khatarnak. Junaid Alam to ekdam aage chala gaya. Bilkul. Sadak par. Nikhil sir. Nalayak Junaid Alam. Okay, now my question to you is, please listen to my question carefully. Guys, does this mean that PM Modi's salary is not taxable? Does this principle mean that PM Modi's salary which he is getting from central government is not taxable? Does it mean that? Yes or no in the chat box. Yes or no in the chat box. Jyotish, then that daughter will be treated as unmarried. Okay. Divorced means unmarried. Okay. Does this mean that Modi's salary will not be taxed? Deepika says a yes. Pankaj says a no. Happy Life says a no. Harshit says a no. No, it is taxable. Vishal says yes. Rahul Gupta says yes. Okay. Guys, this doesn't mean that PM Modi's salary will not be taxed. PM Modi's salary will definitely be taxed, because PM Modi as an individual is earning that salary. What is the king's income in this case, the union government's income is the taxes which is if it is recovering from the people. That is income of union government which cannot be subject to tax. Modi as a person is a different individual, and the king is the chair. The king is the central government who is actually governing the entire country. So PM Modi's salary will definitely be taxed, subject to certain exemptions and certain benefits which he'll derive. But this will not mean that Modi's salary will not be taxed. Modi's salary will definitely be taxed. Prime Minister's salary is definitely taxed, but the central government's revenue will not be taxed, because central government is the king, and there the revenue which it will earn, it will not be subject to tax. That is the implication of this word. The crown cannot be taxed and union government cannot be taxed on its income. That is the implication of this particular phrase. Okay, sir, now we got it. Okay, guys, so in the last class we had studied some basic concepts of direct taxation, like what is tax, then what is the difference between direct tax and indirect tax, what is union list, state list, concurrent list, what is the constitutional validity, sources of income tax law, difference between previous year and current year, then what are the various forms of persons who are eligible to pay tax under the Income Tax Act. Today we are going to start our next topic, and the next topic which we are going to start today is heads of income. What do you mean by heads of income, and what are the various heads of income? That is what we are going to start today. Now guys, we all know that we earn income, right? And on that income we pay taxes. That is the fundamental of income taxation. We earn income and we pay taxes on that particular income. That is income tax all about. So whatever we earn, we pay income taxes on that particular income. That is income tax, right? Now, before we pay taxes on our income, we have to bifurcate our income based on its characteristic, based on its nature, in 5 parts. So we need to tell Government of India, Government of India, suppose if your total earning during the year is 10 lakh rupees. Suppose your total earning during the year is 10 lakh rupees. So 10 lakh rupees is your total earning during the year. You need to tell Income Tax Department that what is the characteristic of this income? What is the characteristic of this income? Is this income your salary, or this income is your house property, or this income is your capital gains, or this income is your business income, or this income is your other sources income? This is the 5 head based on their characteristic, based on the nature of the income. 5 heads in which income is bifurcated is salary, house property, capital gain, PGBP, and last is income from other sources, IFOS. So these are the 5 categories, right? So I have earned income worth 10 lakh rupees during the year. Now I need to tell the Income Tax Department what is the bifurcation of this income based on the nature. What kind of income is it? Is it income in the nature of salary? Is it income in the nature of house property? Is it income in the nature of capital gain? Based on the characteristic, I will tell my Income Tax Department what kind of income is it. Now, if I ask you, you have already understood what are the 5 names, okay? And the 5 names are also given on the board, okay? Please see the board and please see the 5 names which are there. And based on the name itself, you will be able to classify what kind of income is it. So, for example, I'll give you an example, okay? I am working with Reliance Industries Limited as a Chief Financial Officer. When I am working as a Chief Financial Officer with Reliance Industries Limited is paying me a package of 20 lakh rupees per annum. Please tell me, out of these 5 heads, where would this 20 lakh classify? Is it your salary? Is it your house property income? Is it your business income? Is it your capital gain? Or is it from income from other sources? Please write in the chat box, what is the nature of this particular income? I am CFO of Reliance Industries Limited. Perfect. Good answer. Brilliant. Pankaj Kumar, Megha Tomar, Manav Khera, Jyotish, Nagnath, Jyoti Bharti, EduGain, Manav Khera, Megha, Vidhi Podar, Mihir. Everyone is saying salary. Perfect answer. Question number 2. I have a big house in my possession. I am owner of a very big house in Delhi. Now I want to give away one of the house as lease. On rent, I want to give one of the house and I'm earning rental income. Out of these 5 heads, where would this income be classified? Please answer in the chat box. House property, Pankaj says house property. Payal says house property. Brilliant answer. Very good answer. Superb. Alfia, Manav, Kriti, Aishwarya, Payal. Very good. Disha Mahajan, Akanksha, Priya. Everyone is saying house property. Perfect answer, guys. Perfect answer. Example number 3. I have sold my old car. I had an old car, a very expensive car I had. I sold my own old car and I gained a lot of money from that old car. Or I sold an old house property which I had. I sold a building which I had and I gained 2 crore rupees from selling of that building. What kind of income is this income? Perfect. Manav Kheda, Vishnu Prasad, Ananta, Idugain, Disha, Mahajan, Jyotish, Deepika, everyone is saying capital gain. Perfect, guys. Capital gain. Now, I am into business of running my own coaching institute. I am a teacher and I have a faculty of members who are part of this coaching institute. So, what kind of income is that particular income? Which head is that particular income? Income from my coaching institute. PGBP. Perfect. Nikita, Salunke, Anjali, Pankaj, Manav. Perfect answer. Perfect. Harshit Singh Rajput is also there. Very good, Harshit. Good morning. PGBP. Perfect. PGBP. Perfect. Nitya, PGBP. Tanay, Tanya, PGBP. Perfect answer, guys. That income is PGBP. So you are well aware what kind of income goes into which account head. These are the 5 account heads and the respective income goes into the respective account head. And that is known as classification of head of income. How do you classify the various heads of income? This is how you classify the various heads of income. This is how you bifurcate your income into various heads. You classify your income into various heads. And this is the logic of heads of income. Now, my question to you is, sir, why do we need to classify our income into 5 heads, sir? So it is such a hassle. Why do you have to do this? So why don't Income Tax Act tell me what is the rate of tax on entire 10 lakh rupees? Okay. And I don't want to bifurcate, sir. What is the use of bifurcation, sir? I don't want this bifurcation. My income is 10 lakh. Tell me what is the tax. Tell me what is the tax rate and tell me what is my tax. So why do I bifurcate into so many parts and do all this nonsense, sir? So I don't want to do this, sir. I am already fed up with my work. I have work responsibilities. Now, over and above my work responsibilities, I give all these details to Income Tax Act. Why should I do this, sir? I don't want to, classify my income into any head of income, sir. I don't want to do that. What is the logic behind classifying income into various heads of income? What is the logic? Is there any benefit which assessee derives out of dividing the heads, the income into various heads of income? Is there any benefit? Wow, brilliant, brilliant. Already the answers are given in the chat box. Vidhi Poddar, Jyotish, Kirti, Deepika, Pankaj, Priyadarshini, Bhupendra, Disha Mahajan. Very good, superb answer. Guys, the tax rates are different for some of these heads of income and the deductions and exemptions which are claimed in some of these are different from others. So yes, salary might be taxed at a different rate as compared to capital gains. Capital gains might be taxed at a different rate. Salary might be taxed at a different rate. So maybe government wants to give some benefit to the capital gain earning people and income tax doesn't want to give that benefit to salary earning people. So there are benefits which are given by Income Tax Act which may vary from person to person, and that is the reason why the entire amount of income is not taxed at a constant rate. It is not taxed at a constant rate, but it is taxed at a different rate. Okay. Exemptions are there, deductions are there, and because of those exemptions and deductions, the tax may vary. That is the logic. That is the logic behind spreading your income or bifurcating in your income into 5 parts. Rather than offering the entire income in one part, we bifurcate it into 5 parts so that we get additional benefits, we get appropriate tax rates, and we get the exemptions which is given by the Income Tax Act. Perfect. That is the reason, guys. So please read the line which is written over here. total of all the heads of income is equal to gross total income. So when all heads of income is added, it leads to gross total income. Total of all heads of income is equal to gross total income. Gross total income is total of all the 5 heads, that is known as gross total income. Okay, sir, perfect, got it. Now we move on to the difference between heads of income and sources of income. Okay, so there are two words. One is head of income, other word is sources of income, and there is a difference between these two words, heads of income and sources of income. Okay, so heads of income we have already discussed, guys, like house property, capital gain, salary, PGBP. These are known as heads of income. What are sources of income? So from these heads, we can have multiple sources of income. For example, someone might have 3 house properties. Someone might have 3 house properties. So each of the house property is one source of income. And all that income is accumulated into the head of income, which is income from house property. So head of income means the broad head, the 5 heads which are given by the Income Tax Act. They are the 5 heads. That is the head of income, and within this head of income, there are various sources of income, which means if I have income from house property, I might have income from house property from more than one house property. I might have several house properties, and the income from each of the house property will be clubbed under income from house property, and all those incomes which are clubbed under income from house property will be taxed as income from house property. That is the concept of income from house property, and this is the concept of source of income versus head of income. Heads are only 5. Sources can be unlimited. So for example, if I'm talking about business income, guys, I might have several business incomes. I might have business of coaching institute. I might have business of selling mobile phones. I might have business of selling electronic gadgets. I might have business of oil wells. There are refineries which are in my name, and I earn income from that oil refineries. I have multiple sources of income from business also. So business income is the head of income. And if I have 5 businesses, then all the 5 businesses are known as source of income. Source of income. Head means the 5 characteristics, the 5 bifurcation according to the characteristic which is made by the Income Tax Act, that is known as head of income. And what is the source of income? Source of income means amongst that head, what is the specific source from where income is earned? That is the difference between head of income and source of income. So source of income can be unlimited, can be many. However, the head of income is only 5. There are only 5 heads of income, which is salary, house property, PGBP, capital gain, and income from other sources. So that is the difference between source of income and heads of income. Source of income and heads of income. That is the difference between the two. All right, sir. So now let me tell you one administrative aspect, guys. Administrative aspect means rounding off. Yes, we had studied rounding off in our school level, guys, right? We have studied rounding off. What do you mean by rounding off? Rounding off means, if any number is an odd number, it's not a multiple of 5 or 10. So we try to make it a multiple of 5 or 10. So suppose your tax is computed as, so guys, today it's electronic world, okay? So the difficulty is less, but assume a situation where your tax is computed as 15,643 rupees. Your tax is computed as 15,643 rupees. Now, how difficult is it to render change of this 3 rupees? Sometimes it becomes difficult. And guys, what if the tax rate, because tax rates might give a odd figure in decimals also, the figure can be there. So suppose the tax is computed as 15,643 rupees and 73 paise. Please tell me, how on earth will you pay this 73 paise to Government of India? How will you pay this amount? You cannot even pay this amount electronically, right? How can we pay this amount? It would be very difficult to pay this amount. So there is a concept of rounding off which has been introduced in the Income Tax Act, and the concept of rounding off says whatever income you have computed, okay, whatever taxable income you have computed, I'm talking about taxable income according to the Income Tax Act, whatever income you have computed or whatever tax you have computed, you have to round it off to the nearest multiple of 10, to the nearest multiple of 10, which means you have to round off the amount. If the amount is greater than 5, then you have to round off to next 10. And if the amount is less than 5, that is to be ignored. So you have to round off the amount to a multiple of 10. That is the concept of rounding off, which is there in the Income Tax Act. Okay, sir. So yes, sir, we had studied this concept of rounding off in our school level, at our school level as well. This is the same concept, guys, which we had studied at our school level. Okay, sir. Got it. Yes, Government of India gives you a leeway. Please round off your income and your taxes to the extent you will be able to pay those taxes and income properly. To be able to pay those taxes and income properly, we allow you a rounding off provision. This is the rounding off provision. Okay, sir, got it. Okay, next, very important topic, guys. A very important topic that we are going to study now. And this topic, from a CMA final perspective and from a CMA intermediate perspective, both the perspectives, this topic is very important. This topic deals with difference between three things: tax planning, tax avoidance, and tax evasion. These are the three things which are dealt with in this particular topic: tax planning, tax avoidance, and tax evasion. Now these three topics are topics which are there in CMA Intermediate as well as CMA Final. So in CMA Intermediate as well as CMA Final, guys, a question from these topics may come in your examination. Yes, a theoretical topic will come from in the examination from these three topics, not a practical one, but still these topics are very important. In CMA Final, 6 marks question came from this particular concept in 2019. So very important topic, both from CMA Intermediate and Final level. Okay, sir, got it. So what is this topic? Topic is difference between tax planning, tax avoidance, and tax evasion. Tax planning, tax avoidance, and tax evasion. Guys, we know that to save tax, there is a lot of effort which goes into to save tax. Whenever we want to save tax, there's a lot of effort which goes into saving our tax, right? No one in the country wants to pay excess tax. No one in the country wants to pay excess tax. Everyone wants to save their taxes. Everyone wants to reduce their tax burden. That is the primary concern, or that is the primary factor of every individual. Not only me, not only you, but everyone who's there in the country, they want to save taxes. Saving of tax is an important aspect, is a important feature of any person who's there. They want to save taxes. Now the taxes which they want to save, there can be two ways of saving the taxes. One can be the ethical way. Second can be the unethical way. You can save taxes in an ethical way. You can save taxes in an unethical way, right? So both the ways are there. If you save taxes in an unethical way, then that will be a punishable offense. And if you save taxes in an ethical way, that will be not a punishable offense. You will not be punished for that activity. Yes, you have right to save tax, but within the periphery of the Income Tax Act, within the four corners of Income Tax Act. So what do you mean by tax planning? Tax planning means taking the best advantage of law to reduce the tax burden. So guys, Income Tax Act in itself will offer a lot of exemptions, deductions, and benefits to the assessees, to the persons who are taxpayers. Income Tax Act will in itself give a lot of benefit, a lot of exemptions to the assessees. Income Tax Act gives it. So you please take those exemptions, please take those deductions and save taxes. If you take those deductions and exemptions which are there in the Income Tax Act to save taxes, then it is known as tax planning. Yes, it is ethical, it is valid, and you can go for it. Okay, yes, it is ethical, you can go for it. This is known as tax planning. Planning means you will plan your tax in a manner that you will reap maximum benefit of all the provisions of the act. That is known as tax planning. Planning your taxes in a manner that you will be able to reap maximum benefit out of the Income Tax Act within the four corners of Income Tax Act by following the provisions of Income Tax Act. So suppose if salaried class is allowed a standard deduction, please make use of that standard deduction and reduce your taxable income. You reduce your taxable income after gaining benefit of it. So yes, The tax planning, meaning of tax planning is to take best advantage to reduce your taxes. It is of course legal. Yes, law permits you to take the advantages which are given in the Income Tax Act. Yes, it is ethical and moral. You can, with full morality and ethical attitude, you can take benefit of those provisions which are there in the Act. It is futuristic and positive in approach. It is for future, you'll be benefited by taking these steps. It is a positive thing. And long-term benefit is there for the tax planning sections. Long term, you will be benefited if you make use of tax planning sections. Long term, you will be benefited out of these activities, out of these tax planning measurements. Yes, sir. Now we talk about the third thing first, which is tax evasion. When you do not follow law, when you ignore law, when you conceal your income, you hide your income, you do not showcase your income, that is known as tax evasion. When you earn an income of house property, say worth rupees 2 lakhs, and you do not disclose it to income tax authorities, you say मैं नहीं दिखाता तुम्हें, तुम तो टैक्स ले लेते हो बहुत ज्यादा, मैं नहीं दिखा रहा तुमको मेरी इनकम कितनी है. So whenever you under determine or under calculate the provisions of income tax, or you ignore the provisions of income tax. So suppose if the rate at which salary is taxable, suppose is 25%, but you levy tax at the rate of 15%. Absolutely incorrect. This is the wrong way of calculating taxes. This is known as tax evasion. This is known as tax evasion. When you deliberately ignore law, when you deliberately follow wrong law, when you deliberately ignore law, that is known as tax evasion. So undermining or under declaring income earned or overstating the expenses is known as tax evasion. Absolutely illegal. Absolutely illegal. And yes, unethical and immoral. This is not good, guys. This is not good. It is unethical and it is immoral. It is negative in approach. It is negative in approach. No benefit you will derive from this particular activity, because if tomorrow income tax authorities catch hold of you, catch hold of the problem that you have created in your income tax return, then they are going to put you behind the bars. They are going to penalize you. You will have to pay hefty amount of interest on the tax due. So whatever tax you have saved, more than that particular tax, you have to pay as penalties, interest, and you have to also spend some time in jail. So is it worth it? Answer is no, it is not worth it. Tax evasion is not worth it. When you do not follow law, that is known as tax evasion, and it is definitely not worth it. You are not following law in spirit. You are not following law in the words, in the actual, in the essence. Then that is known as tax evasion. Not preferable at all. Suppressing the Income Tax Act, not preferable at all. And guys, these are the extremes. This is white and this is black. This is white and this is black. These are the extremes. And in the middle, there is a gray lining. There is a silver lining. There's a gray shade, okay? This is a gray shade, which is known as tax avoidance. What is tax avoidance? Tax avoidance means, although you are following law, but you are misinterpreting law to your benefit. Although you are following law, but you are misinterpreting law to your benefit. To gain benefit, you are misinterpreting the law. You are taking a wrong explanation of the law to misinterpret the law. That is known as tax avoidance. So I'll give you an example, okay? A very simple example I'm going to give you. My mother, when we were young, my mother used to tell me that, you know, whenever there's rainy season is there, a lot of rain is there, then in the parks and the gardens, the soil is a little sloggy. It's moisturized, right? So my mom would always tell me that, okay, today evening you can't go for playing in the park. Today evening you can't go for playing in the park. We would ask, why can't we go to park today? She used to say, today it rained, therefore the mud is sloggy, your entire dress is going to be spoiled, so you will not go to park today in the evening because your dress will be spoiled. Today in the evening you are not going to the park. This is what my mother instructed me when I was very young. What did she mean? She meant that if you go to the park, your entire dress will be spoiled, your the dirt will be on your body, and that will be a bad situation. Bacterial infection might happen, or some unwanted components can be on your body, so you cannot go to park during rainy season. So she used to tell me, Nikhil, in the evening you can't go to park. I used to misinterpret it, and I used to interpret it in a manner that, okay, mom said in the evening I can't go to the park, but mom didn't say that in the night I can't go to the park. So I will go to the park at night. That particular day, when my mom instructed, don't go to the park in the evening, I will not go to the park in the evening. I will go to the park at night. After 7 p.m., after 8 p.m., I'm going to go to the park. This is the interpretation which I took. This is the wrong interpretation which I took, because my benefit was going into the park, whether at evening or night time. So I used to misinterpret it. What did my mom mean? My mom meant that today the mud will be sloggy, there will be water in the park, therefore your clothes will get spoiled, therefore don't go to the park. She didn't mean that in the evening don't go to the park and go to the park at night, but I used to misinterpret it. Okay, I became over smart. Okay, and when I used to become over smart, then my mom used to slap me, right? That was the only alternative. My over smartness used to melt away with one slap of my mother. So that is the alternative. Similarly, guys, tax avoidance means, although you are following the law, whatever words are written in the law, although you are following it, but not in essence. Interpretation used to take a wrongly, not in essence. In essence, you didn't used to follow the words of your mother act, income tax act. You didn't used to follow those words of your income tax act in proper instance. So I'll give you an example of the income tax act. Okay, now income tax act says that if there is any partnership firm where partners have came together for doing some common business, for doing some business, that is known as partnership firm, and that is to be taxed in a specific way. Okay, partnership firm is to be taxed in a specific way. Then there is another entity which is known as LLP, limited liability partnership. Limited liability partnership is to be taxed in a very different way. Okay, there are different ways in which LLP is to be taxed. There's a different way in which partnership firm is to be taxed. Okay, so guys, what happens is, many a times people, despite of knowing that their business is partnership business, their business was always a partnership business, despite of knowing that, to gain some income tax benefit, they change the characteristic or nature or form of their organization on papers. So although it is a partnership firm, they will deliberately convert that partnership firm into an LLP to gain benefit of income tax act, to gain benefit of income tax which is written in the act. Although the characteristic of that particular agreement is partnership, it is not LLP, but deliberately to get income tax benefit, they would get themselves converted into LLP. This is wrong. Although law will not forbid you, law will not say no, don't transfer yourself to LLP. Law will not say this. But guys, in a sense, you are a partnership firm and not an LLP. So you should not be eligible for the benefits of LLP. Therefore, this is a matter of tax avoidance. You are avoiding tax. You are avoiding tax. I'll give you another example. Okay, in the last slide we had studied about the various sources of income, and various heads of income. Now suppose I am earning salary income. Okay, I am earning salary income, and suppose I am aware that salary income is taxable at a higher tax rate, PGBP income is taxable as a lower tax rate. Then what will I tell income tax department? I will tell income tax department, look, income tax department, I am not earning salary. I'm not earning salary. I am earning PGBP. My income is PGBP. I will lie to the income tax department. I will create all the documentation which will prove that my earning is not salary, but my earning is PGBP. I will try to do that. So that act of trying to prove your nature of income as a different nature of income is again tax avoidance. Although you will be able to prove that this income is actually PGBP and not salary, but point is, it is not correct, guys. It is not correct. You should not do it. So whatever income, the real nature of income, whatever the real nature of income is, you should disclose that same nature of income to the income tax department. Don't misinterpret the words of income tax department. So taking advantage of loopholes of law to reduce tax. So you are taking advantage of loopholes of law to reduce tax. It is legal, but it is unethical. Okay, it is legal, but it is unethical. So I'll give you three options. My mom told me in the evening, don't go to the park because rain is there and the mud is sloggy. I didn't go to the park that day. That is tax planning. I didn't go to the park that day. That is tax planning. I ignored my mom's words. I ignored my mom's words and I went to the park in the evening. That is tax evasion. I ignored my mom's words and I went to the park in the evening. That is tax evasion. And the third aspect is I became over smart. I didn't ignore the words of my mom, but I misinterpreted the words of my mom. And I told my mom, you told me that don't go to the park in the evening. So I went to the park at night. That is tax avoidance. This is the difference between tax planning, tax evasion, and tax avoidance. These are the three varieties of managing your tax. How do you manage your tax? So some people would say, no, we will do only tax planning. We will not get into tax avoidance and tax evasion. But some people might take some aggressive interpretations and they might say that, okay, we'll do tax planning. We'll also do tax avoidance. We'll do both. Many people say this also. Depends on you. What do you want to do? But mind you, tax avoidance will not give you long-term benefit. It will always give you short-term benefit. Tax avoidance will never give you long-term benefit. Tax avoidance will give you short-term benefit. I'll tell you how. So when my mom realized that I became over smart when she said, don't go to the park in the evening, I went to the park at night. I became over smart. My mom realized that they are trying to be over smart. The next day, she used to change her words. She used to say from the next day, don't go to the park today. Don't go to the park today and tonight. So don't go to the park today and tonight. So she used to change her words from the next time onwards. So guys, tax avoidance can definitely give you a short-term benefit for 1 year or 2 years. But eventually, when Income Tax Act will realize that you are doing this over smartness every time, they will change the law. They will change their words, which were subject to misinterpretation. They will change those words. So tax avoidance cannot take you long. It cannot go to a very high extent. It cannot go very far. It cannot go very far. It will be restricted to an extent. So tax avoidance gives you only short-term benefit and not long-term benefit. That is the worst part about tax avoidance. So tax avoidance is going to give you short-term benefit. Okay, sir, got it? All right, now we come on to a very, very important aspect of our basic concepts, guys. And this is an important topic which you should definitely understand in a very, very profound manner, okay? The topic is, what is the difference between diversion of income? What is the difference between diversion of income and application of income? What is the difference between diversion of income and application of income? There are two words which are written on the board. The words are diversion of income and application of income. What is the difference between these two words? That is what we are going to understand now. And it is a very, very important concept. Please listen to it carefully. CMA Intermediate students, this definition or this difference can come in your examination very, very surely. So it is a very important concept which is specifically given in the CMA study material. So it is a very, very important concept. Difference between diversion of income and application of income. Okay. Let us understand this concept now. Okay, sir. Okay. So I have a diagram made in front of you. Diagram of a publishing house. And this is a world-renowned publishing house, guys, by the name of Penguin, right? This is a publishing house, which is by the name of Penguin, and world-renowned publishing house. Everyone knows this publishing house well. It is a very popular publishing house, okay? So the responsibility of this publishing house is to publish books. There are two authors, Mr. and Mrs. A. Both of them are very, very learned people. They write books on various subjects, okay? The publishing house will take right to publish their books. They will take right to publish their books. and in return the publishing house will pay royalty to these two authors. Please listen to me once again. Publishing house will take permission to publish their books, and in return the house will pay royalty to these two authors. Of course guys, royalty income is taxable in hands of both the authors. Royalty income will be taxed in hands of both the authors. Suppose the royalty income which is decided to be paid by the publishing house to the authors is rupees 5 lakh rupees each. 5 lakh rupees each. So 5 lakh rupees to Mr. A, 5 lakh rupees to Mrs. A. That is the royalty which is to be paid by the publishing house to each of these authors. 5 lakh rupees to Mr. A, 5 lakh rupees to Mrs. A. Now, guys, instead of preparing two checks worth 5 lakh and 5 lakh rupees each, publishing house only made one check of 10 lakh rupees. So publishing house paid royalty to both of these authors. So I've written publishing house will pay royalty to both of these authors. And I hope you are able to see this picture well. So now might be you'll be able to see this picture much more with clarity. Yes, sir. Okay. So publishing house will pay royalty to Mr. A and B, and publishing house is paying this royalty entirely to Mr. A. So 10 lakh rupees is being paid by the publishing house to whom? To Mr. A. And publishing house is giving an instruction to Mr. A, dear Mr. A, please pay 5 lakh rupees out of this royalty to your wife, because they are staying in the same home and they are of course a husband and wife. So publishing house is saying, Mr. A, dear Mr. A, please take 10 lakh rupees from us, keep 5 lakh rupees to yourself and pay 5 lakh rupees to Mrs. A. That is the arrangement between publishing house and Mr. and Mrs. A. Now the question is, sir, the income which is paid by publishing house to Mr. A, is that particular income belonging to Mr. A, or is that income belonging to Mr. A and Mrs. A? Guys, the answer is it is belonging to Mr. A and Mrs. A. So naturally guys, Mr. A will pay the share of royalty to Mrs. A. So 5 lakh rupees will be paid by Mr. A to Mrs. A, right? 5 lakh rupees is paid by Mr. A to Mrs. A. So now my question to you is, what is the income taxable in hands of Mr. A? Please write in the comment box. Please mention in the comment box, what is the income which should be taxable in hands of Mr. A? Should it be 5 lakh rupees or the remaining 5 lakh rupees, or should it be entire 10 lakh rupees, because Mr. A receives 10 lakh rupees from the publishing house? What is the income which is taxable in hands of Mr. A when Mr. A receives 10 lakh rupees from Penguin Publishing House? What is the income which is taxable in hands of Mr. A? Perfect. 5 lakh rupees. Yashika says 5 lakh rupees. Priya Rawat says 5 lakh rupees. Alfia says, Yashika Entertainment Show says 5 lakh rupees. Anjali Mahor 5 lakh rupees. Edugain 5 lakh rupees. Tanupriya 5 lakh rupees. Absolutely correct, guys. Absolutely correct. Absolutely correct. It's 5 lakh rupees because the balance 5 lakh rupees is taxable in hands of Mrs. A. Now, this is known as diversion of income. What do you mean by diversion of income? Actually, the income belonged to Mrs. A. Actually, the income belonged to Mrs. A. Actually, the publishing house should have given it to Mrs. A. The income belonged to Mrs. A. But the income was diverted to Mr. A and then it received Mrs. A. The income was diverted to Mr. A and then it was received to Mrs. A. That is known as diversion of income. Income came through Mr. A to Mrs. A. Income came through Mr. A to Mrs. A. This is known as diversion of income. And guys, diversion of income is not taxable. Diversion of income is not taxable. If you receive income on someone else's behalf, if you receive income, you means Mr. A. If Mr. A receives income from someone else's behalf, it is not taxable in hands of Mr. A. So diversion of income is not taxable. If you divert income from Mr. A to Mrs. A, it is not taxable in hands of Mr. A. It is always taxable in hands of Mrs. A. This is known as diversion of income. So the income which will be taxed in hands of Mr. A is only and only 5 lakh rupees. Okay, sir, got it. Now let's come on to the next part. The next part is application of income. What do you mean by application of income? Now we come on to application of income. In the same example, guys, in the same example, suppose the publishing house pays, suppose the publishing house pays rupees 10 lakh to Mr. A. Suppose the publishing house pays rupees 10 lakh to Mr. A. Now, Mr. A has hired a graphic designer to design his book. He has hired a graphic designer or an editor to design his book. And Mr. A pays a salary worth rupees 2 lakh to this designer. Mr. A pays salary worth rupees 2 lakh to the designer or the editor of the book. Mr. A has hired a person on salary for editing his book, for graphic designing of his book, or for doing some corrections in his book. Mr. A has hired a third person. He's a third person. Mr. A has hired that third person, and Mr. A is paying a salary of 2 lakh rupees to this third person. Now the question is, will this particular salary be taxed in hands of Mr. A or not? So what is the taxable income of Mr. A? Is it 10 lakh rupees or is it 8 lakh rupees? And please consider the fact this time Mr. A doesn't have to give anything to Mrs. A. This entire royalty belongs to Mr. A, okay? This entire royalty belongs to Mr. A. It is not to be given to Mrs. A. At this point in time, there is no Mrs. A in picture. Mrs. A not in picture. Entire 10 lakh rupees of income is of Mr. A. Now, again, following the same principle which we had followed earlier, please tell me what is the taxable income of Mr. A? Is it 10 lakh rupees or is it 8 lakh rupees? Is it 10 lakh rupees or is it 8 lakh rupees? Because salary of this graphic designer is 2 lakh rupees. Is it 10 lakh rupees or is it 8 lakh rupees? That is my question to all of you. Manimala, Pankaj, Khushi, Megha, Aditi Kumar, Saket, Disha Mahajan, Anushka, Bhupendra, Pankaj, Akanksha, Deepika, Alfia, Tanya Bhatt, Rani, Anjali Mahor, Om, Payal, Deepika, Tanupriya, what is your answer? Tanupriya. Harshit Rajput, what is your answer? Harshit Rajput. Jyotish says 10 lakh. Vishnu says 10 lakh. Okay, great. All right, guys. The correct answer is 10 lakh rupees will be taxable in hands of Mr. A. 10 lakh rupees is taxable in hands of Mr. A. Sir, why do you say so? Because in the earlier example, you yourself said that the income which belonged to Mrs. A was to be reduced while computing taxable income of Mr. A. You said this thing, sir. So then why would this salary be not taxed in hands of Mr. A? This salary, sir, should not be taxed in hands of Mr. A. Using the same logic. Answer is no, guys. Absolutely incorrect. Please understand. 10 lakh rupees of income entirely belonged to Mr. A. Now it is Mr. A's perspective. How does he want to utilize this income? He might want to hire a graphic designer. He might give some income to him. He might want to hire an editor. He might give some income to him. He might hire a translator. He might give some income to him. So Mr. A is getting entire 10 lakh rupees in his account for himself from the publishing house. So it will be taxed in hands of Mr. A only. Now we are not bothered how Mr. A utilizes this income. He might spend it anywhere. He might expense out anything. He might spend it anywhere. We are not bothered about it. Whatever income is taxable in hands of Mr. A, it is the total income which he receives from the publishing house. In the earlier case, guys, yes, Mr. A got 10 lakh rupees from the publishing house, but with an instruction. What was that instruction? Instruction was, please pay 5 lakh rupees out of this income to Mrs. A. There was an instruction which was given to Mr. A. There was an implied instruction which was given to Mr. A. Whether Mr. A gives it or not, that's an entirely different thing. But the instruction was that 5 lakh rupees belong to Mr. A. 5 lakh rupees belong to Mrs. A. This was the implied interpretation which was given by the publishing house. since it was the implied permission, it was the implied instruction which was given by the publishing house. Therefore, in Mr. A's hand, only 5 lakh rupees was taxable. But guys, in this case, it is not diversion of income. It is not a case of diversion of income. It is a case of application of income. You are applying your income to various sources, to various expenses. So publishing as a house is not telling you to hire a graphic designer. No, no. You are hiring the graphic designer on your own accord for your own benefit. Publishing house is giving income entirely to you. When publishing house is giving income entirely to you, that entire income will be taxable in your hands. So entire 10 lakh rupees will be taxable in hands of Mr. A. Entire 10 lakh rupees is taxable in hands of Mr. A. This is known as application of income. You apply this income, you are using this income, you are utilizing this income. Income Tax Act will say utilize it the way you want. We will tax your entire income which you have received from the publishing house. Publishing house didn't tell you that please give some income to graphic designer. It didn't tell you that give some income to editor. It didn't tell you how to utilize this income. It's your wish how do you want to utilize your income. So that will be taxable in your hands. It is known as application of income. However, in the earlier case, the case which we had studied, in the earlier case, publishing house had instructed, please distribute your income to Mrs. A. Please give this income to Mrs. A. This was the instruction of the publishing house. Guys, this is the difference between application of income and diversion of income. So diversion of income is not taxable in hands of the recipient, but application of income is taxable in hands of the recipient. Diversion of income is not taxable in hands of the recipient. Application of income is taxable in hands of the recipient. That is the difference between diversion of income and application of income. I hope I made my point absolutely correct. Aanchal says 10 lakh taxable in hands of Mr. A. Perfect, Aanchal, perfect answer. Megha Tomar says 10 lakh. Abhishek Das says 50 lakhs. यार ये 50 लाख कहां से आ गया अभिषेक दास, बताना जरा. 50 लाख की इनकम कहां से आ गई मुझे तो ये बता दो. मैं 10 लाख गरीब आदमी हूं, मैं कोई अमीर आदमी थोड़ी हूं. 50-50 लाख 100 करोड़ ऐसे कोई हम करोड़ों लाखों में बात थोड़ी. हम तो 10 लाख पे रुक जाते हैं भाई. 50 लाख कहां से आ गया, समझ में नहीं आई बात. अभिषेक का आंसर गलत हो गया. अभिषेक अटेंशन नहीं दे रहा, तो अब अभिषेक बेचारा दुखी हो गया थोड़ा सा. चलो कोई बात नहीं. ओके, नेक्स्ट आ जाओ. नेक्स्ट इज tax rates. And yes, the final topic of this particular chapter is tax rates for assessment year 22-23. Guys, we need to understand these tax rates very, very well. We need to understand the concept well. We need to understand the logic behind these tax rates. We need to understand and we need to remember the tax rates which are applicable to individual, to HUF, etc., etc. We need to remember all these things to be able to perform well in the examination, because tax rates form a very important part of your curriculum. Tax rates are very, very important for all of us. Tax rates are determining factor of what our tax amount will be. So now we are starting tax rates for assessment year 22-23. What is the tax rate which is applicable? So first we'll talk about individual, HUF, AOP, BOI, artificial juridical person. So these category of people who are there. Number one, individuals. We had studied in our chapter number 1, in lecture number 1, what is individual, what is HUF, what is AOP, what is BOI, and what is artificial juridical person. So for all these categories, the tax rates are divided into 3 parts. First of all, so this is for individual, guys. For individuals, we divide the tax rates into 3 parts. One are the normal individuals, including non-residents. So guys, non-residents, so if you are a resident of India, then you will get benefit of being a senior citizen or a super senior citizen. So if you are old age, then you will get discounted tax rates. We give benefit to our old age people. We give discounted tax rates to our old people. So discounted tax rates are eligible if you are old in the country. But if you are a non-resident, then guys, we will not give you discounted tax rates, even if you are old. Okay, even if you are old, we will not give you benefit of lower tax rates if you are a non-resident. So for a non-resident, any age, we give tax rates which is the normal tax rates which are over here. So up to 2,50,000, there is no tax on your income. 2,50,000 to 5 lakh, 5% of tax is there. 5 lakh to 10 lakh, 20% of tax is there. And above 10 lakh, above 10 lakh, 30% of tax is there. Above 10 lakh, 30% of tax is there. So these are the tax rates which are applicable for a citizen, for a normal citizen, okay? Not a senior citizen, but a normal citizen. And even for non-residents, this is the tax rate. So up to 2,50,000, zero tax. So if your income is up to 2,50,000, zero tax. 2,50,000 to 5 lakh, 5%. 5 lakh to 10 lakh, 20%. Above 10 lakh, 30%. So Rani is asking, sir, editor money that is 2 lakh is taxable in his hands or not? Of course, yes. The editor's salary of 2 lakh rupees will be taxable in his hands. Of course, yes. The answer is yes. All right. बिल्कुल पूजा, बिल्कुल सही कह रहे हो आप. ग्राफिक डिजाइनर को जो इनकम मिली वो भी टैक्सेबल होगी, बट ग्राफिक डिजाइनर के हाथ में टैक्सेबल होगी, वो मिस्टर ए के हाथ में टैक्सेबल नहीं होगी. मतलब मिस्टर ए के हाथ में उसकी टोटल इनकम टैक्सेबल होगी जो कि रॉयल्टी इनकम है 10 लाख रुपीस, और ग्राफिक डिजाइनर के हाथ में टैक्सेबल होगी 2 लाख रुपीस. दैट इज द डिफरेंस. ओके सर. Alright, so these are the tax rates, guys. And now to remember these tax rates, I'll give you a very simple formula. 2,50,000 to 5 lakh, 5%, above 10 lakh, 30%. Now this can be written in a different form also. So if your income is between 5 lakhs to 10 lakhs, okay, I'll give you a shortcut formula to compute these taxes. Okay, I'll give you a shortcut formula, and I'm bringing my calculator. You also have your calculator in place, guys. So I'll give you a shortcut formula of computing these tax rates. If your income is between 5 lakh to 10 lakh, suppose your income is 6 lakh rupees, okay? So if your income is 6 lakh rupees, guys, what you'll do is you will first write 12,500, then you will put a add sign. Your income is 6 lakh rupees. 6 lakh minus 5 lakh is 1 lakh rupees. So the lower limit is 5 lakh. How much income is over and above 5 lakh? It is 1 lakh rupees. So 1 lakh will be taxable at the rate of 20%. 1 lakh is taxable at the rate of 20%. So that is 20,000. I will add 20,000 to 12,500 and I will get my tax rate. I will get my tax rate. Tax amount. Tax amount is 12,500 plus 20,000. That is my tax amount. So where do you get this 12,500 from? Guys, the 12,500 is coming from this particular slab rate. 2,50,000 to 5 lakh. It is 2,50,000 multiplied by 5%. So 2,50,000 multiplied by 5%. This comes out to 12,500. So I'm adding this 12,500 in the below slab, and whatever is over and above 5 lakh rupees, that I'm multiplying with 20%. That is how I get tax of this particular slab. Now suppose if you fall under this slab, suppose your income is 12 lakh rupees, then what are you going to do? Guys, I'm going to first of all add 1,12,500. 1,12,500. So where do you get this 1,12,500 from? Guys, I add up this 12,500 and this 5 lakh rupees multiplied by 20%. 5 lakh rupees multiplied by 20% is 1 lakh rupees. So this particular slab is taxed at 1 lakh rupees. So in total, I get 12,500, and this 12,500 is added to the remaining income. Remaining income is 2 lakh, and the remaining 2 lakh rupees is taxable at 30%. So I'll multiply 30%. I get a figure of 60,000 rupees. So my tax is 1,12,500 plus 60,000 rupees. This is a shortcut technique to compute your taxes. This is a shortcut technique to compute your taxes. So if you are an individual, then these are the tax slabs which you will be eligible to. Whatever income you earn, all the incomes will be taxable as per these slab rates if you are an individual, except for certain incomes which are taxable at special rates. So there are certain incomes which are taxable at special rates. For example, casual income. For example, the capital gains which are eligible for 111A benefit, or the capital gains which are eligible for 112A benefit. All those are special rate income. So those incomes will not be taxable at this rate. Apart from that, all other income you will total and you will tax your other incomes, all other incomes apart from those special rate income at these slab rates. So these are the shortcut techniques which you can evolve so that you are able to quickly calculate the tax. That is very, very important to quickly calculate the tax. Okay. Got it, sir? So now what is the concept of rebate? Let's revise rebate. So guys, rebate means if you are a resident individual and if your income is below or equal to 5 lakh rupees. If you are a resident individual and your income is below 5 lakh rupees, then you get a benefit of rebate, which means your entire income will be free from tax. Your entire income will be free from tax, 100% of tax or 12,500, whichever is lower. So please note the slab rate. Please note the slab rate below 5 lakh. If your income was below 5 lakh, then you are falling under this first slab rate and your entire income is taxable at 12,500 rate, right? Your income tax is computed as 12,500, right? If your income is below 5 lakh, you need not pay a single penny in tax. This is the concept of rebate. So, if this is the concept of rebate, why was this concept not introduced over here itself? Sir, over here only, the act should have said that up till 5 lakh rupees, the tax is nil. That would have been a shortcut. Why they gave another section? Why 87A, another section? Why didn't they increase the slab rate, the minimum slab rate to 5 lakh rupees? Please answer in the chat box. I want answer from you, a very logical answer. Why this separate section is required? If they wanted to reduce the tax up to 5 lakh to 0, they should have increased this exemption limit to 5 lakh. Simple. Why a separate section is required? 87A to reduce the income up to 5 lakh to 0. Why a separate section is required? Why not increase this slab rate to 5 lakh rupees? Why not do that? I want answer in the chat box. The question is very simple. Please understand the question. Why is there need of 87A? If you wanted to reduce your income tax to 0 up to 5 lakh rupees of income, then you should have increased this slab rate. Why this income is, why this additional section is there? Perfect, Jyotish Raj, perfect. Perfect, Manav, perfect, Yashika, perfect, Bhupender, perfect, Vishal, Kirti, Alfia, perfect, Megha Tomar, Jyotish, Tanya Bhatt, Manav Khera, brilliant guys. It is very, very clear that you guys are studying direct tax properly and religiously because you are able to understand the concepts well. It is a proof of the fact. I am proud of all of you. Brilliant job, guys. Brilliant job. Reason is very simple. The benefit is given only and only to resident individuals. And this slab rate is applicable to non-resident individuals also. We didn't want to extend this benefit to non-residents. We didn't want to extend this benefit to foreigners. We wanted to extend this benefit only to resident individuals. Therefore, the rebate was given as a separate section. So there is a separate section for it. Next, what will be the surcharge? Will there be surcharge? Yes, the high net worth individual, the individuals who are earning a lot of money from 50 lakh to 1 crore rupees, they will pay surcharge at the rate of 10% of tax. Then people who are earning income from 1 crore to 2 crore, they'll pay 15% of tax at the as the surcharge. If your income is 2 crores to 5 crores, then you will pay 25% of the tax as the surcharge. So these are the surcharge rates. If your income is above 5 crores, you will pay 37% of the tax as surcharge. In case of dividend or income under section 111A, 112A, surcharge is restricted to 15%. So these are two categories of income on which the surcharge is restricted. Category number 1, dividend income. Category number 2, income taxable. I was talking about capital gains, right? Income taxable under 111A and 112A. I'll be discussing these two topics, these two sections under the capital gains revision. Okay, sir. Then yes, last but not at all the least, health and education cess. Health and education cess, 4% of tax plus surcharge is applicable in all cases. Whatever income you earn, health and education cess is applicable to all those incomes. Okay, guys. The next concept is marginal relief. A very, very important concept. A very, very important concept. Concept is marginal relief. From your exam standpoint also, it is very, very relevant. It is very, very important. Marginal relief. So marginal relief is emanating as a concept from a very big problem caused due to surcharge. Surcharge poses a very big problem because of the surcharge, which means income of more than 50 lakh, 10% additional tax is to be paid. This is the provision of surcharge, and this provision gives a very big problem to all of us. What is the problem, guys? Let's analyze the problem first, and then I will tell you why this marginal relief was introduced in the Income Tax Act. So suppose someone's taxable income is 49 lakh 90,000. Case 2, the taxable income is 50 lakh 10,000. Okay. There is a gap of 20,000 rupees. Case 1, 49 lakh 90,000. Case 2, 50 lakh 10,000. The gap is only 20,000 rupees. This person is earning 20 lakh rupees more than case 1. This is the scenario, okay? Case 1 and case 2. Although the income is increasing marginally means a very small portion of income is increasing. From 49 lakh 90,000, it is increasing to 50 lakh 10,000. So there's a very small increase which is happening in the income. But guys, a very big change is happening. What is that big change? Case number 1, surcharge not applicable. Case number 2, surcharge applicable. Case number 1, surcharge not applicable because it is lower than 50 lakh. Case number 2, surcharge applicable because income is above 50 lakh. A big change, a sea change happening over here. What is the repercussion of this change? Repercussion is the tax liability as per the slab rate is computed in front of you. How did I compute it? 49 lakh 90,000 minus 10 lakh rupees multiplied by 30% plus 1 lakh 12,500. That is how I compute the tax amount. So minus 10 lakh multiplied by 30% plus 1 lakh 12,500. The amount is 13 lakh 9,500. When I compute tax in case number 2, the tax is coming out as 131,550, but the surcharge, additional surcharge is coming out to be a very high amount of 10%, 1,31,550. So the total tax and surcharge in case 1 is 13 lakh 9,500. In case 2 is 14 lakh 47,050. There is an increase of 1,37,550. So imagine a weird situation. Imagine a situation which is very, very weird, which is, sir, income is increasing by 20,000 and the tax is increasing by 1,37,550. Wow, what a big loss. Then I will try to restrict my income at 49 lakh 90,000. I'm very happy with 49 lakh 90,000. So once I attain the figure of 49 lakh 90,000, I will tell my customers, I don't want to earn more. No, please go back. I won't sell my product to you. I won't sell my income, my services to you. Please go back. I'm not earning anything from you. I don't want to earn anything from you. Please go back. What a weird situation. It is a negative incentive to earn money. 20,000 rupees of additional income and the tax and surcharge which is there, that is 1,37,550 additional tax and surcharges there. What a weird situation. What a difficult situation to be in. Now, I would like to ask you one very important question. Okay, I want to ask you a very important question, and I'm making a line over here. Just look at this line. Okay, so this represents 49 lakh 90,000. This represents 50 lakh. And this represents 50 lakh 10,000. These are the three income brackets which we are in. Okay, there is an increase of 10,000 over here. There is an increase of 10,000 over here. This is first 10,000 increase. This is second 10,000 increase. Now, you tell me what is the reason. You tell me what is the reason of this problem. What is the reason of this problem? This is a problem in front of me. My income is 20,000 increasing. My tax is increasing at the rate of 1,37,550. This is a problem in front of me. Please tell the reason of this problem. Reason of this problem. I give you 3 options, or I can give you 4 options. Okay. Option number 1, the reason of this problem is first 10,000 rupees. Option number 2, the reason of this problem is second 10,000 rupees. Option number 3, the reason of this problem is both 1 and 2. This is option number 3. Option number 4, sir, can't say. Sir, early in the morning, you have disturbed our sleep. We were sleeping merrily. We have the full day with us. We are feeling so tired. We have not even taken a shower. We are in our bed, still in our quilt. You are just eating away our head. So we are absolutely not in correct state of mind. So option number 4, can't say, sir. You only tell us what is the answer. We can't say. So these are the 4 answers which are there in front of you. Please tell me what is the correct answer. Option number 1, the first 10,000. Option number 2, the second 10,000. Option number 3, both first and second 10,000, 10,000. Option number 4, can't say. We can't say anything. What is the correct option? Option number 1, option number 2, option number 3, option number 4. Kirti Batra is saying fourth option is the best. Yes, I agree with you, Kirti Batra. I also was sleeping merrily. I have disturbed your sleep. I have disturbed my sleep. It is very, very bad. I don't know why this happened. No. Oh, one more person of option number 4. Kartike Mishra. Wow, Kartike Mishra. Brilliant. Option number 4 is the best. Okay. Rest. Other students. Bhupender Aneja is also saying option number 4. Very good. So please give me the correct answer. Megha Tomar is saying can't say. Third option. Second option. Okay. Vidhi Podar is saying second option. Perfect. Second option. Rani Singh is saying first option. Manimala is saying third option. Pankaj Kumar is saying third option. Jyotish is saying second option. So guys, the correct answer is that the problem is the second 10,000. The correct answer is option number B. The problem is this second 10,000. If my income was up till 50 lakh, I would have faced no problem at all. I would have faced no problem at all if the income was up till 50 lakhs. But since my income has exceeded 50 lakh rupees, due to this second 10,000 rupees, I am facing a problem. This is a problem for me. So what is the problem? Problem is this second 10,000 is the problem for me. I shouldn't have earned this second 10,000. So the correct answer is option B. This 10,000 is the problem for me. Guys, on this 10,000 rupees, suppose I am paying taxes to the extent of 30%. So the maximum surcharge which I can afford on this particular 10,000 rupees. So what is left over with me after surcharge? What is left over? The amount which is left over with me after the income tax. Income tax is 30%, right? So 10,000 additional income I'm earning. Out of that, 30% I'm paying as taxes, which is 3,000 rupees. Whatever is left with me is 7,000 rupees. 7,000 rupees is left with me. So guys, the maximum surcharge that I can pay on this additional 10,000 rupees is 7,000 rupees and not more than that. That is the maximum surcharge I can pay. I cannot pay surcharge over and above this 7,000 rupees. This is the maximum surcharge I can pay. All I can do is give everything to the Indian government. Okay, out of this 10,000, 3,000 I'm paying as taxes. So I can at max give a surcharge of 7,000 rupees to my government of India. I cannot pay any additional surcharge to government of India. I cannot pay it. So I need a relief. I need a relief. I don't want to pay 1,37,550. I don't want to pay this surcharge 131550. I don't want to pay 131550. I don't want to pay. So if I ask you, what is the maximum amount do you want to pay? The maximum amount that I want to pay is 7,000 rupees. Please cancel this 131550. I can at max pay 7,000 rupees. I cannot pay this 131550. This is getting my entire mathematics wrong. It is landing me into trouble that my income is increasing by 20,000 rupees and my tax liability is increasing by 137,550. I don't want to pay 131,550. Then I ask you, what do you want to pay? What is the maximum that you want to, that you can pay? I tell you that on this 10,000, I will pay tax of 30%. So the maximum amount of surcharge that I can pay is 7,000 rupees. So please cancel 131550. I am requesting Government of India, please cancel 131550 and write 7,000 over here. So what is the relief that you are asking? 131,550 minus 7,000 rupees. The relief which you are asking is 1,24,550. That is the relief which you are asking, and this relief is known as marginal relief. The surcharge which you are liable to pay minus the surcharge that you can maximum at max pay. That is the amount of marginal relief that you are expecting from Government of India. So you are requesting the Government of India, hello Government of India, listen to me. Over here, I have the surcharge as 131,550. Okay, please give me a marginal relief of 124,550. How do we compute this marginal relief? How do we compute this marginal relief? There's a formula to it. And please don't mug up the formula, okay? Because I've given you the logic. So mug up the logic, not the formula, okay? What is the formula? Let's read the formula also. Calculated surcharge, whatever is the surcharge, and in our case, the calculated surcharge is 131550. Calculated surcharge minus 7% of extra income. Sorry, 70% of extra income. Whatever income is in excess, 70% of that income is the maximum amount of surcharge that we want to pay. Okay. So 70% of surcharge we want to pay on extra income. 70% of surcharge we want to pay on extra income. That is the maximum amount of surcharge that we want to pay. This is the formula of marginal relief. Which formula you don't need to mug up, you don't need to remember. You just need to remember this example. We are having surcharge of 131550. We want to pay surcharge of only 7,000 rupees and nothing more and nothing less. We want to pay a surcharge of only 7,000 rupees. So what is the marginal relief? Marginal relief is 131550 minus 7,000 rupees. It is 124550. 124550. This is the amount of marginal relief that we are requesting from Government of India. So what is the effective surcharge which you are paying in this particular case? The effective surcharge which we are paying is 7,000 rupees, and we want to pay surcharge of 7,000 rupees only. Guys, this is the concept of marginal relief. A very, very, very important concept that is there in your syllabus, and your examination also a question might come from marginal relief separately. 3 marks, 4 marks question. It might come from marginal relief itself. Okay, sir, got it. And now moving on to the last topic, some tax rates which are belonging to the companies or other sort of organizations like AOP, BOI, firm, LLP, etc. AOP, BOI we have already discussed in our earlier slide. This is about firm, LLP, and the company. So in case of a firm, the tax rate is 12%. If you are a partnership firm or an LLP, the tax rate is 12%. Surcharge is 12% flat if your income is above 1 crore. Okay, no concept of 50 lakh, 1 crore, 10 crore, no concept of that. Flat 12% surcharge if your income is above 1 crore. If you're a company, then if you're a domestic company or you're a foreign company, okay, if you're a domestic company, then guys, the tax rate will depend on your gross turnover. If your gross turnover is below 400 crores in previous year 1920, then your rate of tax is 25%. If your gross turnover is above 400 crore in previous year 1920, then you pay a tax of 30%. So if you're a small company, which means your turnover or gross receipt is 400 crores or less in previous year 1920, then you pay a tax rate of 25%. If you are a big company, which means your total turnover is above 400 crores in previous year 1920, so we'll see previous year 1920 to fix this benchmark, is 400 crores, then your tax rate is 30%. In case you are a foreign company, then you are taxable at a flat rate of 40%, whether you are a big company or a small company. Okay, whatever company you are taxable at a flat rate of 40%. That is what the tax rate is. Okay, sir. Then what about surcharge? What is the surcharge applicable on companies? So guys, the surcharge which is applicable on companies, if your income is less than or equal to 1 crore rupees, that is the first slab rate. Then if your income is more than 1 crore rupees, that is the second slab rate. So these are the two slab rates which are there in case of companies. So if your income is 1 crore rupees or less, if your income is less than 1 crore rupees, then the surcharge which you are required to pay is nil. You don't have to pay any surcharge in that particular case. So income is below 1 crore. I am writing the surcharge as nil. You need not pay any surcharge if your income is below 1 crore. If your income is above 1 crore, then you are required to pay surcharge. If your income is above 1 crore, if your income is up to 10 crore, which means less than 10 crore but above 1 crore, then you need to pay surcharge at 7% and 2% for domestic company and foreign company. DC means domestic company, FC means foreign company. So if your income is below 10 crores, below or equal to 10 crores, then your domestic company surcharge rate is 7%, foreign company surcharge is 2%. But if you are a company whose turnover is more than 10 crore, your income is more than 10 crore, then guys, your domestic company will be taxable at a surcharge of 12% and foreign company will be taxable at 5%. So these are the big companies above 10 crore company. These are companies which are small companies from 1 crore to 10 crore. So 7% and 2% over here and 12% and 5% over here. Please note that these tax rates are with respect to assessment year 22-23. That is the slab rate which is applicable to you. AY 22-23 is the rate at which these companies are taxed. So these rates are belonging to AY 22-23 assessment year. So yes, some students are saying that I need to send these slides to the group. Okay, I will share these slides to the group, guys. In the WhatsApp group, I will share these slide deck with you. Okay, so yes, guys, these were the provisions which we need to complete today, and hereby we complete our first chapter. Good morning and welcome to this session, guys. And in this session, we are going to discuss a very important topic of your syllabus, not only of intermediate but also of final students. And the name of the topic is residential status. So in this chapter, we are going to discuss, in this particular session, we are going to discuss the chapter of residential status. And guys, this entire week, Tuesday as well as Thursday, I'm going to take lectures on residential status itself. And the coming Sunday, the Sunday after Holi, on that particular Sunday, I'm going to take a test of residential status. So test of residential status will be there on the Sunday, which is after Holi. So that is the plan which I am working on these days, and you guys also have to work on the same plan. And the mission of all of us is very same, very common. The mission is very clear. The mission is June 2022 attempt. We need to clear intermediate. We need to clear group 1 in June 2022 attempt. That is the mission which all of us are chasing, which all of us are pursuing. And guys, with that mission in mind, I start today's revision lecture on the chapter of residential status. So yes, these are certain learning outcomes which we are going to see in the residential status chapter. After the chapter is over, you should be able to understand all these features of residential status chapter. Let me go through these features one by one, and let me take them up one by one. So first of all, you should understand why do we need residential status topic. Okay, why is residential status so essential? That is the first thing which we need to know right now. Good morning Achal, good morning Yash, good morning Yash, good morning Kirti Batra. Group 2 lectures, nothing has been planned as of now, Yash, but soon we'll be planning group 2 lectures as well. Kirti Batra, good morning everyone. Yes, a very fine morning, and we are going to start the much coveted chapter residential status in today's session. Okay, sir. So the learning outcomes of this particular chapter at the end of this particular session, or 2 sessions, okay, Tuesday and Thursday, 2 sessions, we'll be able to understand the objectives of this chapter, residential status. What is the objective of this particular chapter? That is the first learning outcome which we are going to see. So objective of residential status, why do we need to study residential status? Then how do we compute residential status for individual, HUF, company, AOP, BOI, all the kind of persons who are there? How can we calculate, or how can we know the residential status? That is the most important thing which we are going to discuss in this particular chapter. And yes, guys, out of all the persons, the residential status of individuals is the most important thing that you should learn by heart. Okay, this is one very important topic which will come in the examination. It has been coming in the examination regularly in past. Good morning Deepti, good morning Akanksha, Suman Bharti is there, Saloni is there, Karan Kumar is there. Good morning everyone. Yes, so residential status has these parts, guys. And guys, at the end of this particular chapter, we are going to study what is the relevance of residential status in each of these incomes. So kind of incomes which are there, these are the kind of incomes which are there: income which received in India, income which is accrued in India, income which is deemed to be received in India, and income which is deemed to accrue or arise in India. These are 4 kinds of income. And how do residential status impact each of these income? That is also what we are going to study at the end of this chapter. So these are the learning outcomes of this particular chapter, which is the residential status. Now guys, before I start this particular chapter, I need to make a concept very clear in your mind. The concept is of turning a word into opposites. So guys, when you were young, you used to study antonyms. What are antonyms? Antonyms means opposite of a word, right? So what is antonym of good? Please write in the chat box. What is antonym of good? Antonyms, synonyms and antonyms. So what is antonym? What is opposite of, in simple words, opposite? What is opposite of good? What is opposite of good? I want in the chat box. This is, guys, nursery class, or first class or second class, when we used to start studying English language, or second class or third class. At that point in time, we used to study all these things. What is antonym of good? Perfect, perfect. Antonym of good is bad. Perfect. What is antonym of sunrise? What is antonym of sunrise? What is opposite of sunrise? What is antonym of sunrise? Perfect, bad. Hardik Tank, Garima Jain, Jyotish, Saloni, Riddhi, Debraj. Perfect. What is antonym of sunrise? Antonym of sunrise. What is antonym of sunrise? Yes, you are right. Antonym of sunrise is sunset. It is opposite words, okay? Opposite. We are talking about opposites. When you have to convert a word into its opposite, then you try searching for a word which is exactly opposite of a particular word. Guys, in this particular chapter, I need your skill of converting words into opposite, or situations into opposite situations. I'll give you certain circumstances. You have to convert that circumstance into an opposite circumstance. This is one skill that I want from all of you in this particular chapter called residential status. If you were bad at this skill when you were in your third class or fourth class, I am very sorry. You will not be able to conclude this chapter very efficiently. You will not be able to carry on this chapter very efficiently if you were bad in this skill, which is converting words into opposites. All right. Sir, what do you mean? You are just, playing quizzes with us. You are just puzzling us. No, guys, I'm not puzzling us. So I'll ask a very simple question. The condition for passing CMA Intermediate. Let me expand this particular part so that you are able to see it properly, okay? Yes, please see this part. The condition for clearing CMA Intermediate, the condition of clearing CMA Intermediate is that in individual subjects, you have to score more than or equal to 40% marks. And in aggregate, you have to score more than or equal to 50% marks. This is the condition of qualifying CMA Intermediate. Guys, the conjunction which is adding these two parts is and. So now my question to you, which you have to answer in the comment box. This and means both the conditions are to be satisfied, or even if one condition is satisfied, that is also okay. Both the conditions are satisfied, or even if one condition is satisfied, that is also okay. I want answer in the chat box. I want answer in the chat box. What is the qualification? What is the categorization? What is the condition of qualifying CMA Intermediate exam? How do you pass in CMA Intermediate exam? That is what I'm asking. Okay. So there are two things which are written. Individual subjects, you have to score more than 40%. Aggregate, you have to score more than 50%. Both the conditions are to be satisfied, or only single condition is to be satisfied? Answer is both the conditions are satisfied. It is added by conjunction and means both the conditions are to be satisfied. I want to convert this into opposite. I have to convert this pass into fail. I have to convert this pass into fail. I have to convert this into opposite. So if I want to convert this into opposite, individual subjects, if you score less than 40%, you are fail. Or aggregate, if is less than 50%, again you are fail. Now the conjunction which is adding these two parts is or. Now please tell me in the chat box whether both the conditions are to be satisfied, or either one of them is to be satisfied. One of them is to be satisfied, or both the condition is to be satisfied to fail in CMA Intermediate. The conjunction which is there is or. Please tell in the chat box. Only one condition is to be satisfied, or both of the conditions are to be satisfied when we write the word or. Either one, perfect. Either one, anyone, perfect. Garima Jain, Chirag Khemani, Jaydeep Das, Payal, any one of them. Vijay Salgar, Vishnu Prasad, Alfia, Biginepalli Bhaskar. Biginepalli Bhaskar, you are wrong. It's not both of them. It is one of them, because or is the conjunction. Or is the conjunction. So it is either one of them. If either one of them is fulfilled, then you fail in CMA Intermediate examination. So to convert a situation into its opposite situation, to convert a situation into its opposite situation, what you have to do is you have to first of all convert the signs into opposite signs. So greater than equal to gets converted into less than. That is the first thing that you need to do. Second thing which you need to do is convert and into or. It becomes the opposite situation. So if you want to pass the examination, if you want to pass CMA Intermediate, then you have to follow these two conditions simultaneously. Both of the conditions are to be satisfied. But if you want to fail in CMA Intermediate, obviously no one wants to fail in CMA Intermediate, but if you were to fail in CMA Intermediate, then guys, either one of the conditions are to be satisfied. Either you score less than 40% marks in individual subjects, or you score less than 50 marks in aggregate, then you will fail in CMA Intermediate examination. That is the condition, or that is the way the positive situations or the any one situation is converted into its opposite. This is the way. Sir, why did you tell us this way? Just wait, I will explain it in my future slides. In my further slides, I will explain all of this stuff, why I have explained this. You will be able to understand it well. Now, the question is, sir, what is the purpose of this particular chapter known as residential status? Sir, why are we studying this chapter? Why is there a need of this chapter? Sir, we are earning income. You please tell us what is the tax rate. You apply tax on that particular income and that's it. Why do you want to publicize the residential status chapter so much? What is the relevance of residential status? Sir, income is earned. If income is earned, tax is paid. Simple as that. Why is residential status there in our syllabus? Why is residential status relevant? Guys, residential status is relevant because there are multiple governments like Indian government and United States of America. I've taken example of two governments, Indian government and United States of America government. Guys, Indian government has to recover taxes from its residents who are there in India. Similarly, US government has to recover taxes from its residents who are there in USA. Now, guys, before coming to residency, let me tell you, Ram is a citizen of India and Joseph is a citizen of United States of America. Ram has been born and raised in India. He has done all his schooling, college, everything from India. He's also working in India. Now tell me, who has the right to recover taxes from Ram? Please write in the chat box. I want answer in the chat box. Ram has done his schooling from India. Ram has done his college from India. Ram has done entire education from India. Who is eligible to recover taxes from Ram? Is it the Indian government or is it the US government? I want answer in the chat box. Please tell me, who should recover taxes from income of Ram? Who should recover taxes ideally? Absolutely, guys. Absolutely. It should be India. You are right. Jyotish, Kirti, Akanksha, Deeptesh, Isha, Amit, Shilpi. You are absolutely right, guys. Absolutely right. The right to recover taxes should be with Indian government. Similarly, Joseph, who's born and raised in United States of America, he should pay taxes to United States of America because the place where Joseph is working is also United States of America. So the taxes should be paid in United States of America. So respective countries have the right to recover taxes from their respective citizens, right? Right, sir. Now, I'll give you a twist in the tale. Ram is born and raised in India, has done his schooling in India, has done his college in India, has completed his higher studies in India, has done everything in India. But when it came to job, he was placed in campus. And guys, in the campus, Ram got selected in a company which is located in United States of America. So soon as Ram finished his entire studies, he went abroad to pursue his career. He got selected in a company in United States of America. Suppose name of the company is Oracle Systems Corporation, one of the biggest giants of software technology in the world, not only in the country, but in the world. So Ram got selected in United States of America, Oracle Systems Corporation. He flew back to United States of America for pursuing his job. Now, guys, please tell me, who should recover taxes from Ram? Is it the Indian government or is it the United States of America government? Please consider this fact. Please consider this fact. Please be a little patriotic, okay? मेरे देश की धरती सोना उगले उगले हीरे मोती. Ram has been born and raised in India. Ram has done his schooling in India. Ram has played in the fields of India. Ram has acquired the skills and knowledge in India. Ram has ever been in India. He is born and raised in India. Please have some patriotism before giving the answer to me. Please have some patriotism before giving answer to me. Who should be eligible to recover taxes from Ram if after completing education, Ram went to United States of America for earning income, for earning salary? Who should recover taxes from India, from Ram? Is it Indian government or is it United States of America government? Please be patriotic, okay? प्लीज अपने वतन की मिट्टी को ध्यान रखना भाई, अपने वतन की मिट्टी की खुशबू देखना, बारिश में जो वतन की मिट्टी की खुशबू आती है उस खुशबू को प्लीज दरकिनार मत करना, उस खुशबू का वास्ता तुम्हें आंसर देते हुए जरूर उस खुशबू का वास्ता रखना। अरे कर्ज अदा करना है उस खुशबू का हमको। तो देखते हैं कौन सी गवर्नमेंट टैक्स रिकवर करने के लिए एलिजिबल होगी। सो इट्स आकांक्षा सेज यूएस गवर्नमेंट, परफेक्ट। Harsh Katoch is there. Harsh Katoch, you were not there in yesterday's class. I want an explanation for that. Khair, he has given the right answer. USA government. Absolutely, guys. Most of you are saying USA government. Guys, what is the reason? No patriotism is there here. Very good. This is amazing. Chirag Khemani saying no patriotism, no emotions when law is there. Law is emotionless. Law doesn't see any emotion. Absolutely correct. No patriotism. Chirag Khemani is absolutely right. No patriotism over here. We will go by logic, and the logic says since the income is being earned in United States of America, since the income is being earned in United States of America, the right to receive taxes, the right to levy taxes rests with United States of America government and not with Indian government. Absolutely, we cannot be emotional about it. We cannot be sensitive about it emotionally. No, there's no emotional quotient over there. We have to be logical, and the logic is the place where income is earned, the place where income is earned, over there the income tax should be paid. So Ram should pay taxes to the United States of America, government of United States of America, tax department of United States of America. Ram should pay taxes over there. So guys, the conclusion of the matter is, the crux of the matter is, while levying taxes, citizenship is irrelevant. Whose citizen are you? Where are you born? Whose passport do you have? Whose ration card, Aadhaar card do you have? Absolutely irrelevant. All these things are absolutely irrelevant. Whose citizen were you there? Where did you complete your schooling, college, etc., etc.? Absolutely irrelevant. What is relevant is how much time did you spend in that particular year, in that particular country? That is the residential status. Where are you actually residing? Because the place where you are residing, that place will be the place where you are actually earning income. If I'm residing in India, then I'm earning income in India. If I'm residing in USA, I'm earning income in USA. So guys, it cannot happen that I'm residing in India, but I'm earning my primary source of income from USA. No, can't happen. If my business is in USA, I have to fly down to USA and stay over there. That is a different thing. That I have multiple branches. Branches is just a small part of your business. But if your main business is in USA, you have to stay in USA. Yes, you can have branches in all around the country, all around the world, but you have to stay on your principal place of business. Wherever your principal place of business is, you have to stay over there. So if you are in United States of America, you will earn income over there. So the condition to levy taxes is not citizenship. It is not citizenship. It is not patriotism. It is not mere desh ki dharti sona ugle ugle heere moti. No, not at all. The relevant consideration is residential status. Wherever you are a resident of, wherever you are spending your most part of the year, where you are residing, where you are doing your economic activities, where doing your daily activities, that country will be country of your residency, and that government will have the access to or have the right to tax you. That is the relevance of this chapter, residential status. So I'm now going to distinguish between residential status and citizenship. Residential status versus citizenship. So guys, who's a resident? First of all, let's talk about resident, okay? Who's a resident? A resident is a person who's by birth a resident or by process of naturalization he's a okay, sorry. First of all, we'll discuss who's a citizen, okay? First of all, we'll discuss who's a citizen. Citizen is a person who is by birth a citizen of any country, or in the process of naturalization, he becomes citizen of that particular company. So what do you mean by naturalization? Naturalization means, guys, you belong to India, although you are a citizen of India, but you marry a girl who's in Russia, or you marry a girl who's in the United States of America. Now, my many students, boys, will be really excited by this thought that yes, sir, if we marry a girl who's belonging to Russia, will we become a Russian? Yes, you will also get citizenship of Russia, subject to certain terms and conditions. If you marry a girl from Australia, and same goes for girls also, if you marry a boy from outside the country, then from the process of naturalization, you get citizenship of that particular country, you get citizenship of that particular region. So that is how your citizenship is determined based on naturalization. Through natural techniques, through naturalization, if you are not born in that particular city, in that particular country, but you get married to a person who's belonging to that particular country, you become a citizen of that particular country. Next is you get a right to have passport of that particular country. Okay, so if you get a right to have a passport of that particular country, then you are a citizen of that particular country. Then citizens have voting right. You have right to vote. Citizens have voting right. Citizens have no restriction on their entry and exit. They can enter the country at any given point in time. They can exit the country at any given point in time. There's no visa requirement for citizens. So for citizens, no restrictions on entry and exit is there. Then citizenship generally remains the same for all the years. Okay, guys, Ram can visit USA for a short period of time. In the next year, he might come back. He might say, no, I don't like the job. I want to be in India. So residency might change from year to year. But if once you are a citizen of a particular country, it doesn't change. It becomes constant for the years to come. So it remains same for all the further years. Yes, Junaid Alam is absolutely right. Very good, Junaid. Junaid is saying, sir, voting rights, no visa required. Perfect, Junaid. Now let's talk about residency. Guys, residency doesn't have any voting rights. So you don't get voting rights if you're a resident of a particular state. Resident means you are just staying over there, okay? For income tax purposes, you will be taxed. That's it. That's the only meaning of residency, okay? You don't get citizenship rights if you're a resident. So no voting rights are there for residents. Entry and exit is restricted. You don't enter and exit freely. You have to get a visa to enter that particular country, even if you're a resident, okay? Because residency is relevant from an income tax perspective, not from the FEMA perspective or foreign remittance and foreign exit and entry perspective. Those are governed still by the citizenship norms. Citizenship is relevant for entry and exit. So restriction on entry and exit. So if you're a resident of USA, doesn't mean that you will get free access to United States of America. No, you will come on work visa. You will come on work visa and you will have to go back when your work visa is expiring. No passport is there for residents. Period of stay, control and management is the relevant criteria through which residency is determined. So citizenship was determined by birth or by naturalization, but residency is determined through period of stay or control and management of that particular entity. So in case of individual, it is period of stay. In case of companies, HUF, AOPBOI, which are not individuals, which are not natural persons, it is control and management. Whose control management is where? That is the determining criteria of determining the residential status. So these are different for different years. So residency can be different for different years. Citizenship generally is same for all the years. So these are the differentiating criteria of residency versus citizenship. For income tax purposes, guys, for income tax purposes, please tell me what is relevant. Is it citizen or is it resident? Please write in the chat box what is relevant. Jyotish says residency may change. Perfect, Jyotish, from year to year, but citizenship remains as perfect. Jyotish, very good, Jyotish, superb. Junaid says time period, no passport, no voting right, may change from year to year. Junaid is absolutely right. So guys, in the chat box, please write, from an income tax perspective, am I bothered about citizenship or am I bothered about residency? What am I bothered about? From income tax perspective, am I bothered about residency or citizenship? Oh yes, absolutely right. You guys are genius. I have geniuses in my class. Brilliant. Debraj, Nagnath, Tanishk, Kirti, Dhruv Jain. Oh, Dhruv Jain, good morning. Dhruv Jain has woken up. Finally, he's there in our class. Good. Shilpi Sharma, Deeptesh, Pankaj Kumar, Yashika, Khushi, Rohit, Tanya, Miraki, Disha, Megha, Anushka. Everyone is absolutely right. For income tax purposes, residency is relevant. Now we are going to decide, now we are going to determine how do we decide whether a person is resident of a country or not. That is what we are going to start now. And guys, we are primarily going to see two rules of residency. We are primarily going to see two rules of residency. Rule number one, if you are there in India for more than or equal to 182 days. So guys, almost 6 months, okay? If you are there in India for more than 6 months, but it's not exactly 6 months, it's 182 days. So if you are in India for more than or equal to 182 days, then you become a resident in India. If you are in India for more than or equal to 182 days, this is the base rule 1. So the first rule and the primary rule, this is the primary rule of residency of an individual, okay? Because guys, company don't have legs, okay? Company cannot board a flight and go away to United States of America. So for companies, period of stay will not be relevant. For HUF, period of stay will not be relevant. For AOPBOI, period of stay is not relevant. For only individual, period of stay is relevant for deciding whether individual is resident or not. Please remember this, okay? So how many days should an individual be in India? How many days, for how many days should an individual be in India to become a resident of India? Answer is 182 days or more. 182 days or more, then he becomes a resident of India. And sir, what happens if he becomes a resident of India? The result is Indian government will have a right to tax that particular person. So guys, suppose if Joseph, in my last example, suppose if Joseph stays in India for 190 days, suppose if Joseph stays in India for 190 days, then who will get access to tax Mr. Joseph? Indian government will gain access to tax Mr. Joseph. Income tax department of India will get access to tax Mr. Joseph if Mr. Joseph stays in India for more than 182 days. Good morning, Tanupriya. Finally, Tanupriya has woken up. Tanupriya is usually late in all the classes. So today also she is late by 29 minutes. But nonetheless, Tanupriya has joined. I'm happy. Very good. Good morning, Tanupriya. Okay. So Mr. Joseph is taxable in India. If Mr. Joseph is taxable in India, why? Because he stayed in India for more than 190 days. But sir, Mr. Joseph was born in USA. His entire schooling and life and college and girlfriends and relationships and marriage, everything happened in United States of America. So what? I'm not bothered. If he has stayed in India for 190 days, which is more than 182 days in the last previous year, I will say that this particular person is taxable in India. I will definitely say that. So the first base rule which I'm going to explain now is, if you are in India for more than 182 days, more than or equal to 182 days, then this particular person is a resident of India. And if that person is a resident of India for less than 182 days, if he is residing in India or he is staying in India for less than 182 days, then I will say that he is a non-resident in India. He is not a resident in India. Base rule 1, very simple. If you stay in India for 182 days or more, you are a resident of India. If you stay in India for less than 182 days, then you are not a resident in India. That is the conclusion that I am drawing. Now guys, this was a very simple rule, okay? But this rule can be exploited. How, sir? How this rule can be exploited? Guys, there's very simple way of exploiting this particular rule, okay? A person who's resident of India since past many years, he has been earning income in India, he has been a resident of India, he has always been in India, and he has always given tax to Indian government. Now, suppose there is a year, which is the next year, which is coming. So today we are standing in March, April is starting. I know that in the month of April, I'm going to sell my house property in crores and crores of rupees. I will gain capital gain of crores and crores of rupees. So to avoid income tax, I might play some strategies. To avoid income tax, I might play some strategies. So what can be one of the probable strategy? Guys, the probable strategy is that I might fly away outside India in this particular year and can stay outside India for more than 182 days. I was a resident in past. I will be a resident in future. But in the current year, to avoid my tax liability, I might fly away from India for more than 182 days and I will avoid the residency rule of residential status. To avoid this loophole, to avoid people from doing this, current year's period of stay was again clubbed with earlier year's period of stay. So now I get on to the second rule of residency. Now I get on to the second rule of residency. And what is the second rule of residency? Guys, second rule of residency is that if you are in India for less than 180 days, typically you should be a non-resident, but no, I will not consider you as a non-resident. I will again see rule number 2. Guys, the rule number 2 is that yes, you are in India for less than 182 days, but are you in India for more than equal to 60 days? You should be in India for at least 60 days, okay? Approximately 2 months, okay? So are you in India for more than or equal to 60 days? Question. And were you in India for more than 365 days in last 4 previous years? So I have combined current year's period of stay with previous year's period of stay to see the combined effect of that on residential status, so that you are not able to avoid residential status by not being in India for one of the years. You do not avoid residential status in that particular scenario. So if you are staying in India for more than 182 days, matter finishes. You are a resident of India. Indian government has the right to tax you. If you are in India for less than 182 days, then I have to further see condition number 2, rule number 2, which is, are you in India for less than or more than equal to 60 days? If yes, then I will see your period of stay in last 4 years. Were you in India for last 4 years, 365 days? Were you in India? If answer to both these situations is true and true, then you become a resident. If you were in India in the last year for 60 days, okay, and in the previous 4 years, last year 60 days, previous 4 years, if in the previous 4 years you were in India for more than 365 days, if both the conditions are cumulatively satisfied, the condition is conjunction used is and not or, which means both the conditions are cumulatively satisfied. If you satisfied these two conditions cumulatively, then you become a resident of India. You become a resident of India if both these conditions are cumulatively satisfied. And guys, now I want you to find out opposite of this, okay? I want you to find out opposite of this. Opposite of this is, if you are in India for less than 60 days, or now one of the conditions are to be satisfied, not both, one of the conditions are to be satisfied. If you were in India for less than 60 days, or if you were in India for less than 365 days in last 4 previous year, then I will consider you as a non-resident. As a non-resident. So guys, residency doesn't only depend upon your period of stay only in the year under consideration, but it also depends on your period of stay in the past 4 previous years. We don't want to give you an easy giveaway, okay? This is not a giveaway. We cannot forego your residential status just on the basis of 1 year of your period of stay. No, we cannot forego our residential status just based on your 1 year period of stay. 1 year period of stay can be manipulated. 5 years period of stay cannot be manipulated. So we have attached twin conditions for residential status for individual. Number 1, he has to stay in India. He has to stay in India in the past year, the year in which we are considering the residential status. He has to also stay in India for some part of the last 4 preceding previous years. If cumulatively you fulfill both the conditions, both of these conditions, then you become a resident. So condition number 1, more than 60 days stay in India in the last year, the year for which we are determining the taxes, and more than 365 days in last 4 previous years. So whatever are the last 4 previous years, you have to stay in India for more than equal to 365 days for last 4 previous year. If both these conditions are cumulatively satisfied, then guys, you become a resident of India, and yes, Indian government will have a right to tax you. If not, if you fulfill, if you don't fulfill any one of the conditions, that you are not in India for less than 60 days, you are in India for less than 60 days, then or you are there in India for less than 365 days in last 4 previous years, then you become a non-resident in India. And yes, further we have one more rule which we are going to study now. Let me take certain questions which are there. All right. क्वेश्चन इज, सर अगर इंडिया में रेजिडेंट नहीं होंगे तो कहीं तो रेजिडेंट होंगे, वहां भी इनकम पे टैक्स पे करना होगा, तो कैपिटल गेन पे वहां भी तो टैक्स पे करना होगा ना. एब्सोल्युटली श्रद्धा पोदार, very true. Shraddha Podar is absolutely right. Sir, if we are a non-resident in India, suppose we are a non-resident in India, okay, we fall under this category, we are a non-resident in India, okay, and we are trying to avoid tax by being a non-resident in India, suppose, okay, but sir, at that point in time we might be a resident in some other country, right? At least we'll be staying somewhere else, so we might be a resident over there. So guys, if we are avoiding tax in India, then we might be paying taxes in that country. You are absolutely right. But guys, the best part is tax rates vary, laws vary. So maybe tax rate in India is 30% and tax rate in that particular country is only 20%. So you gain 10% by doing this mischief. Indian government will not allow you to do this mischief because you gain 10% by doing this mischief. This is a mischievous activity that you do. You transfer residency from India to USA. Why? Because tax rates may vary. Taxation regimes may vary. You may get more benefit in United States of America. That's the reason why you might choose to shift your residency from a high tax jurisdiction to a low tax jurisdiction. I would like to shift my residency from a high tax jurisdiction to a low tax jurisdiction. That is the benefit that I will draw from shifting my residency. So I will not allow you to do that. Shraddha Podar, very good question from Shraddha Podar. Brilliant, Shraddha. This shows that Shraddha is very attentive in class and she is able to understand the concept very well. Very good, Shraddha. All right, guys. So once you become a resident, then guys, further you are bifurcated into two parts. Either you are an ordinary resident or you are a not ordinary resident. Either you are an ordinary resident or you are a not ordinary resident. If you are a resident, then you are further categorized into two parts. So now why now if we are a resident, then sir, income tax of India will be leviable on us. Indian government will levy taxes on us. So now why do we want to know whether we are not ordinary resident NOR or whether we are ordinary resident? What is the purpose, sir? Why should we now know whether we are not ordinary resident or ordinary resident? What is the logic behind it? Logic is very simple, guys. If you are a not ordinary resident, first of all, let me tell you the meaning. Meaning is, not ordinary resident means usually in the past years you are not a resident of India, but in the current year, by chance or by virtue of some transaction, by virtue of some economic activity, by chance you become a resident of India. This is known as not ordinary resident. Usually you are not a resident of India, but by chance during the current year you became a resident of India. That is known as not ordinary resident. And ordinary resident means you were always an Indian resident. You always had Indian residency. That is known as ordinary resident. Now, sir, why should we bifurcate our residency into two parts? The reason is very clear. Some incomes are taxed in hands of ordinary residents. So, in case of ordinary residents, all incomes are taxed. In case of not ordinary residents, some income are not taxed. In case of non-residents, most of the incomes are not taxed. Let me repeat. In case of ordinary resident, all the incomes are taxed. In case of not ordinary residents, some incomes are not taxed. And in case of non-resident, most of the incomes are not taxed. Most of the incomes are not taxed. So that is the hierarchy which we follow. So if you don't want to get all your income taxed in India, then you can also become a not ordinary resident, which means that in the past years, you were not a resident, but in the current year, due to some special circumstance, due to some special situation, you were in India, and that is how you became resident of India. That is not ordinary resident. Now, what are the conditions? Let us understand the conditions, guys. If you become an ordinary resident, what is the condition of being an ordinary resident? If you want to become an ordinary resident, then you should be resident. R means resident. You should be resident in 2 out of last 10 previous years. If you're a resident in at least 2 out of 10 previous years, then you become an ordinary resident. And guys, the condition is and. Both of them are to be cumulatively satisfied. You have to be a resident in at least 2 out of last 10 previous years. You have to be a resident in at least 2 out of 10 previous years. And you have to be in India for more than 729 days in the last 7 previous years. You have to be in India for more than 729 days in the last 7 previous years. If you fulfill both these conditions, then you become an ordinary resident. And then we are aware, guys, we are aware that yes, you are ever since means since 10 years, a decade. since last decade you were in Indian context, you were a resident of India, therefore we will treat you as an ordinary resident. If you are staying in India for more than 729 days out of 7 previous years, we'll say that you are a ordinary resident in India. And the opposite of this is you are a non-resident in 9 out of 10 previous years. Guys, now this is exactly opposite of this, okay? You are a resident in at least 2 out of 10 previous years, okay? Exactly opposite of this, you are a non-resident in 9 out of 10 previous years. You are a non-resident in 9 out of 10 previous years. If you are a non-resident in 9 out of 10 previous years, which means you are a resident only in 1 out of 10 previous years, then we will treat you as a not ordinary resident. Or you were in India for less than equal to 729 days in last 7 previous years. If either of the conditions are satisfied, if any one of the conditions are satisfied, then you become a not ordinary resident. Then you become a not ordinary resident. And of course, guys, for not ordinary resident, few incomes are not taxed. For ordinary residents, all incomes are taxed. For non-resident, most of the incomes are not taxed. Now, next question comes. A very special section, guys. A very, very special section comes. You know, this section has been recently amended in the Act, has been introduced in the Act. सर जैसे कि IELTS करके चला जाता है अब्रॉड, फिर उधर की जॉब तो उनको उधर ही टैक्स पे करनी है, not in India, right? Saloni, you are absolutely right. So if job is outside India, if job is in a different country, then yes, the taxes are also to be paid in the different country. Okay. Now comes a section. Section 6(1)(a), recently introduced in the Income Tax Act, and this section. So guys, since the beginning of the chapter, I'm saying citizenship is irrelevant. Citizenship is irrelevant. Citizenship is irrelevant. Now, this particular section gives some weightage to citizenship as well. Now, guys, first of all, logic behind giving emphasis to citizenship while calculating residential status. Reason is very clear. Let me explain it to you. Some people are over smart. They think they are privileged on earth. They are a blessing to the mankind. They are very smart people. They think they are very, very smart. And those people who are very, very smart try to avoid residency of all the countries by staying for a very, very minimum time in each of the country. So, for example, I would stay in India for less than, say, 180 days. I would stay in United States of America for less than 90 days. Suppose 90 days is the threshold for American residential status. Then I move to UK. I stay in UK for less than 40 days because 40 days is the residential status threshold for UK. Suppose I'm just, giving you an example. Then I move to Australia. Okay. And I stay over there for, say, 3 months. The residential status for 3 months, for residency of Australia is for 3 months. I stay over there less than 3 months. This way, I just move around the globe. I'm a super rich, super wealthy person, high net worth individual, and I have my houses in many countries of the world. So I am roaming about in the world, entire world, and I am avoiding residency of every country of the world. Wow, what an amazing privilege. I am avoiding residency of every country of the world. I am avoiding residency of all of them. Under this situation, will you be a non-resident in each of these countries? The Indian Income Tax Act says that in such a situation where you are a non-resident in all the countries, and you are earning some income from India and you are a citizen of India, then you will be treated as a resident of India. Despite of the fact that on the basis of period of stay, you are a non-resident. You are not in India for the stipulated period. Despite of that, if you are a citizen of India and your income is more than 15 lakh rupees, then guys, if you are a resident of some other state, then you are a non-resident in India. But if you are a non-resident for any other state in the country, state means country, okay? Over here, state means country. If you are a non-resident in any other country and you are a citizen of India and you are earning income of more than 15 lakh rupees from Indian sources, then you become a not ordinary resident in India. So it is impossible for an Indian citizen to be a non-resident of all the countries of the world. It is impossible for an Indian citizen to be a non-resident for all the countries of the world. Indian citizen has to be a resident of at least one country, which is India. If you are a non-resident of any country of the world, if you are a non-resident of every country of the world, then you will be a resident of India if you are a citizen of India. That is the implication of this particular section 61A, and this was introduced because of over smartness of many high net worth individuals. They used to avoid residency of all the countries by not staying over there, for the stipulated time period, and that is how they used to take benefit of it. Okay, yes. So Dinesh is saying, sir, 2 out of 10 previous year, does it mean days or continuous 2 years? Dinesh, I'm not talking about period of stay when I say 2 out of 10 previous years. I am saying that out of 10 previous years, you are a resident of at least 2 years. You are a resident of at least 2 years, and that 2 years cannot be, may not be continuous. Okay, you can be a resident of year 1 and year 4 out of 10 years. That is also fulfillment of the condition. Okay. ओके, ओ यस, ज्योतिष इज एब्सोल्युटली राइट. जिसका कोई नहीं है उसका इंडिया है, तो जिसका भी कोई नहीं होगा उसका इंडिया होगा. ओके गाइस, लेट मी रिपीट दिस कंडीशन वंस अगेन. So if you want to become a non-resident in India, then you have to stay in India for less than 60 days in the previous year. In the last year, you have to be in India for less than 60 days. And in the last 4 years, you have to be in India for less than 365 days. If you fulfill any of the one conditions, then you become a non-resident in India, unless and until you fall under this particular category, right? This is the condition of being a non-resident. Okay, sir, got it? All right, now I move on to exceptions to additional condition, which is section 61C. All right. So guys, we have studied this particular concept that, we will see the residency of not only 1 year, but of last 4 years. We'll see residency of not only 1 year, but of last 4 years. We'll also see whether that particular person was a resident in last 4 years or not. Okay. So this particular condition, which is second base rule, I've talked about the first rule, I've talked about the base rule too. So the second base rule which is there is a more stringent base rule. It is a more strict base rule. When it is a more strict base rule, the second base rule, which is the more strict base rule, guys, that particular base rule is very, very strict, because many people become over smart. Okay, they would be a resident for all the past years, but for the current year especially, they will not stay in India for more than 182 days. Deliberately they will not stay in India for more than 182 days just to avoid residency. This is the over smartness which some people do, because of which second base rule was introduced in the act. But guys, there are certain genuine circumstances where in the past you were a resident of India, you were staying in India, but in the current year you are genuinely not staying in India. I'll give you an example, guys. I am a CACS CMA. I have ever been in India. I've done my education in India, graduation in India, schooling in India. Everything has been done in India. But I take a job in United States of America. So guys, in the past, I was an Indian resident. In the past, I was a part of Indian income tax system. In the past, I was very much in India. But in the current year, I flew to United States of America. Now, guys, I don't have any malified intention in my mind to evade tax. This is just by chance that I got a job in the United States of America and I flew over there. This is by chance. I don't have any deliberate intention in mind that, yes, I want to evade tax. That is why I'm moving outside India just to evade tax. I don't have any malified intention in my mind. So the second and the stringent base rule, the second and the stringent condition is relaxed for certain genuine cases. So now we are going to study the exceptions to additional residency conditions under section 6(1)(c). In what all conditions will I say that the strict condition of seeing the past will not be applicable? So exceptions to additional residency conditions. Additional residency conditions will not only see current year's stay, but will also see past year's stay. That is what we are going to see now. Okay. Vivek Sharma is saying, sir, section 6(1)(a) में citizen of India and income from India more than 15 लाख दोनों एक साथ satisfy होनी चाहिए. बिल्कुल विवेक, दोनों कंडीशन satisfy होनी चाहिए. वो इंडिया का सिटीजन भी हो और उसके 15 लाख रुपए से इंडियन इनकम भी हो, और एक और कंडीशन satisfy होनी चाहिए, वो दुनिया के किसी और कंट्री में रेजिडेंट ना बने, तो वो इंडिया का नॉट ऑर्डिनरी रेजिडेंट बन जाता है. तीनों कंडीशन satisfy होनी चाहिए. ठीक है. All right. So now we move on to the exceptions to the additional residency rule. तो जो additional residency के rule हैं उनका हम exception देखते हैं. Now what is additional residency rule? It is section 61C, the section which we have studied, that residency is not only based on the current year's period of stay, but it is also based on the past year's period of stay. It is also based on past 4 years period of stay. That is also important while considering the residency. This is the additional residency status. But guys, sometimes there are genuine cases, the absolutely bona fide cases where a person is moving out of India for a genuine cause in the current year. Guys, he should not be penalized. His past should not be seen because he's a genuine person. So exception number 1, which we've just discussed, Indian citizen who leaves India for employment outside India. So if you are moving outside India for employment outside India, then we will not see your past stay in India. If you are a person who's moving outside India for job outside India, we will not see your past. We will only see your present. We will only see your period of stay in India in the relevant previous year. I'll give you an example because I know this is a little confusing point. I'm taking example of previous year 2021-22. Guys, in previous year 2022, a person was in India for less than 182 days, which is 170 days. In the previous years prior to 21-22, in all those years, he was very much in India for all the 365 days of the entire year. He was very much in India. He's an Indian resident, but he got a job in previous year 21-22, because of which he flew to outside India, and he was not in India for more than the stipulated time period. He was in India only for 170 days. Now guys, in this particular situation, ideally, if I forget about the exceptions, ideally, first I should see the base rule 1, which is of 182 days. Then I will see the base rule 2, which says that if you are in India for more than 60 days in the previous year and you were in India for 365 days in last 4 previous years, then you become a resident of India. Ideally, I should have seen this. But guys, in these genuine cases, I will not see the additional condition. I will only see the condition number 1. Condition number 1 says, if you are in India for more than 182 days, you are a resident. If you are not in India for more than 182 days, then you are a non-resident. I will not see the past, because this is not to avoid tax. This particular provision is not to avoid tax. It is a genuine reason that you got a job. So these are the exceptions to additional conditions, and I'm not going to see the additional conditions which are there in section 61C if these situations are there. What are those situations? Situation number 1, you are an Indian citizen. You are an Indian citizen who leaves India for employment. You wanted an employment outside India. You leave India for employment. You are an Indian citizen who wanted employment outside India. You left the country for employment. We will not see additional condition. We will not see the stringent guideline. You are an Indian citizen who leaves India as a crew member of Indian ship. Your job is to leave India. Like Indian ship, if you are a part of an Indian ship, what is the role of the ship? Ship has to move outside the coast. If you're a part of a member of Indian ship, then you have to move out of India. There is no way you can escape this if you're an Indian crew member. Then we will not see your past. We will only see your current year's period of stay. We will not see section 61C or the base rule 2. We will not see the base rule 2. We will not see the stringent base rule. Third, any citizen or a person of Indian origin who stays outside India but visits India during the previous year. Now, this is a special condition, guys. Suppose if you are a PIO. What is PIO? PIO is person of Indian origin. Suppose you are an Indian citizen or a PIO. Suppose you are an Indian citizen or a person of Indian origin and you stay outside India, but you visit India during the previous year. So generally you are staying outside India, right? But in the current year you visit India for a cause, for a purpose. Generally you are staying outside India, but currently you are in India. Then guys, Indian income, your Indian income is more than 15 lakh rupees. Your Indian income is more than 15 lakh rupees. Then it is not that your additional condition will be absolutely foregone. It's just that your additional condition will be modified. Guys, over there we used to see more than equal to 60 days in section 61C. This is modified section 61C. And in this particular modification, we will see that if you are a POI, which means you are a person of Indian origin who stays outside India, but you visit India during the previous year, then instead of seeing 60 days of the current year, we will see 120 days of the current year period of stay in India. And we will see 365 days or more in the last preceding 4 years. So yes, the condition is not absolutely excluded for this kind of category, but it is a little modified. We will modify the condition. We will relax the condition. We will ease out the condition a little bit. Instead of seeing 60 days, we'll give you a leeway of 120 days. You can be in India for 120 days without paying any taxes. But if you stay in India for more than 120 days, we will ask you to pay taxes. So guys, I'll give you a very simple example, okay? Goa, how many of you have been to Goa, or anyone from Goa from this particular section? Anyone from Goa? Anyone from Goa? अरे नहीं भाई, चिन्मय कुलकर्णी, क्या कर रहे हो तुम? चिन्मय कुलकर्णी, चिन्मय कुलकर्णी, चिन्मय कुलकर्णी, लो 3 बार नाम ले लिया. अनसब्सक्राइब मत करो यार चैनल को. So students who have not subscribed the channel, please subscribe the channel and please hit a like button if you're liking this particular video, and if you want me to continue the revision series, please hit a like button. And please request to Chinmaya, don't unsubscribe the channel. He's saying unsubscribe done. Dhruv Jain is asking, what if a person becomes resident in 2 countries? That is a very, very good question, Dhruv. What if a person becomes resident in 2 countries? Guys, if the person becomes resident in 2 countries, then double taxation might accrue to that particular person. But to avoid double taxation, we have double taxation avoidance agreement, where there is a tiebreaker rule. What is tiebreaker rule? Tiebreaker rule is when US government is also saying he's my resident, Indian government is also saying he's my resident, then double taxation avoidance agreement will come into play. Income Tax Act will be kept aside. US Income Tax Act will be kept aside, and double taxation avoidance agreement, which is a common tax law for both the countries, that will be taken into consideration, and that will tell us who wins. Okay, if there's a tie, who wins, that will tell us. So only you can be a resident of only one country. You will not be allowed to pay taxes in both the countries. You will not be done. Yes, Jyotish Raj is very, very correct. Perfect, Jyotish Raj, DTA, perfect. Thank you, Devraj. Thank you so much. All right, so we are talking about the PIO. Okay, how many of you from Goa over here, or you've been to Goa? So Goa is a seasonal market. What do you mean by seasonal market? From November to January, Goa has got its most commercial activities at its peak, and the inflow of visitors is too much in Goa. Okay, during that phase, many people from outside the country come to India and they do their work and they go back to their country after doing that work. It is known as seasonal occupation. Similarly, guys, hill stations like Manali, hill stations like Ooty, hill stations like Kasol, all these hill stations, all these stations where vacations are planned, these are seasonal areas. And sometimes people from outside the country, like people from France, or people from USA, or people from Bhutan, Nepal, they come to the country and they put up their stalls, temporary stalls, they earn money and they go back. Okay, so guys, in that case, if they are in India for more than 182 days, and they are in India for more than 365 days in the last 4 previous years, then they become a citizen of India. If they have their origin from Indian ancestors, if they have origin from Indian ancestors, if their ancestors were Indians, or they are Indian citizens, then if they stay in India for more than 182 days, or they are in India for 365 days or more in last 4 previous years, they become citizens. They become not ordinary residents, not citizens, not ordinary residents. So that is the exception to this rule, 61C. If they have Indian income which is less than 15 lakhs, then additional condition will not be applicable. So if the Indian income is less than 15 lakhs, if they are earning less than 15 lakhs, then guys, the additional condition 61C will absolutely be not applicable, and only their period of stay in the current year will be seen. Their period of stay year will not be seen in this particular case. So these were the exceptions to section 61C. Okay, sir, got it? So guys, this was the rules which are relevant for Indian citizens, for individuals especially, to become a resident of India. Now we come on to the rules which are relevant for HUF. Now we come on to the residency of HUF. Now we come on to the residency of HUF. So Jyotish is saying, please explain origin meaning. Okay, origin, person of Indian origin means a person whose parents, father or mother, or grandparents were Indians. That is person of Indian origin. And there's one more word written in that section, citizen. Either he was a citizen of India or he was a person of Indian origin. One word was also written, citizen. Okay, so Either he was an Indian citizen, but he's staying outside India for many years now, or he is a person from Indian origin, which means his ancestors, father, mother, grandfather, grandmother, belong to India. Then that particular person will be called as person of Indian origin. And now he's coming back to India after many years. In the previous year, he came back to India. Okay. If he came back to India and his income was nothing much, no income was there, then additional condition will not apply to him. 6(1)(c) will not apply to him. But if he is earning income, then guys, additional condition will be applicable to him with a relaxation that he can be in India for a period of at least 3 months. Okay. 3 months, 4 months, 4 months. So 4 months he can be in India, which is 120 days. If he's there in India for more than 120 days, then we will consider him as a resident. Or if he's not in India for more than if he's in India for less than 120 days, we will not consider that particular person as a resident. Okay, sir, got it. Now we move on to HUF. Any other questions in individual? All right. To conclude, guys, base rule 1 for individual, 182 days or more. Base rule 1. Base rule 2, I'm concluding the entire individual residential status. Base rule 1, 182 days or more, 182 days or more. Base rule 1. Base rule 2, 60 days or more in India in the previous year, 365 days out of last 4 years. Then he becomes a resident. Okay. Base rule 2. Base rule 2 is followed by residency. If resident is there, then 2 sections, not ordinary resident, ordinary resident. Ordinary resident will become if he is in India, if he is a resident of India in last 10 years, he is a resident in India for at least 2 years. Then he becomes a ordinary resident. And one more condition to be satisfied cumulatively. 729 days in 7 years, in last 7 years, if he is in India, then he becomes a ordinary resident. Both the conditions to be cumulatively satisfied. If not, if either of the conditions are not cumulatively satisfied, then he becomes a not ordinary resident. Then we come on to 6(1)(a). 6(1) is a special condition which says that if you are not a resident of any part of the world, if you are non-resident in all the countries, if you are over smart, if you have a lot of money and you are just splurging your money to avoid taxation, you are not a resident of any other country, but you are a citizen of India, then you will be a resident of India if you are earning 15 lakh rupees of income from India. This is known as forced residency. You are forcefully a resident of India, not because of period of stay, but since you are citizen of India, you will become a resident of India. That is the sum of situation. And lastly, the exceptions to section 6(1)(c). 6(1)(c) will not be applicable. The second base rule will not be applicable if, number 1, you are going outside India for employment purpose, a genuine reason, a bona fide reason. Your history will not be seen, only your current period stay will be seen. Your history will not be seen, only your current period stay will be seen if you are going outside India for employment purposes. Number 2, if you are going outside India as a member of Indian ship, if you're a member of Indian ship, you're going outside India, the second base rule will not be seen. The strict base rule will not be seen. Number 3, if you're a person of Indian origin and you are in India, you're not earning 15 lakh rupees or more of income from India, you're a person of Indian origin who's been outside India for many years now. In the current year, you are coming to India, then second condition will not be seen. Second condition will not be applicable to you. Only the first condition will be applicable to you. But if your income, in case you're a POI or a citizen who's staying outside India but has come to India for the first time and your Indian income is more than 15 lakh rupees, then your additional condition will be applicable with a slight modification, which is 120 days instead of 60 days. Instead of 60 days, we'll see your period of stay in 120 days in the last preceding year. That is the sum up. Okay, sir? 10:30 से तो पहले finish हो जाएगा, टेंशन मत लो. All right, now we come on to the residential status of HUF. Now guys, please tell me, can HUF or a company or a AOP BOI book a ticket? Okay, can they do they have legs? Can they stand up? And can they walk towards the airport? And can they board a flight? And can they go to United States of America? Answer yes or no. Can a HUF or a company or a AOP BOI board air ticket, board a plane and go to America or any other country? Can they do that? Can they do that? Chirayu Rawat. Can they do that? Can HUF, AOP BOI or company board tickets and can they go outside? Jyotish is saying obviously no. Yes, Jyotish, you are right. Obviously no, that is not possible. Okay. So in case of artificial persons, these are artificial persons. These are not natural persons. Guys, in case of artificial person, period of stay is not seen. What is seen is where is their brain control and management is seen. Where is the brain of that particular organization? If the brain is in India, then you will say that that particular organization is Indian resident. If the brain is outside India, then you will say that brain that particular person is outside India resident. So we will see the brain. Brain is control and management. So if control and management is wholly or partly situated in India, okay. So guys, sometimes what happens is that your half brain can be in India, half brain can be in USA. So for example, all my students who are taking face-to-face classes from me, sometimes their mind is somewhere else. Physically they are in the class, but their mind is somewhere else. Their half mind is in class, half mind is somewhere else. This happens a lot. Similarly, if decision making is partly being done in India and partly being done outside India, then also that particular person is known as a resident in India. So even if out of 10 decisions you take one decision in India, you become a resident of India. But out of 10 decisions, if you take all the decisions outside India, out of the 10 decisions, you take all the decisions outside India, then we will say that your control and management is situated outside India wholly, and you will be classified as a non-resident. If all the decisions are being taken outside India, then we will say that you are wholly situated outside India, or control management is wholly situated outside India, and then we'll say that you are a non-resident in India. So in case of artificial person, period of stay is not relevant. What is relevant is control and management. So, and what do you mean by control and management? It means central and actual control and management. It doesn't mean the supervisory decisions, supervisory roles, or some back-end roles. No. The main control, the main decision making which is being done, the main decision, the primary decisions which are being taken, they are to be taken in India to call that particular organization as a resident in India. Now, sir, in case of HUF, apart from resident and non-resident, there are two more categories: ordinary resident and not ordinary resident. And guys, to consider whether an HUF is an ordinary resident or a not ordinary resident, you have to consider the residency of the Karta of the HUF. Now, Karta is a natural person, okay? Karta is a natural person. Karta is the main person who heads the HUF, who takes all the decisions on behalf of HUF. Karta is the main person. So to consider ordinary and non-ordinary residency of the HUF, we'll see the residency of Karta. Someone is saying poem. No, poem is relevant for companies. Okay, I'll be teaching poem to you. Poem will be relevant for companies, not for HUF. Okay, great. It shows that Sai Kiran is studying residential status, and before attending the class, he has seen residential status videos. It shows very well. Very good, Sai Kiran. Sai Krishna, very good, Sai Krishna. All right, so guys, non-residency if wholly situated outside India, residency if wholly situated in India, control and management. Okay, if wholly situated in India, then divide into two parts: not ordinary resident and ordinary resident. Now, this not ordinary resident and ordinary resident will be considered as per the residential status of Karta. Okay, so if Karta was a non-resident in 9 out of 10 previous years, or he was in India for less than 729 days in last 7 years, then the HUF will be a not ordinary resident. And if the Karta was a resident in 2 out of 10 previous years and he was in India for more than 729 days in the 7 previous years, then the HUF becomes ordinary resident. So residency of HUF will depend on the control and management of HUF plus the past year's residency of the Karta of HUF. Two things taken together will determine the residency of HUF. Thing number one, the control and management of HUF as a whole. Thing number two, the residency of past few years of Karta. Both the things taken together will determine the residency of HUF. Because guys, the reason is very simple. Karta's residency is relevant for HUF because the entire HUF revolves around Karta. Karta is the main person who takes decisions. So if Karta was a non-resident in 9 out of 10 previous year, how can you say that HUF's control and management was in India? How can you was not in India? How can you say that? If Karta was in 9 out of 10 previous years, he was a non-resident. He was not in India for 9 out of 10 previous years. How can you say that he was HUF is controlled and managed in India? How can you say that? No, it is not controlled and managed in India. So if Karta was not in India for 9 years out of 10 years and he was in India for less than 729 days, we will say that HUF is a not ordinary resident. And if the Karta was in India for 729 days or more and was a resident in 2 out of 10 preceding year, then we will say HUF is a ordinary resident. So these two conditions will determine the residential status of HUF. So residential status of HUF, combination of two things. Number one, the control management of the HUF. Number two, the residency or the period of stay of Karta. Both of these taken together will determine whether the residency is ordinary residency or not ordinary residency. That is the differentiating factor. So yes, guys, that's all for today's lecture. So let's start session 2 of residential status. Residential status is one of the most important chapters of your syllabus, not only of intermediate. So before 2019, we used to think that residential status is only relevant for CMA Intermediate students. But guys, residential status is also relevant for CMA Final students. So CMA Intermediate students and CMA Final students, both of them must prepare this particular chapter, residential status, very well, because it is important from both of their perspectives. CMA Intermediate as well as CMA Final, both students will get benefited from this particular chapter, residential status. Yes, CMA Final students can also get a question from residential status in their examination. Guys, in the last session, we had studied certain aspects of this particular chapter, residential status, and the aspects are, what are the objectives of this chapter, residential status? Why do we compute residential status? What is the utility of residential status? That is the first thing. Difference between a citizen and a resident. Why is citizen relevant? Why is resident relevant? And from an income tax perspective, guys, citizen is very least important to us. What is important to us is resident. If you are a resident of a particular country, then that country's income tax department get a right to tax you. So that right of taxing a particular person is arrived at the income tax department by the residential status. Citizenship, irrelevant. I don't care where you are a citizen of. I don't care whether you're a citizen of India, US or Australia or whichever country in the world. I am relevant. I am bothered about where are you residing? Where are you staying for a long period of time in a particular financial year? Wherever you will be staying in a particular financial year for a longer period of time, there I will say that you have your residency or you have your residential status. So residential status is directly linked to your staying in a particular country. So period of stay is the relevant criteria of determining what is the residential status of a particular person. So residential status is all about period of stay of a particular person, like an individual in a particular country. So for an individual, the period of stay matters a lot. Yes, two base rules. Base rule number one, more than 182 days, you become a resident of India. Less than 182 days, you have to see base rule number two. You have to go to second rule. Second rule says if less than 182 days, but more than 60 days in the previous year and 365 days in the last 4 years, then you become a resident of India. If you are not fulfilling either of the two conditions, that is, either you are not staying in India in that particular year for more than 60 days, or you are not in India for 365 days or more in the last 4 previous years, if either of the conditions are not satisfied, then you become a non-resident from an Indian context. Now, there are certain exceptions to base rule 2. Base rule 2 is a stringent base rule. There are certain exceptions to this stringent base rule. The exceptions are that if you are going outside India for employment purposes, if you are joining job outside India, then base rule 2 is not applicable to you. The stringent definition of 60 days and 365 days for past 4 years is not applicable to you. In that case, only base rule 1 is relevant. Base rule 2 is not relevant. And Jyotish is asking, sir, date of departure also we need to count. Yes, guys, date of departure and date of arrival is to be counted by you while calculating the residential status. Date of arrival, the day when you arrive into India, that is also counted as your stay in India, and date of departure is also accounted for when you calculate your residential status. So that clarifies Jyotish's point. Hello, good morning. Sunny Kaushik is here. Good morning, Sunny Kaushik. So yes, CMA final students have also joined in. And yes, this is a message to all the CMA final students. Please join this session because this session is relevant for CMA final also. Absolutely, guys. All right. So yes, individual is divided into resident and non-resident based upon the criteria which we have just discussed. Now the question is, if you become an ordinary resident, if you become a resident of a particular, because of the particular rule of India, then how would you classify yourself as a not ordinary resident or an ordinary resident? How would you classify? So guys, twin conditions if satisfied together. Twin conditions if satisfied together. Condition number one, out of the last 10 years, you have to be an Indian resident of at least 9 years. Out of the last 10 years, you have to be an Indian resident of at least 9 years. Or you are in India for 729 days in the last 7 years. If either of the two conditions are satisfied, then you become a ordinary resident. Otherwise, you become a not ordinary resident. So ordinary resident and non-ordinary resident, that is the criteria of determining ordinary resident and not ordinary resident. Period of stay is very, very important. Let me get on to the slide also. And yes, section 6.6, we are referring to section 6.6. So you're a resident in 2 out of last 10 previous year. It is at least 2, guys, at least 2. You are a resident in at least 2 out of last previous 10 years if you are a resident, and you are staying in India for more than 729 days, then you become a ordinary resident. But if you are a non-resident in 9 out of 10 previous years, if you are a non-resident in 9 out of 10 previous years, or you are staying in India for less than 729 days, then you become a not ordinary resident. That is the criteria of determining ordinary and non-ordinary residency. Then guys, we also discussed about section 6.1a. What is section 6.1a? 6.1a says that if you're not becoming a resident of any country of the world, if you're not becoming a resident of any country of the world, but you are a citizen of India, then guys, you will become a resident of India, but an ordinary, not an ordinary resident, but a not ordinary resident. If you're not a resident of any country of the world, but you are a citizen of India and you are also earning 15 lakh rupees worth of income from Indian sources, then you become a resident, not ordinary resident of India. That is by virtue of your citizenship. That is by virtue of your citizenship of India. That is the condition. Section 6.1a is the relevant section. Okay. Then guys, in the last class, we had discussed the 3 exceptions to the residential status rule. 3 exceptions are: Indian citizen who leaves India for employment outside India is not required to see section 6.1c. Then Indian citizen who leaves India as a crew member of an Indian sea, Indian citizen who becomes a crew member of the Indian sea, then guys, that particular person is not required to see section 6.1c. That particular person is required to see only section 6.1a, which is 182 days or more. Third exception is Indian citizen or PIO, person of Indian origin, who stays in India for who doesn't stay in India, but he visits India in the previous year. Then guys, if his income is less than 15 lakh rupees, he becomes the additional condition is not applicable. 6.1c is not applicable on that particular person. But if he has an income of 15 lakh rupees or more, then guys, section 6.1c will be applicable, but liberal or modified version of section 6.1c will be applicable, which is instead of 60 days, we'll take 120 days as the determining criteria. And 365 days or more is to be stayed in India in last 4 previous years. So this is section 6.1c, modified version of section 6.1c. Both the conditions are satisfied, he becomes a not ordinary resident. So just a quick revision, guys, of the last class, whatever we did. Quick revision we are doing before we start our today's lecture. Then we discussed about the residency of HUF, Hindu Undivided Family. When would a HUF be called as a resident? When would a HUF be called as a non-resident? That is what we are going to determine in this particular section. So residential status of HUF. In case of HUF, guys, the determining criteria is control and management. Control and management of an HUF should reside within India. If it is residing within India, if even quota off or even a single decision is being taken in India, if a small decision also is being taken in India, if even minute control and management is in India, then we will say that that particular HUF is a resident of India. So control and management wholly or partly, which means even if for a part of or fraction of control management is in India, then guys, we will definitely call this HUF as a resident of India. So yes, Tanupriya is here as usual. Tanupriya is late, guys, but yes, she's late only by 19 minutes. That's okay. So good morning, Tanupriya. Tanupriya is there now. Okay, Sadanand Patil is there. Hi, Sadanand. CMA Final Group. Okay, CMA Final. That's great. Achal Singh says, Achal Singh Rajput, good morning. Shaina Sahiba, good morning. Perfect, perfect. Great. All right. So control management is the first criteria of determining whether HUF is a resident or not. And naturally, guys, HUF cannot have booked a flight ticket and go to USA to stay over there. So period of stay is not relevant in case of residential status of HUF. But yes, guys, whenever we decide whether the HUF is an ordinary resident or a not ordinary resident, then period of stay is relevant, not of HUF, but of Karta of HUF. If Karta of HUF for past 10 years is a non-resident in 9 out of 10 previous years, or he doesn't stay in India for more than 729 days in last 7 years, then the HUF becomes a not ordinary resident. And if the Karta is resident in 2 out of 10 previous years and the Karta remains for more than 729 days in India in the last 7 previous years, then guys, HUF becomes an ordinary resident. So depending upon the Karta's residential status, depending upon the Karta's period of stay, not in the current year, but in the previous years, you determine the residency of HUF. So HUF residency is divided into two parts: ordinary residency, not ordinary residency. This is how HUF residency is determined based on Karta's residency. Naturally, guys, HUF doesn't have legs. It cannot move from one place to another place, right? It cannot board a flight and go outside India. That is not possible in case of HUF. So Karta's residential status is important while calculating the residency of HUF. All right. So this was the section which we did in our last class, guys. So let's now start today's class, today's session. Last session was pretty much heavy, a little bit heavy. This session will be a little light because now we are only left with the residential status of, in case of a foreign company, AOP, BOI, and other kind of persons. So how will residential status be determined for a foreign company, AOP, BOI, and any other kind of person? Sir, why only foreign companies residential status is given over here? Why not an Indian company? How will we determine the residential status of an Indian company? Why is that not there in this chart? Why are we directly discussing a foreign company? What about an Indian company? How will Indian company become a resident or a non-resident? How will we determine that? Guys, Indian company is always a resident. Indian company is always a resident, irrespective of control and management. If your company is registered with the Indian Companies Act 1956 or 2013, then guys, the company becomes an Indian company, and Indian company is always a resident of India. So we will not discuss the residency of Indian company because Indian company is always a resident. But yes, we'll discuss the residency of a foreign company, AOP, BOI, and others. So guys, in the last session, some of the students were asking me, sir, what is poem? What is poem? Today we are going to discuss what is poem. Guys, poem means place of effective management. Now, the word which is to be emphasized over here, the word which is to be noted over here is, poem has got a word which is effective, place of effective management. The word which is emphasized is effective. Effective means the main core decision should be taken at a particular place. Wherever the main or core decisions are taken, that is known as place of effective management. Effective management, place of effective management. So wherever the core decisions of an organization are taken, wherever the main decisions are taken, and where the decisions are taken effectively, over there we say that it is place of effective management. Now, I'll give you a simple example of how in earlier days the companies used to evade taxes and evade being a resident of India by manipulating their management tasks. Okay, I'll tell you an example. Okay, so guys, suppose there's a foreign company and it worked in India on some project. Okay, now obviously all the decisions are being taken for India and they are also taken in India. But the board of directors, which are sitting outside India, they used to visit India very often, very regularly, and they used to work in India. They used to take decisions in India. But they knew that if management of control management of the company, of the foreign company, is situated in India, then the residency of that company becomes India, right? They were aware about this fact. So what they used to do is they used to stay in India, do the work whichever was required in India. It was a foreign company registered in US, Australia, or any other foreign law. But while they were having board meetings, they used to fly off to Singapore. They used to fly off to, say, Thailand. They used to fly off to neighboring countries of India, and they used to take the board meetings, or they used to take the board decisions over there. It was a deliberate attempt to avoid residency in India. It was a deliberate attempt to avoid residency in India. So assume a situation where all the decisions are taken in India, all the execution is being done in India, everything is being done in India, but just for carrying on that board meeting, just for carrying on the paper formalities of making those decisions, they used to fly off to Singapore, they used to fly off to other countries, so that the management of a particular company, foreign company, doesn't fall in India. How grossly unfair. How unfair was this? Yes, it was absolutely unfair. Therefore, the words were changed. The words were changed from control and management to effective management. Effective management means doesn't matter where you are taking the decisions, doesn't matter if your board meeting is happening outside, but if the outcome of that board meeting, the execution of that board meeting is happening in India, we will say that your control and management is in India. So the rigors of management, decision making powers, all these were expanded. They were they were stringently made by the government of India in case of foreign companies. So government of India made it very, very strict, made it very, very stringent, that yes, you need to demonstrate that your effective management is outside India. Only then we will spare you of the residency in India. That is the case which happened in case of foreign companies. So control and management, wholly or partly situated in India. So control management is relevant to AOP, BOI, and other kind of persons. But for a company, a foreign company, POEM is the relevant deciding criteria of becoming a resident or a non-resident. And guys, in case of all these kind of persons, foreign company, AOP, BOI, others, there is no concept of ordinary resident and not ordinary resident. Either you are a resident or you are a non-resident. There is no concept of ordinary resident and not ordinary resident. Ordinary resident and not ordinary resident concept is there only in case of individuals and HUF. That's it. That's it. In case of all other kind of persons, there are only two kind of residencies: resident or a non-resident. That's it. Okay, sir. So what is POEM? POEM is place where key management and commercial decisions are taken. Key management and commercial decisions are taken. That is the place POEM. Okay. Again, POEM or control management wholly situated outside India. If your management is wholly situated outside India, if even part of the control management is situated in India, then you become a resident of India. If the entire control management is situated outside India, then you become a non-resident. So the decision is very clear. The criteria is very clear. If your control management is in India, wholly or partly, then you become a resident of India. If your POEM is in India, wholly or partly, then you become a resident of India. But if your POEM is wholly outside India, only then we will say that this particular foreign company is a resident of, not a resident of India. That is the determining criteria. Okay, sir, got it. So this was simple, guys. There are no calculations which you need to do in this particular concept, and there are no computations like number of days, how many days has he stayed in India, or in the past 10 years, for how many years he was a resident, non-resident. All these things are not required to be discussed in company, in case of a foreign company, AOP, BOI, another kind of person. So it is pretty simple. Okay, the complications arise only in case of individual or HUF. And let me tell you, in examination, the important point is the residential status of individual and HUF only. It is a rare chance, it is a rare opportunity that a question from company or AOP, BOI can come in your examination. So it's rare. Okay, sir, got it. All right, so the next topic which you are going to discuss is scope of income. What is the scope of income? How do you determine income? Now, guys, why are we discussing this topic? First, let me tell you this. Okay, now I had told you earlier, guys. What had I told you? There are three kinds of residency: ordinary resident, not ordinary resident, and non-resident. There are three kinds of residency which I told you: ordinary resident, not ordinary resident, and non-resident. There are three kinds of residency, right? Now, ordinary residents are required to pay taxes on their entire income, all income, whether it is received in India or outside India, entire income, then they are required to pay taxes. In case of ordinary resident, entire income is taxable. NOR, they are required to pay taxes on some income, and some income are exempt, right? And in case of non-resident, most of their incomes are exempt. On most of their incomes, they are not required to pay taxes. Now, to understand which income is taxable in which one's hands, guys, we need to know what is the scope of income, what is the definition of income. Only then we will be able to marry. Yes, today's marriage of whom? Residential status with income. All of you are invited in this marriage. Yes, today's marriage of whom? Marriage of residential status and the income, the type of income. So first we'll be discussing types of income. We have already discussed type of residency. Now we'll be discussing types of income. Then we will marry both of them. Marry means what kind of income is taxable in which person's hand. That is what we need to decide now, because tomorrow if some non-resident comes to you and tells you that, okay, I have these 5 kinds of income, please tell me on which income should I pay taxes in India. You should be able to know that. You should be able to answer that. So now we are going to answer what kind of income is taxable in whose hand. That is the question under consideration, which we'll be discussing in a short while. But first we need to know, what do you mean by income? What is income? That is what we need to know now. Scope of income. What do you mean by income? That is the point of discussion. All right. First, received in India. Any amount which is received in India is the first category of income. Any amount which is received in India is the first category of income. And naturally, guys, the receipt should not be capital receipt. It should be revenue receipt. The receipt should be in the nature of income. It should not be capital receipt. So Ravi Gupta has also joined. Good morning, Ravi. So the receipt should be in the nature of revenue receipt and not capital receipt. So any kind of receipt which is received during the year, that is per se taxable in India. So received in India is the first category which is there. Now guys, we need to understand a very important concept over here. The difference between received and remitted. The difference between received and remitted. There's a difference between these two words, because remittance is not taxable in India. However, receipt is taxable in India. Remittance is not taxable in India. Receipt is taxable in India. Therefore, we need to understand the difference between receipt and remittance. So guys, please have your hands on the chat box, on your keyboards. I will ask you certain questions. Please answer those questions for me. Please have your hands on the keyboards. My question to you is, Mr. Ram is employed in India with Wipro Technologies. Wipro is giving salary to Mr. Ram in his bank account. Bank account is also opened in India. Do you think that this income is received in India? Yes or no? I want the answer in the chat box. The transaction is very simple. Mr. Ram, employed with Wipro. Wipro is depositing the salary of Mr. Ram in the bank account which is maintained by Mr. Ram in India. And that particular income is received by Mr. Ram in its bank account. The question is whether the income is received in India. Yes or no? Manav, Khera, Jyotish, Kartike, Deeptesh, Nidhi, Kirti, Muthu, Sadanand, Manav, Rohit, Rani, Shaina, Saksham, Kartike, Ujjwal, Disha, Khushi, Anushka, Poonam, Om, Shilpi, Chirag Khemani, Dhruv Jain, Yashika. Brilliant. All of you are correct. Now my example number 2. Please listen to it carefully. Now the facts will change. Minute facts will change. So please listen to me carefully. Please increase the volume of your laptop. Please increase the volume of your headphones or earphones which you have put. Please increase the volume and please listen to me carefully. Mr. Ram leaves job in Wipro because he got selected in Oracle Systems Corporation, which is located in United States of America. He flies down to United States of America, and in United States of America, the employer Oracle India Private Limited, Oracle Systems Corporation, Oracle US Inc., they open a bank account for Mr. Ram in US, right? And they give salary of Mr. Ram in the US bank account. Mr. Ram flies back to US, and the company, the Oracle Systems Corporation, they give salary to Mr. Ram in the bank account of Mr. Ram. Bank account is opened in United States of America. New bank account is opened. Now please tell me whether salary is received in India or not. Yes or no? received in India or not? Yes or no? This time whether your answer is yes or no. The salary is received in the bank account of United States of America. Salary is received in the bank account of United States of America, not in India. Whether the salary is received in India or not. Everyone is saying not received, not received, not received, not. Perfect. Perfect answer. Perfect answer. Perfect answer. It is not. No, I'm not going to deem to receive in India as of now. Please don't jump the topics. I will come on the topics gradually, one by one. If you jump, you are bound to miss on the point. Okay? Please don't jump. No, everyone is saying no. Perfect. Perfect answer. Very good. Brilliant. Received in US. Yes, Vivek Sharma is right. It is received in US. Farhan Alam says no, 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 no. Itna sara no. Kamal ho gaya. Okay. Okay. Next question. Please listen to the next question very, very carefully. Now, Mr. Ram flies to United States of America, gets job over there in Oracle Systems Corporation. Oracle Systems Corporation tells Mr. Ram, we have not got your bank account opened as of now. So we can, for now, as of now, deposit your salary in your Indian bank account. Please give us details of your Indian bank account. We will deposit your salary in your Indian bank account rather than US bank account. We have not opened your bank account as of now. We will deposit your salary in your Indian bank account. Directly, we will transfer it to your Indian bank account. There is no US bank account in that case, whether the income is received in India or not. Yes or no? Yes or no? US bank account is not there, and Oracle Systems Corporation have agreed to deposit the amount in the Indian bank account. Is the income received in India? Yes, received for the first time in India. Entertainment show is saying. Very good entertainment show. Pankaj says yes. Megha says yes. Yashika says yes. Vanshi says no. Yes, received in India. Yes, received in India. Deepika Raj Purohit says yes. Dhruv Jain says no. Vidhi says yes. Vilas says yes. Ravi Gupta says yes. Chirag Khemani yes. Devashish yes. Perfect answer, guys. Perfect answer. Answer is definitely a yes. The income is received in India from a foreign source, from a foreign country. The income is received in India. Perfect answer. Now listen to my next question very, very carefully. Next question is, Mr. Ram went to US, worked with Oracle Systems Corporation in the United States of America. He opened his bank account in the United States of America. Oracle Systems Corporation transferred his salary to his bank account in United States of America. His salary was, suppose, 10,000 US dollars. 10,000 US dollars was the salary of Mr. Ram. Out of 10,000 US dollars, Mr. Ram transferred 2,000 US dollars to his Indian bank account so that his family in India can sustain. Out of 10,000 US dollars, he transferred 2,000 US dollars to his Indian bank account. Now, please tell me whether the income was received in India or whether the income was received in USA, or whether it was partly received in India or partly received in USA. So you have three options. Number one, partly received in India or USA. Number two, entirely received in USA. Number three, entirely received in India. 10,000 US dollars. 10,000 US dollars are there in India, in US bank account. Out of the 10,000 US dollars, 2,000 US dollars has been transferred to Indian bank account for his family to sustain. Where is this income received? India, US, or partly in India, partly in US? There are three options: India, US, partly in India, partly in US. It is remitted in India. Perfect. Who has given this answer? This answer has been given by Farhan Alam. Farhan Alam, very good answer. Farhan Alam. Renu Kumari, Jatin Ghugdyal, Sarnek Shah, Rohit Sharma, AKCR7, Tanupriya, perfect. Deepika, Jyotish, Yashika, Manav, Chirag, entirely US, perfect. Fully received outside India. Sadanand Patil, very good answer. Very good, very good. All the answers are absolutely right, guys. All the answers are absolutely right. It is entirely received in the United States of America. Basically to India. So guys, please understand what is received. Received means where the income was first received, not subsequent receipt. Subsequent receipt is not receipt, where it was first receipt. And in this particular case, it was first receipt in United States of America. So it will be called as the income which is received in United States of America and not in India. Subsequent remittance to any part of the world is not counted as a receipt. This is not receipt. It has not been received in India. Received means when it was first time received. If it is second time received, then it is not received. We have not received any income. It was just remitted. It was just transferred from one place to another place, and it is not taxable in India. Remittance is not taxable in India. Remittance means subsequent transfer to India. Whenever subsequently the income is transferred to India, that is known as remittance, and remittance is not taxable in India. Simple as that. So the difference between receipt and remittance should be very, very clear, because remittance is not taxable. Receipt is very much taxable in India. That is the difference between these two words, which you need to understand. Okay, sir, got it? Now, before coming on to deem to receive in India, I would like to discuss accrue or arise in India. Okay, accrue or arise in India. What do you mean by accrue or arise in India? Accrue or arise in India means the right to receive that particular income arises in India. Okay, now let us take one example. Okay, so I am a teacher of direct taxation. I teach CMA students direct taxation in intermediate, audit in intermediate. In final, I teach direct taxation. In final, I teach cost audit, and I take BVM SPM in final. That is my portfolio. Now you come to me. I stay in Delhi. You come to me in Delhi, and you come to visit my Bright Vision Academy, my campus, which is there in Lakshmi Nagar. And you tell me, sir, I want to buy your lectures. I tell you the price, and there's an agreement or contract between both of us that yes, I will supply the lectures to you. Please pay the required money to me. That is a contract. So you have received the right to receive the lectures, and pursuant to the contract, I have received the right to take money from you, earn income from you. And guys, this right has been received by me. I am the income earner. This right has been received by me in India, and hence this income is accruing or arising in India. Suppose, I'll give you an example. Okay, I'll give a different example. I went to vacation. Okay, and I am suppose in Thailand. Okay, I am having vacation in Thailand. I'm enjoying myself, and I'm very, very happy. I'm there with my friends, and I'm enjoying the scenic beauty of Thailand. And suddenly you see me and say, "Oh, sir, you are in Thailand. Even I am in Thailand." I said, "Okay, very good. Where are you? Staying and all. What level of CMA are you?" We were just introducing each other, and he told me, "Sir, I want to buy your lectures." I said, "Okay, let's talk about it in India when we go back." He says, no, sir. In India, you will not be traceable. I will not be able to contact you. So let's do a deal over here in Singapore. Let's do a deal. And I explained to you that these are my lectures. These are the fees. That this so-and-so. These are the terms and conditions. And you agree to pay me the price. And there and then you paid me the price of the lectures. And I give you right to receive the lectures. You give me the right to receive my income. Now, please tell me, is the income accruing or arising in India or not? In the chat box, please tell me, is the income in second case when you and me meet in Thailand, is the income accruing or arising in India or not? Please give me answer in the comment box. Is the income accruing or arising in India or not? Yes, answer is no. Perfect. Answer is no. Rani Singh, yes, कैसे हो गया? No answer hai. Answer is no, because right to receive is received in Singapore. So it is accruing and arising in Thailand. The income is accruing and arising in Thailand because the agreement happened in Thailand. The right to receive that income is transferred in Thailand. Therefore, that income accrues or arises in Thailand and not in India. That is the benchmark. That is the bottom line. So accrues and arises means whatever income, even if it is not received as of now, but the right to receive is generated. The agreement between two parties happened in India. Whenever right to receive it is generated, or whenever the right to receive income is obtained outside India. Perfect answer. The contract is made in Singapore. So no, absolutely, Debashish, very good answer. So simple as that, guys. Simple as that. Accrue and arise means the right to receive is due, is it becomes payable or receivable outside India, then it is known as accruing and arising outside India. If it is in India, then it is in India. It doesn't matter where the income is received. Okay, if subsequently, if the income accrues and arises in India, but subsequently the income was received in Singapore, okay, so you make an agreement with me in Delhi that yes sir, I want to purchase your lecture, I deliver the lectures to you. You pay me part money, and you says part money I will pay you later on. I also forgot to take you part money. When we met in Singapore, then you then you got reminded of my part payment. You handed over the payment to me in Singapore. Okay, so this income accrues and rises in India, but it was received in Singapore. But guys, at the first place, it accrued and rised in India. Therefore, it will be taxable in India. If it is received in India, even if it accrues and rises outside India, doesn't matter. So either the income has to be received in India, or the income has to accrue and arise in India. In either of the two cases, the income will be taxable in India. Either the income should be received in India, or the income should be accrued or arise in India, then it is taxable in India. That is how taxability of income is determined. That is how income taxability is ascertained. Now comes a very, very critical point. Critical point is deemed to receive in India. Deemed to receive in India. Guys, the word deem is a very, very important word in an Indian, in the context of Income Tax Act. The word deemed means assume. The word deemed means assume. When we assume something, it is known as deem. When we assume something. So, sir, what do we want to assume now? Guys, we want to assume that certain income is received in India. Even when the income is not received in India, we will assume that that particular income is received in India just to have taxability, okay? Deemed to receive in India, which means the income has actually not been received in India, but we will assume that it has been received in India. It's an assumption that it has been received in India. That is known as deemed to receive in India. Now, that is also taxable in India. Sir, we'll assume that it is taxable in India. Yes, we will assume that it is received in India. That is known as deemed to receive in India. Even when it is not received, we will say that it is received. Income Tax Act will say that it is assumed that it is received, even when it is not received. So deemed to receive in India, we have certain elements of it. Number one, employer's contribution to provident fund in excess of 12% of salary. So guys, if the employers are depositing some amount on behalf of the employee to a provident fund, then guys, the employee doesn't receive this income in the current year. Yes, the income is belonging to the assessee, belonging to the employee, but he has not received it. But still, we will assume that it is received by the assessee in the current year. So guys, up till 12%, the income is exempt, but beyond 12%, above 12%, this income is taxable. Therefore, the amount which is contributed to employees' contribution to such provident fund will be taxable as received in India, deemed to receive in India. Okay, there's some question. Yes, income tax ka dhamkane wala word, deemed. Perfect. Ravi Gupta, no such restriction on tenure, not repatriatable except for current income and remittance by NRIs up to USD 1 million per annum. भैया क्या हो गया रवि गुप्ता, तुमको, तुम ठीक तो हो? अच्छा, रेमिटेंस की लिमिट फेमा एक्ट से रवि गुप्ता निकाल के लाया है. रवि, जो फेमा है ना, वो आपके फाइनल में, सीएमए फाइनल में, ठीक है? इंटर में फेमा की जरूरत नहीं है पढ़ने की, इतना इन डेप्थ जाने की जरूरत नहीं है. बेसिक सेक्शंस कर ले हम, वही बहुत बड़ी बात है. ठीक है रवि? अच्छा, रवि का एग्जाम इज ऑल्सो इन डिसम्बर, so he's over excited to research a lot. Very good, Ravi. Superb. So employer's contribution to provident fund in excess of 12% is deemed to receive in India. We will assume that it is received in India and it is taxable in India. Second is the employer's contribution to pension scheme. If the employer contributes anything to the pension scheme, then we will assume that that particular income is received in India, deemed to receive in India, even when the employee doesn't receive it in the current year. Then TDS, tax deducted at source. Guys, we'll be doing a particular chapter about this a particular section, tax deducted at source, in detail in our syllabus. But in brief, I'll be able to tell you. Guys, TDS is tax deducted at source. Whenever salary income is received, then the employer has the responsibility to deduct taxes and pay to Government of India. Okay. So if your income is say 10 lakh rupees, then you will not get 10 lakh rupees in your hands. You will only get say 8 lakh rupees. So what happened to 2 lakh rupees? Guys, 2 lakh rupees was deposited to Government of India as TDS. That is your tax, which is, in advance you are paying your tax through your employer. That is known as TDS. So 2 lakh rupees is TDS, which is paid by you through your employer to Government of India, right? So you got in your bank, what you got in your bank, you got only 8 lakh rupees, but your entire package was 10 lakh rupees. Now the question is, what is your taxable salary? Is it the amount which is your original package, or is it the amount which you have received? What is your taxable salary? The answer is your taxable salary is 10 lakh rupees, because the 2 lakh which has been deposited to government is actually deposited on your behalf only. It is not someone else's money. It is not spent to benefit someone else. It is your money which has been deposited on your behalf to Government of India. Therefore, this 2 lakh rupees is also taxable in your hands. The taxable salary is 10 lakh rupees. So even when you have not received this 2 lakh rupees, it will be deemed to receive in India, right? It will be deemed to receive in India, that yes, you have received this money. We will assume this particular fact, and we will say that you have to pay taxes on this particular income. It is not that you have to pay taxes only on 8 lakh rupees. You have to pay taxes on entire 10 lakh rupees, even when TDS deducted is 2 lakh rupees, which is deducted from your salary, paid to Government of India on your behalf. It was on your behalf that this TDS has been paid. If this TDS would not have been paid, then you yourself, employee, should have deducted this TDS to Government of India, right? One and the same thing. One and the same thing. Either the employee deposits it to Government of India, or the employer deducts it from the salary and deposits it to Government of India. One and the same thing. What is the difference? There's no difference. Yes, sir. So TDS is deemed to accrue, deemed to receive in India. Therefore, TDS is taxation. नहीं डबल टैक्सेशन नहीं होगा. श्रद्धा पुदार के लिए डबल टैक्सेशन हो जाएगा. बिल्कुल भी डबल टैक्सेशन नहीं होगा. क्यों डबल टैक्सेशन नहीं होगा? देखो मैं तुम्हें बताता हूं डबल टैक्सेशन क्यों नहीं होगा. देखो मैं तुम्हें बताता हूं डबल टैक्सेशन क्यों नहीं होगा. So your income is 10 lakh rupees. At the end of the year, you will be taxable. You means employee will be taxable at 10 lakh rupees. You compute your tax as 2 lakh rupees, right? But you are not going to pay this tax to Government of India. You will tell Government of India, look, Government of India, 2 lakh rupees has already been paid on my behalf by my employer. Therefore, I am taking a credit of this 2 lakh rupees. So the tax which is payable by me is nil. There is no double taxation. There is no double taxation. So Shraddha Pudar had asked this question. Shraddha Pudar, there is no double taxation. कोई डबल टैक्सेशन नहीं होगा. क्यों? क्योंकि आपको दोबारा थोड़ी पे करना है ये 2 लाख रुपए. 2 लाख रुपए आपके एम्प्लॉयर ने आपके बिहाफ पे ऑलरेडी पे कर दिए. When 2 lakh rupees has already been paid by your employer on your behalf to Government of India, why would you have to pay any taxes? You don't have to pay any taxes. You will just tell in your return of income, you will just tell Government of India, look, Government of India, my employer has already paid 2 lakh rupees on my behalf, which is my tax liability. You don't ask money from me now. I am not going to pay any money. That is how double taxation will not happen. So there's no taxation can happen. But yes, this income will be taxable as TDS. TDS is deemed to accrue or rise in India. Next is deemed profits. So certain profits are deemed profits. So, certain liabilities. So suppose you have to pay some amount to some person. You have to pay 2 lakh rupees to a bank. And that bank tells you that, okay, I'm waiving off your loan because of your poor condition. I'm waiving off your loan. Then guys, that waiver is treated as income. That waiver is treated as income. That is deemed profit. So we'll assume that this is your profit, because waiving off of liability is also your profit. So this is deemed to receive in India. Income from undisclosed sources. So, if certain incomes are received by you and you are not able to tell from where is this income received. So there are certain undisclosed sources from where the income is received and you are not able to tell what is the source of that particular income. Then guys, that undisclosed income is again deemed to be received in India. So, what happens is that tax officer asks you, where did you get this income from? And you are saying, I cannot tell you the source, but I can tell you that it is received from US. Okay, it is received in US. It is not received in India. So income tax officer is asking you, where did you get this 10 lakh rupees from? Please tell me. Where did you get this 10 lakh rupees from? Please tell me. Income tax act is asking you. And you are saying, I don't know where they came from. I don't know the source. But yes, they came from United States of America. They are not received in India. No, guys. Any income from undisclosed sources will be deemed to be received in India and it will be taxable in India. When you know that has been received in USA, then you should also know who has given it to you, right? Logical? Makes sense? But if you defeat sense, then we will say that income from undisclosed sources is deemed to receive in India. Then next is deemed to accrue or arise in India. Guys, accrue or arise we have already discussed. Wherever the agreement has taken place, wherever the contract has been signed, where the terms and conditions are finalized, wherever the dealing has happened between two parties, that is the a place where accrue and arise arises. There are certain cases where even when the agreement didn't take place at a particular place, even when the contract was not negotiated at a particular place in India, then also we will assume that it was done in India in certain cases, right? सर ये तो जबरदस्ती की बात है. हाँ भाई हाँ, जबरदस्ती की बात है, लेकिन असेसी भी तो बहुत शाणे होते हैं ना, बहुत स्मार्ट होते हैं, तो हमें भी थोड़ा जबरदस्ती करनी पड़ती है. सो नाउ दीज आर द केसेस वेयर इनकम विल बी डीम्ड टू अक्रू और अराइज इन इंडिया. Income is not actually accruing in India. The right to receive is not being received in India, but still we are saying that income is accrued or arise in India. So Bhupen Sharma says the list you have mentioned in deemed to receive in India is a complete list, or there can be other items too. Bhupen, this is the complete list. This is the exhaustive list. This has been given in the section, so it is complete list. ध्रुव जैन कह रहे हैं 15G 15H से काम हो जाता है. फिर नालायक ध्रुव जैन, 15G 15H तो तब होगा ना जब इनकम टैक्सेबल लिमिट से कम है. अगर इनकम टैक्सेबल लिमिट से ज्यादा है तो 15G 15H से कैसे काम होगा? सर व्हाट इज डिफरेंस बिटवीन पोयम इन केस ऑफ कंपनी एंड कंट्रोल मैनेजमेंट इन केस ऑफ HUF? ज्योतिष, वेरी गुड क्वेश्चन. पोयम और ये कंट्रोल मैनेजमेंट में क्या फर्क होता है भाई? पोयम होता है, पोयम और ज्यादा स्ट्रिक्ट कंट्रोल मैनेजमेंट का नॉर्म है, और ज्यादा स्ट्रिक्ट, और ज्यादा चीज को बहुत ज्यादा गहरे रूप में देखता है. पोयम मींस प्लेस ऑफ इफेक्टिव मैनेजमेंट. इफेक्टिव मैनेजमेंट मींस जहां पर एक्चुअली में मैनेजमेंट हो रहा है. सिर्फ अगर आप ऊपर ऊपर से ऑन पेपर्स दिखाओगे कि हाँ देखो बोर्ड मीटिंग यहां हो गई, तो बोर्ड मीटिंग यहां हो रही है, तो फिर मैनेजमेंट भी यहां हो रहा है, उससे काम नहीं चलेगा. आपको रियल सेंस में ना डेमोन्स्ट्रेट करना पड़ेगा कि हाँ वास्तव में जहां बोर्ड मीटिंग हो रही है ऑन ग्राउंड डिसीजन भी वहीं लिया जा रहा है. यह पोयम. सो पोयम इज मच मोर इन डेप्थ. हाउएवर कंट्रोल मैनेजमेंट इज नॉट दैट इन डेप्थ. टीडीएस वापस मिल जाता है हमारे अकाउंट में. हाँ ध्रुव, बिल्कुल टीडीएस वापस मिल जाता है हमारे अकाउंट में. ये ध्रुव ना बहुत बहुत होशियार हो रहा है, बहुत होशियार हो रहे हो. कहीं ध्रुव जरूर कहीं प्रैक्टिकल जॉब कर रहा है, तभी उसे ये सारी चीजें 15G 15H की नॉलेज है. वेरी गुड. Bhupen Sharma, yes, they will be uploaded on YouTube. All right. Deemed to accrue or arise in India, there are certain cases where agreement has not happened in India. The contract has not been entered into in India. Terms and contracts have not been finalized in India. There are many cases, but still we will say that income has accrued or arise in India. There are certain cases like that which we are going to discuss now. Let's see what are those cases. Okay, sir. So guys, just let me change my battery. Just give me 2 minutes. All right. Yes. So, income deemed to accrue or arise in India. What is income deemed to accrue or arise in India? Cases where the contract has not entered into in India. The cases where the agreement has not happened in India. Terms and conditions have not been decided in India. The income right to receive has not been received in India. But still we will assume that. The income has accrued or arise in India. We will assume that. Okay. There are certain cases like that. So case number 1, income earned through a business connection in India, or a source of income in India, or a proper property or asset, or any kind of asset in India. Now, please understand this first point very, very well, and I'll be taking you through this point in brief. Okay. Now, suppose there is a non-resident called Joseph. Joseph stays in the United States of America. Joseph has a big property in Jaipur. He owns a very beautiful house in Jaipur, very big house in Jaipur, and Joseph is owner of that house. Joseph wants to sell off that house in India. He has a neighbor. Name of a neighbor is Margaret. Joseph wants to sell his Jaipur house to Margaret. Joseph goes to my house and Joseph tells Margaret, Margaret, I have a property in India, Jaipur. Beautiful property. 300 acres, big property. It's located at a prime location. Would you like to purchase it? Margaret says, oh yes, I was looking for opportunity to invest in India because I keep visiting in India. So, I want some property over there. So yes, you can sell your property to me. So guys, the terms and conditions were decided in US. The contract was entered in US. The agreement was entered in US. The negotiations happened in US. The payment was transferred in US. Everything happened in US. So the income typically accrues and arises in US. The agreement was signed in US. The terms and conditions were determined in US. Everything happened in US. Both the parties to the agreements are also US nationals. So typically the income accrues and arises in US. But the moot point of consideration is the property is situated in India. Similarly, if there's any business connection in India, or if the source of income is in India, then irrespective of the fact that the agreement has been entered into in US, the contract has been entered into in US, terms and conditions have happened in US, whatever has happened to US, I am not bothered about it. I will say that income deems to accrue or rise in India. I will assume that the income is accruing in India. This is an assumption which I will take. Despite of the fact that agreement has happened outside India, the contract has happened outside India, negotiations happened outside India, payment received outside India, everything happened outside India. Still I will say that the income deems to accrue or arise in India. So this is the first case where any kind of business connection, if it is with India, then I will say that the income deems to accrue or rise in India. Now, business connection is also determined by real conclusion of contract, securing orders, delivery of goods in India. So I will just make this particular chart a little more visible to all of you. Okay, let me increase the line thickness a little bit. Yes, now this chart will be a little more visible to you. Okay, all right, so I'm talking about the business connection, guys. Business connection, if there's any business connection in India, if there's any point of contact in India, there's any business connection in India, which means a real business connection, that conclusion of contract happens in India, or securing of orders happen in India, delivery of goods happen in India. So sometimes people are very smart, guys. People can actually enter into contract outside India, signing of contract outside India, but they can solicit customers from India. So they are inviting customers from India, but when agreement is being signed, that is being signed outside India. So I'll give you a practical example. Guys, whenever you download an app from online resource, any online database, okay, whenever you download an app, so suppose you're downloading a software from internet, okay, from any website, you get a terms and conditions page. You click on the terms and conditions page. Yes, I agree on those terms and conditions, and submit. That is actually the agreement which you have entered into, and that agreement is stored or saved in a server which is located outside India. So typically, strictly speaking, you have entered into that contract outside India, but since you are in India, since the customer is in India, and conclusion of contract is happening in India, or securing of order is happening in India, the order is being secured or invited in India, or the delivery of goods is happening in India, then guys, we will assume that the income deems to accrue or rise in India, despite of the fact that agreement was signed outside India, terms and conditions were negotiated outside India. Despite of the fact, we will assume that the income has been accrued or arise in India. Next, salary earned for, yes, website linked in India. Debraj, very good answer. Properties in India. Debashish, very good answer. Bhupen Sharma, accrued or rise received in US, but deemed to accrue or rise as property situated in India. Perfect. Bhupen Sharma, beautiful answer. Linked with India. Chirag Khemani, amazing. Perfect. Next, salary earned for services rendered in India. So if any person comes to India and he's on payrolls of a foreign company, but he comes to India for a temporary time just to do some work, and then he goes back to United States of America, and the income is received in the United States of America. The contract of agreement, the contract of employment was also signed in the United States of America. Everything happened in the United States of America. Still, that person will be deemed to, the income will be deemed to accrue or rise in India. The income will be deemed to accrue or rise in India, since during that tenure when his income was being due, he was rendering services in India, including any leaves. If he has taken any leaves during his stay in India, then that will also be included in India. To Singapore वाले में नो कैसे होगा? श्रद्धा पोदार, तुम्हारा क्वेश्चन नहीं समझ में आया. श्रद्धा पोदार, क्वेश्चन एक बार दोबारा रिपीट करो. ओके, Next, salary received for services rendered outside India, payable by government of India. So sometimes what happens is in cases of embassies, right? In cases of embassies, the services are rendered outside India. They are not rendered in India, they're rendered outside India. In those cases, guys, the income is deemed to accrue or rise in India, despite of the fact that that particular person is outside India. The agreement might happen, the right to receive happens outside India because the income services are being rendered outside India. So in that case also, it is deemed that the income is accrued and rise in India. Dividend paid by Indian company outside India. So if any dividend is paid by an Indian company to any person of outside India, a foreigner has never come to India. He has purchased the shares in a outside stock exchange, and he's never negotiated into any terms in India. Then it is deemed to accrue rise in India. The dividend is deemed to accrue rise in India since it is paid by an Indian company. Then interest, royalty, FTS payable on borrowings or rights or services. Now these are three kinds of income, guys. Interest is paid on borrowings, so you can connect blue color. Royalty is paid on rights, and fee for technical services is paid on services. So blue color represents interest and borrowings, red color represents royalty and rights, and green color represents FTS and services. So if you have received interest, royalty, or FTS, which is payable on borrowings, rights, and services by government of India, if government of India is paying all these three things, resident or non-resident, for money borrowed or rights or services used for businesses in India. Now this is a very, very complicated clause, guys. It contains a lot of sub provisions which I have cumulatively given in this particular chart. Please listen, please watch this very, very carefully. Okay. Interest on borrowings, if it is payable by government of India, if government is paying any interest on borrowings which it makes, we will assume that it has been deemed to accrue or rise in India, because government of India will always work for India. It is always work for projects in India. So despite of the fact that government of India is paying certain interest to outside people on borrowings which is done outside India, even then maybe the terms and conditions have been decided outside India, maybe the agreement has been signed outside India, but we'll assume that it has been deemed to accrue or rise in India if it is payable by government of India. Any kind of income which is paid, royalty, FTS, or interest by government of India will be deemed to accrue or rise in India. But when the income in the nature of interest, royalty, and FTS is payable by a resident or a non-resident, which is not a government person, then for the money borrowed, rights received, used for businesses in India, if the business is being business in which this borrowing is used, business in which these rights are used, and business in which these services are used is in India, then we will assume that all these things are in India. Sir, we are in an absolute confusion state. Please elaborate this point. Okay, let me give you an example. This is Oracle Systems Corporation. This is Oracle India Private Limited. These are two entities of Oracle. Oracle Systems Corporation located in United States of America, and Oracle India Private Limited located in India. These are two different entities. Okay. Now we have one more entity of Oracle which is known as Oracle KPAC. This is Asia Pacific wing of Oracle, or Oracle Ireland for that matter. Okay. Now guys, Oracle Ireland or OKPAC has got certain rights which are to be used in production of Oracle software. Those rights are purchased by Oracle KPAC by Oracle Systems Corporation, because Oracle Systems Corporation is the main entity which uses these rights. Now, Oracle Systems Corporation wants to use these rights in different parts of the world, including India. It is also using these rights for its Indian subsidiary, its Indian business also. It is using this right, which is right to the software in Oracle, right? Now, please consider this fact. The right is being taken outside India. The payment is being made outside India between two non-residents. These are two non-residents. OSC is also non-resident. OKPAC is also non-resident. But the utilization of this right by OSC is also done in India. Utilization of the right by OSC is also done in India. When the utilization of right is also done in India, then guys, we will say that this particular income which is received from OSC to Oka Pack, this income, royalty income which is received from OSC to Oka Pack, deemed to accrue and arises in India. If any royalty is being paid by a non-resident to a different non-resident, but the purpose of paying that royalty is an Indian business, then we will say that it deems to accrue or arise in India. Similarly, guys, any kind of loan, interest, FTS, which is taken by a foreign company, which is paid by a foreign company, is deemed to accrue or arise in India if we say that the business is conducted in India. It is paid for conducting business in India. So any kind of interest, royalty, FTS payable on borrowing rights and services by resident or non-resident for money borrowed, rights and services used for business in India. Please underline this word, very, very important word, used for business in India. If you use those rights, if you use those money, if you use those services for business of in India, then we will say that that income accrues or arises in India. If you use that income, if you use that borrowing, if you use that right, if you use that service in India, we will say that your income accrues and arises in India, despite of the fact that you are transferring the income outside India. Your rights have been received outside India. Your contract is being entered outside India. Despite of this fact, we will say that your income accrues or arises in India. Again, a concept very similar to concept of business connection. So if you have any connection in India regarding the income which you are paying outside India, then that will accrue or arise in India. Maybe the people who are involved in this transaction are non-residents. Maybe the agreement happens outside India. Maybe the terms and conditions happen outside India. Then also, guys, the income deems to accrue or arise in India. Okay, Shraddha Padar is saying, sir, जब सिंगापुर में क्लास के लिए agreement हुआ था, तो not accrued assumed किए थे ना? हाँ, बिल्कुल. जब क्लास के लिए सिंगापुर में हुआ था तो हमने नॉट अज्यूम किया था कि वो अक्रू सिंगापुर में नहीं है. लेकिन जब ये बात पता लगी सब्सिक्वेंटली कि मेरा जो एकेडमी है वो इंडिया में है, ठीक है, मेरा जो बिजनेस है वो इंडिया में है, तो जो मैंने सिंगापुर में भी इनकम ली ना वो इंडियन बिजनेस के लिए ली, तो फिर मैं डीम टू अक्रू और राइज इन इंडिया की कैटेगरी में आ जाऊंगा. मैं अक्रू और राइज तो इंडिया में नहीं आऊंगा, अक्रू और राइज की कैटेगरी में तो नहीं आऊंगा, लेकिन डीम टू अक्रू और राइज की कैटेगरी में आ जाऊंगा. दैट इज द आंसर. ओके, यस, देवराज मोहपात्रा इज एब्सोल्युटली राइट. Anything in connection with Indian, we will treat it as income deemed to accrue in India. Kiran Shinde, सर पर इंडिया के बाहर के इंडियन गवर्नमेंट एम्प्लॉइज की सैलरी टैक्स फ्री होती है ना? वो किरण वो अलग बात है, टैक्स फ्री होगी नहीं होगी, कितना पोर्शन टैक्स फ्री होता है, वो सारा पोर्शन टैक्स फ्री नहीं होता. कितना पोर्शन टैक्स फ्री होगा, कितना पोर्शन टैक्स फ्री नहीं होगा, वो बाद की बात, वो जब हम सैलरी चैप्टर पढ़ेंगे उसमें डिटरमाइन करेंगे. अभी तो हम ये डिटरमाइन कर रहे हैं इनकम क्या होती है, बस. अभी हम क्या डिटरमाइन कर रहे हैं, इनकम क्या होती है, व्हाट इज इनकम, दैट इज व्हाट वी आर गोइंग टू डिटरमाइन एज ऑफ नाउ. ठीक है, वेदर इट विल बी टैक्सेबल और नॉट वो हम आगे डिस्कस करेंगे सैलरी के चैप्टर में. पहले ये तो देख लो इनकम क्या है. अभी हम पढ़ रहे हैं डेफिनेशन ऑफ इनकम. इनकम क्या है, व्हाट इज इनकम, दैट इज व्हाट वी आर गोइंग टू सी नाउ इन द सब्सिक्वेंट चैप्टर्स. लाइक capital gain, like salary, we will discuss which one is taxable, which one is not. And last is gift received by non-resident outside India from a resident. Any kind of gift which is received by a non-resident outside India from a resident is again income deemed to accrue in India. तो अगर कोई गिफ्ट भी नॉन रेजिडेंट को मिलता है तो वो भाई हम लोग कहते हैं कि वो इनकम डीम्ड टू accrue इंडिया में होगी. ऑल राइट, चलो आ जाओ भाई, बारात आ गई, शादी हो रही है, शादी, मैरिज का समय आ गया है, शादी हो रही है. शादी किसकी शादी हो रही है भाई? शादी हो रही है द टाइप्स ऑफ इनकम एंड टाइप्स ऑफ रेजिडेंसी. कौन सी इनकम किस रेजिडेंशियल स्टेटस के आदमी के लिए टैक्सेबल होगी, दैट इज व्हाट वी आर गोइंग टू डिटरमाइन. दिस इज द चार्ट विच इज मैरिज चार्ट. दिस इज द चार्ट विच इज शादी वाला चार्ट. तो शादी हो रही है, शहनाई बजने वाली है, दूल्हा रेडी है, दुल्हन भी रेडी है, आओ शादी कराते हैं. नाउ वी नीड टू सी which kind of income is taxable in which cases. Now I have two categories, guys: income received in India or income deemed to be received in India, income accrued in India or income deemed to be accrued in India. These are the two categories of income which I have, and I have three categories of residency: ordinary resident, not ordinary resident, and non-resident. Now I just need to see which kind of income is taxable under which residential status. That is what I'm going to see now. So guys, first of all, income received in India or income accrued or arise in India. Income received includes deemed to receive also. So now, case where income is received in India, whether it deems to accrue or arise in India, or it accrues or arise in India, whether it accrues or arise in India or not. So guys, whenever I say received in India, it will automatically include deemed to receive in India also. Okay, and whenever I say accrue in India, it will automatically include deemed to accrue in India also. So both of these things will be automatic. Okay, so now the income is received in India. The income is received in India. Just a second, guys. Just a moment. Okay, so sorry. So when the income is either received in India or accrues or arises in India, whether it is received in India or it accrues or arises in India, then it is taxable in hands of all the kinds of residency. If income is received in India or it is accrued or arise in India, it is taxable in all kinds of residencies. Whether you are a non-resident, whether you are a resident, whether you are a not ordinary resident, it will be taxable in all your case. So income which is accrued or arise in India or which is received in India, that particular income is taxable in all the residential status cases, all the residency cases, that is taxable. Now, the first two lines state that income which is received in India, whether or not, this is whether or not it accrues or arises in India. And when it is accruing and arising in India, whether or not it is received in India, in either of the two cases, we are having it as taxable in India. Now, the case where income is neither received in India, nor it accrues or arises in India, both the situations are cross. Guys, in that case also, it will be taxable in hands of ordinary resident. So, ordinary resident is the worst hit. Worst hit is the ordinary resident. In ordinary resident's case, all the incomes are taxable. All the incomes are taxable except for remittances. Subsequent remittance is not taxable. There is only one income which is not taxable in hands of ordinary resident, which is remittance. Only remittance is not taxable in hands of ordinary resident. Apart from it, all the incomes are taxable in hands of ordinary resident. So when the income is neither received in India nor accrued or arise in India, it is taxable in hands of ordinary resident and is not taxable in hands of not ordinary resident or non-resident. Then we have income which is not received in India, income which is not accrued or arise in India, but condition or not fulfilled, but business or profession is controlled or set up in India. Now, if the business is controlled or set up in India, guys, the business is not in India, the income doesn't accrue or rise in India, the business is not, the income is also not received in India, both the conditions are not fulfilled, but the business is set up in India, the business is controlled from India, then guys, in that case, the income will be taxable in hands of ordinary resident. That is given that in case of ordinary resident, all the incomes are taxable. It is also taxable in hands of not ordinary resident. In case of not ordinary resident also, this income is taxable. If it is not accrued and arises in India, it does not receive in India, still it is taxable in hands of not ordinary resident. Then the last case is income is not received in India, but conditions not fulfilled, but subsequent remittance made in India. So income is not received in India, but subsequently it is remitted to India. Then guys, it is not taxable in all the three cases. Remittances are not taxable in all the three cases. So this is a table, guys, which you need to really understand well, because a question from this particular table will come in the examination. This marriage is the crux which we want to study in this particular chapter. Therefore, we had studied the complex concepts which are there in this chapter. This is the crux of the matter. This is the final output of the matter, and a question mandatorily will come from this particular chapter. Okay, Umang Aditya is there. Umang Aditya, I think he is joined late. Umang Aditya, you were sleeping. You have woken up late because of Holi, I think. Okay, dividend paid by Indian company to person outside India who's a minor. Then what will happen? Jyotish, even then it will be taxable. Even then it will be taxable. Okay, perfect. So guys, this was the conclusion. In case of OR, global income is taxable apart from remittances. In case of OR, global income is taxable apart from remittances. In case of first two lines, deemed to accrue or arise in India or received in India, it is taxable in all three cases. So this first line and the first two lines are absolutely clear, and they are very easily rememberable. Now, what we are left with the last line, guys. Last line is remittance, so it is not taxable in all the cases. This is also you are able to remember very easily. Now, the only thing which you need to remember is these 4 boxes. So ultimately, in this huge box, you have to remember only 4 boxes. That's it. Only 4 boxes you have to remember. All the other boxes you have already remembered. You are already done away with all the balance boxes. So very simple way of remembering it. Very simple way of portraying it. You will not actually you will not be confused if you remember this table well. All right, guys. So yes, this was the section on marriage of residential status with the types of income, and this marriage is leading to a definition of income, which income is taxable in hands of what kind of resident. Now, guys, we will see in the particular cases in particular chapters that if there are any exemptions on this income, if some income is not taxable, etc., etc. We'll see in those particular cases, which will be starting the 5 heads now. And yes, the next chapter which we are going to start is 5 heads. This chapter is residential status. It has ended now.